All right, everybody, welcome to Media Day at Quasar Markets Live. We're so excited to have you here today.
And hey, Steve, I don't hear you, buddy.
All right, so for those of you who are aware, Media Day here live in the air all day. So we're excited about this. Everybody's watching us today. I'm super excited. And of course, welcome to the show, Ron and Sana. I'm very happy to have you here. But we are going live literally all day today. So how are you, Ron? All right, I love this as we go live here today, but we are going to go live all day today. We got all kinds of guests today coming on the show, and look, we just have so much going on today that's super excited. So here we go, and we're going to have a few people on here today talking about the markets as we move forward. We will have charts on here. We will have all kinds of things. Andy, if you can help Ron. But we are literally moving the needle forward as we have lots and lots of people coming on here on a media day. And we're going to ask you very specifically to do us some favors, like, subscribe. We're pulling those up right now. I can see that right now. I'm going to pull this up everywhere we are. And hopefully we can get that taken care of here in a second. But man, what an absolutely gorgeous freaking day that we've got going on. All right, the markets here now with Dow down about 180 points here. The Nasdaq down about 1.17%, and continuing to move here. So if you have anything that you're interested in watching, love that too as well. And if you have any questions, you want to hit us up, let us know too as well. We will also be doing that as well. Ron and Sana hopefully will get his So hopefully he'll get his speakers going in, and we can hear us, and can turn his thing on. But we are super excited for you joining us, and I'm going to start to move the needle here as Ron will be part of Quasar Markets as we start to build out the media company.
Steve, I'm just going to pop out and pop back because I lost a little audio here. I'll be right back.
And we understand things happen on Media Day, so we love that. But we are really pushing the needle here. So I'm super excited about Media Day here as we hit the numbers. Hopefully you'll all get out there and like and repost and subscribe as we begin to explain what it is that we're doing here at Quasar Markets. And we'll be going to show you as the new platform comes on too as well. And here we go. Ron, can you hear me now?
Now I can, yeah.
I feel like it's a commercial, man. Can you hear me now? I love this. Hi, Jasmine. How are you as well? Ron, talk to us a little bit about your ideas of what you want to do here at Quasar Markets and the media side of this.
Well, I think that there are a lot of opportunities, obviously, to utilize artificial intelligence tools, predictive analytics, and a host of other tools that you've developed to enhance the coverage that we have of financial markets and kind of go beyond where some others have gone insofar as I think, more voices need to be heard, some that may not be as well recognized, but have, important insights as to how markets perform. And I think that's part of the mix. Hopefully there'll be a cast of characters joining us that you're both familiar with and may get to know over time that bring a lot to the party, if you will. So that's the broad kind of skeletal outlines of the plan, the details of which I'll save for another day.
Yeah, and when you look at markets today, Ron, and you look at
your audio again, I'm not quite sure what's going on here.
We gotta get a new machine, man. You gotta upgrade to the real world here.
I'm gonna go out and go back in. I know this is not really optimal, but
it's okay.
I'll be back. Hold on.
I love this. And look, one of the things that we're looking at in the markets is the new technology, right? And so I think that's part of what we're doing here is making sure that we do have the right technology, making sure that we do have the right platform for you as we begin to do this. So, all right, let's bring him back in as we're gonna make new computers. I don't know what we need to do here for him, but I'm super excited about this, Ron. What is it that you think is sometimes missing out of the markets in technology that you think we could bring the technology side of this?
Well, I think predictive analytics are important. I think right now in this environment, stepping back, in addition to obviously being an environment where a lot of things are being traded simultaneously, and we have new asset classes and new products and opportunities being developed. At the moment, it appears to me to be a macro world, and I think the focus on what's happening both domestically and around the world is extremely important. That we have to take into a lot more variables. I think right now and maybe going forward than we have any time in the recent past. I mean, we've had macro moments in, before, but I think what's really important here is that, a full understanding of what's happening in each and every market, and then more, globally from a 50,000 foot perspective, you have to kind of keep an eye on all of these things all the time. It's as my speech that I give this year is everything, everywhere, all at once. And I think that's, in a certain sense, what you built with Quasar Markets. You want to be everywhere, looking at everything all at once, because right now that's just the way the world works. We have those moments where they're short-lived. I think this is going to be a much longer period in which that's true. And I think that's incumbent upon anybody who's in our world to make sure that that's covered completely, so that, again, whether it's retail or institutional, they know what's going on and they know how to act accordingly.
Yeah, and I think one of the things that I think we're going to do it right now, I'm going to do it live for everybody right now. We're going to actually show you, if you haven't had a chance, we have a brand new website, folks. For those of you who don't know, quasarmarkets.com. I want to pull it up for everybody here so you can actually click on the link. The new website is live for everybody to see it now. The new platform is out there. And one of the things that we wanted to make sure is that you had access to everything. Intelligence. We brought education to the platform, spotlights, media pages. If we go live, you can watch it right from the platform, insights. And of course, I wanted to make this, Ron, so that everybody had a chance to have a free account. And keep it as cheap as we can.
Inexpensive.
Yes, inexpensive is best. Yeah, I love it. And obviously, we have an amazing team here. You can see Ron is now on the team here. We have a great big board. Look at this team, man. It's like, I think it's like 1,000 years of knowledge on this thing. An awesome board of people and of course an advisory board that's been around me to help me get this up and running, and of course around Ron too as well. I appreciate those. Already got our first like of the day. Thank you so much. I love that already. And you can also, thanks to our awesome producer behind the scenes, Andy Johnson here. Andy Johnson, you can actually also, for the first time, you can actually buy you're welcome, thank you, buy a shirt. You can buy a jacket here, merchandise here also through our and I'll show it to you. There it is for the first time. You can now go to the merchandise page, click on the page, and you can actually buy a jacket. You're going to get that Quasar Markets logo right there. Get that hat if you need to do that too as well. But we're going to go live all day, Ron, and we're going to talk about things all day today about what we're doing and building and creating. And I'm super excited about it. This is something that you and I have talked about, and I spent the last 2.5 years, and we built up the media side of this. So how exciting!
I have to fix something on my end, boss. So I'll be back shortly. Just hang tight. I know you got somebody to talk to in this hour, but there's something very strange going on. When we're in the 2-shot before, I hear you. As soon as I start talking, your audio disappears.
No problem. Maybe they don't want to hear you, Ron. I don't know.
I like that kind of semi-Italian approach to it, but I'll be right back.
I love it. We just had St. Patrick's Day. I love that side of things. Okay, so we will we'll catch him a little bit later here as he come back on here. But I wanted to show everything that was going on here on our side, and of course, want to appreciate you guys for out there for watching us. The numbers are coming up. Okay, thank you, Doc Spector. Appreciate that. Listen here. If you really want to give us the love today, do us a favor. Hit that repost on Twitter. Hit that like button. Hit that subscribe button. Go to quasarmarkets.com. Yes, we have a lot going on here, understandable, but make sure that you're hitting us up. Make sure that you are giving us all that love so that we feel it. We are going for it today, a new record. Now, I know we blew the record on finance, and I know we passed up the 1 million views, and let's go for 2 million views. Let's hit the 2 million view mark today as we start to grow this out. We have so much that we're very interested in building and doing here, and that is what I am super excited about doing. So if you have a module you want to build, I see it so much about, oh, I've got this module, oh, I've got this thing. Well, okay, that's great. But guess what? We already have that. Oh, well, we have AI. Guess what? We have that. Oh, well, we have an education platform. Guess what? We have that. We wanted to build an ecosystem around every bit of this, all of it, all the thinking behind it, every single bit of it. I wanted to build something for us, for everybody, for every company out there, from Bloomberg, CNBC, can put it in one place. Never been done before. In the world of finance, we're so used to seeing this world of finance that it's all about doing their own thing, very fragmented, very in a situation where everybody's doing their own thing. I don't want that. I want to be smarter. I want to understand everything that's going on without having to have 35,000 complicated programs running, which I already do. So I love this. And, when I look at the markets in general, we got them right. How are we getting them right? Because we are following it the right way with institutional people with us. We have the right people watching the markets, and I'm bringing in professionals. I'm not just because somebody has 1 million followers does not make them it makes them an amazing marketing person, but does not give them the ability. And I'm going to do the first guest today. He's already in. I don't know why he's wearing green. It's not Thursday or St. Patrick's Day, but he's doing it anyway. Let's bring him in, folks. You know him. You love him. I know I love him, except for he's a Cub fan. My friend, Scott Bauer. Scott, how are you, man?
What's going on, Steve?
We're looking at the new Quasar Markets. The new platform has been released. The new website's been released. It's been we call it a roller coaster around here. And you have been on my board, by the way. Scott Bauer is on board, member of Quasar Markets as well. I see the view behind you. I love it. But why did I do that? Why did I ask Scott? Yes, he's a friend. Why did I bring Scott on? Because he's professional. Why did I bring Scott on? Because he's been doing it for 40 years. Why, Scott? Because Scott knows education. Why, Scott? Because he already produces all of these things and building the ecosystem. So, Scott, first of all, from me as a CEO and founder here, I just want to say thank you so much for being on the board. Your knowledge, your bringing you on is a heartfelt for me as I possibly can give to you. And you supported us all the way from the very beginning.
And thank you, Steve. I mean, what we're all building here, you driving the bus, is something incredible. It's going to be useful. It is helpful. It's not just another, link for people to click. It is everything that anybody in finance, anybody in trading is going to want and going to need.
Yeah, and I'm going to bring him in too again as he comes back in. I think he's restarted everything. But our friend Scott, Ron Insana. Ron, talk to me a little bit about you have been on the floor for so long. You've had the microphone for so long in front of people. How important is it to have real knowledgeable people as opposed to the world that we see now in the trading world?
Well, I mean, it's extraordinarily important. I mean, the insights that you can glean from the folks who are speaking to the media, whether, it's cable television, whether it's in, streaming, or whether it's even, the print press, makes all the difference in the world. And the speed with which these days one can deliver information is critically important because, getting that edge that hasn't always been available to individual investors is going to be more important because you've got so many new technologies being developed. You've got so much information being thrown at people on a day-to-day basis that distilling it down to the stuff that really matters and that really affects individual markets and the economy, writ large is extraordinarily important. And it's a battle among all of us in the space to do it and do it well. It's not, listen, a lot of people do it well. My old employer, CNBC, does it quite well. MS Now, where I'm affiliated, does a lot of things quite well. What we're trying to do, I think, is both open the aperture and does anybody have a fire alarm going on or
Yeah, and it's so cool to watch all the things that we're building. And when I put this together, I said that very thing, right? That I want to put the people like you and Scott and the people that just are the professionals that have built out these things. And you helped build out FNN. I remember. We'll go back in history. I remember getting a satellite. My dad had to get a satellite dish. We didn't even have cable so we could watch.
Yeah.
Right.
That was when you did that, Ron. That was when I was literally a young buck, my first year or two on the floor of the SIBO is when FNN just, came to the forefront. And,
Well, yeah,
the vision there.
The
vision there was
crash
awesome.
The 1987 crash was a seminal moment for Financial News Network. I happened to be on the floor of the Chicago Board Options Exchange on October 19th, 1987. Met a lot of guys down there. Watched the market go down almost 23%. 507 points, and we were learning a lot. We were learning about options and derivatives, and we were trying to bring that information to people because it was unavailable to the retail public. By the same token, at that time, when you guys joke about using the satellite, we were in somewhere between 13 and 15 million American households. Our bosses in New York couldn't see the programming. We operated in those days out of Los Angeles. And so, we had to send them tapes of what we were doing.
Yeah.
Our salespeople had no idea what was on the air, so we'd give them tapes. I was on the air for 2 years. I had a sales guy walk in and introduce me to a prospective advertiser and ask me what I'd done. And I've been on the air for like 2 or 3 hours a day for the last 2 years. And so, those early days were critical in establishing the formats, securing the talent, and understanding how, as the late Ed Hart, who was our credit market reporter at the time, suggested, how we call the game and how we add color to it. And that was really, in many ways, the platform that we built out that carried over to CNBC, is that we understood that the thing had to be called in real time and that you also needed to add value while you were speaking.
Which also, if you go back to that time, and obviously so much has happened, right? But there was not the thirst for education. There was not the thirst globally for people to really understand derivatives, options at that point. And we all know how that has just completely expanded, completely blown up since then. And to think that was really that was really the forefront of what we are doing here right now.
Yeah,
it's pretty incredible.
What happened in 1987, which kind of shocked me, after the crash, later in the day. So I was in Chicago, so it was an hour earlier, and we went out and did man on the street interviews to talk to people about the fact that the Dow had fallen almost 23% in a single day. And we were talking to regular people, and they're like, "Yes, so what?" And that was an entirely institutional event. Retail wasn't exposed. We were still in that period where retail was disinvesting, which started in the late 1960s and didn't really change until we got into the early 1990s. And then individual investors started to pile into mutual funds, started to pay attention, started to watch FNN and CNBC ultimately. And so it was, we caught the moment, but it took, honestly, until about 1997 for things to really, really light up. And now, since then, audience interest has been extraordinarily high. And you've got, in some ways, directly or indirectly, half the country invested in equities and other, securities. And so there is this heavy interest in what's going on and wanting to know on a real-time basis.
And it's really now 24/7, right? Because markets globally are just so interconnected. So we know it's literally 24/7.
Well, with prediction markets coming, with some of the new players on the brokerage side, saying that they're going to go 23/7, the Nasdaq's going to go 23/7, have an hour to settle. That's going to be a very real thing. When I started, I used to joke, because when I started at Financial News Network, it was 10 to 4. Those were market hours. There were no pre-market hours. There was 15 minutes on the Pacific Coast after the close to trade a tape bomb if one was to occur. And that was it. And I used to joke about how this was as close to a social service job as you could get. You'd leave at 4:00 Eastern, walk out the door, not even think about the markets again until you walked in the next morning. And then they added 9:30 as the open. Then they started adding, before and after hours trading. Then they started adding the evening session. And now we're on the cusp of literally going 24/7 domestically, which is something that, obviously has not happened before. And that, is going to increase volumes. May increase volatility if the markets get really thin at night and you get some explosive piece of news. So we're going to have to stay on this all day, all night, through the middle of the night and into the morning.
I have always been an advocate, primarily because of earnings, because my entire career was down on the CBOE trading options, and obviously you have earnings cycles. I was always a major advocate of the option markets trading after hours as well. You could trade stock after hours if you caught a move in an earnings event. Much like let's look at FedEx, for instance. What happened yesterday? The stock traded up $40 to $390 plus. So if you're trading stock, you could trade that. You have option positions that you want to maybe work out of. You couldn't. You come in today, FedEx is unchanged basically. Yeah. And that's been 35, 40 years like that. And I have always been a big advocate of trying to get at least an extra hour, right? With after hours earnings releases, an extra hour to trade options. Because I think that could be a really huge game changer, but we're on the cusp of all of this.
Yeah, I don't think there's going to be anything that doesn't trade 24/7, in the next year or so. I think that's all coming. The exchanges have already suggested they're going to go there. And then you have some of the newer entrants, whether it's Robinhood or eToro or some of these others that are, expanding that time window rather dramatically. And the prediction markets go 24/7.
Yeah.
Right. Now, granted, I'm not a huge fan of the fact that they've embedded sports gambling into this, because I think it really affects and takes away from what we're really looking to tease out of those prediction markets, which is this going to happen? Is the Fed going to cut rates? Is the economy headed towards recession? Meaningful stuff, as opposed to, a bunch of teenagers and young kids doing parlays all day,
Exactly. You really take out the math, the probabilities, that we've all come to understand. Black-Scholes model, all that, that's kind of tossed out the window with that. I do also think, and I hope the SEC does this sooner rather than later, and FINRA, I know it's right there. Pattern day trading, issues that are out there that are maybe going to get changed very soon here. Boy, can you imagine if we do go to 23 or 24/7 trading, and there's no more PDT requirements for retail traders? I see that as a big benefit.
Yeah, it'd be interesting to see how zero date options occur, or how they trade in a 23/7 environment. We really expanded the window, right? I mean, so you're getting what we consider now current and post market activity that's going to go on all day. So do they settle at the 23rd hour of the day? Do they settle at 11 o'clock at night?
Exactly. Yeah. All I know is I don't sleep very well right now, and I can only imagine when that happens. It's going to be a tough one.
It'll be interesting to see how and then all the major houses are going to have to staff up, right? I mean, it might
Absolutely.
be staffs, but they still have to do it, and they're going to have people manning the desks, assuming that model holds through a 23 or 24/7 world, because some of that's going to have to get automated. One would expect.
And I love this chat you guys are having, and in the back. I have David Russell from TradeStation, the global head of market strategy for the whole company. So, David, I'm gonna bring David in to talk about that. I think this is great. Bring him in, David Russell. How are you, man?
Hey, it's good to talk to you guys.
Hey, let me just say before David breaks in here, David, it's great to meet you. I don't think I've ever been on a quad box before. This is fantastic.
You will recall at one point in our history, we did the Deca box. 10 people at once.
Well, back during the financial crisis at CNBC?
Yeah, it was around that time. Yeah.
That's awesome.
And so the comments were being made, David, and welcome to the show, by the way, David. I'm excited to tell everybody here at Quasar Markets. We are partnered with TradeStation. TradeStation's platform is in Quasar Markets, and the new platform is out. And David, I again, from the bottom of our hearts here at Quasar Markets, thank you for partnering with us. I think it's great. But talk to us a little bit about the technology and how things have changed over the last 5 to 10 years. I think they were just talking about 24/7 trading and talking about technology as we know it today. Tell us a little bit about TradeStation, what you guys are doing, and then the next level of all this.
Well, I think one huge thing is the API kind of technology, and that's one of the things that is going to be coming between our companies, which we're very excited about. I think it gives people just an opportunity to really kind of separate the actual ability to have trades executed versus the way they want to approach the market and actually set up their trades. And I think that the API kind of functionality is in its infancy, and I think it's great that we're a leader in it. And I view it as something that I'm very excited about myself, and it's going to have all kinds of implications, I think, for customers going into the future. And the other one to me, I'd say, just is the rise of micros. I mean, the ability to be scaling into different kinds of futures and the sizing, it's really made futures more accessible to a wide set of people. And so for me, those are the really big things I see. I mean, there's always like new stocks and things, but when I look at the actual structure, the way that I see the industry changing, those are like the two big kind of standouts to me.
And David, isn't that all a response really to what retail wanted over the years? So the exchanges have looked at what do people want, what is the demand out there, and that's why they keep coming up with these new products.
Absolutely. And I think that at the end of the day, there's no reason why just because you have a relationship with a brokerage, you need to be using that platform per se. There's a lot of reasons why people might choose a certain kind of, institution. And then the platform, I mean, we have, an award-winning platform, but there are certain places where people find they want to be using other interfaces to actually connect with their funds. And I think that that's something where there's just no reason that it has to be one thing rigidly or the other. And in terms of micros, I mean, absolutely, because as especially as overall prices go higher and the margin requirement goes higher, it simply has there's a lot to be filled there. But I think also, in the background of all of this, we have been in a golden age of trading. I mean, it started. There's so many spots where it started. You go back to the beginning of the century with decimalization, and then you go to other things when we start to see, coming out of COVID, the number of people engaging. We've just seen more and more engagement of active traders in the market, and that means basically that accessibility is important, and these contracts and things like micros simply make it easier to do that. So, and I think it's really important because when you look at the market right now, I kind of have a paradigm I look at in the kind of more bearish markets. You often see things that are more correlated, more focused on indexes, less focused on individual names. And I think in the coming weeks and months, we're in an environment which is not a clean up trend anymore. And things like futures are more useful, especially, I mean, it's kind of amazing. We haven't had that many big overnight events that have actually impacted the market, but there will be some when something happens, or there very well could be, don't want to predict anything, but there could easily be overnight events that impact S&P futures, oil futures, gold futures. And I think it's so important to really be pivoting back now to futures. And that's really what TradeStation's DNA is in the beginning. If you go back to the beginning of TradeStation, I mean, we started in many ways with people being able to do algorithmic trading on futures. It's very much in TradeStation's DNA. We've been in a stock picking environment of these big mega caps and all these names for years now, but we can get back to, I think, that focus on futures, and it seems like that environment is really coming into place now.
Yeah, and the thing that worries me the most, and you hinted at it, David, is correlations going to one. And for the non-professional, that means that everything trades in the same direction at the same time. Usually that's down, and it means that there's a market event underway. And in my forecasting window, to the extent that I have a view beyond the next 3 months, I mean, I would say in the next 6-9 months, we're going to have an event of some kind, whether it's, an extension of this war, whether it's something that happens in private credit or some other, adverse development like that. We'll see one of those moments. I mean, Lloyd Blankfein, the former CEO of Goldman, talked about that in this book, Shades of 2008. I don't think it's quite that big, but something's going to come along and shake the tree. We've been in a protracted bull market, and as you say, we've been focused on the Mag 7, or we've been trading individual stocks with a great deal of success, and that simply doesn't last forever.
No,
define it, Ron, if you can. Give us what is exactly that you're worried about, because I'm getting nervous now watching you.
Look, I mean, first of all, I think the war thing, as it were, may not be to a certain extent at the moment as big a deal for us because we're a little less energy dependent. We're more energy efficient than we have been during prior oil shocks. It's still pushing up inflation. It's still confusing the Federal Reserve. It's probably putting off rate cuts. And what that could mean, and particularly if the Fed were to have to raise rates later in the year because tariffs and oil inflation simply don't go away and raise inflation expectations, that's going to put a crimp in a lot of these private markets that, are not currently valued properly. And you could see a blow up in some, big name that's gotten a lot of money, through the private credit channel. And then it's not a wait. I mean, I don't think it's a, global systemic financial risk. It's maybe more like LTCM, or it's more like the Asian currency crisis, where you get, a big down that nobody's expecting. It happens really fast and, really meaningfully shakes the tree. and shakes confidence to an extent, and maybe has a knock-on effect on the economy. And so that's the type of thing that's keeping me up at night right now, is that there's, I feel like there's a rabbit in the woodpile, in the next 6-9 months. It's going to kind of jump out and surprise us.
And Ron, everything you said from the economic side, absolutely 100%. If you go back and think about the last big shock, and let's just say it was the 08.
Yeah, you got to skip the pandemic because it wasn't financial.
Let's go back then and think of the difference in the retail trade, the retail sentiment from 2008 to right now. So now, God forbid something was to happen on, like that, or, hopefully not on a scale that large. But now think of how many more retail trades come through the system. And you talk about confidence being shaken. You could easily see the retail markets actually coming in and pushing things because of, concern, being scared, whatever it is. You can easily see that really, kind of accelerating to the downside, and not just on the big institutional side.
And Scott, correct me if I'm wrong, but the dollar value of options trading exceeds that of the underlying equities, right?
It does. It absolutely does.
And so where that takes us is an open question, because there's also just by definition a little more leverage in the option markets than there is in the equity market, so that could exacerbate a move.
For sure. Which, and again, none of us here are saying any of this is going to happen, but my mantra is that I have lived by, traded by for 35 years. Teach everybody, you buy when you can, not when you have to. And that means buying your insurance when the market gives it to you, when volatility is low, when you don't need it, and not when the house is on fire.
Yeah. And David, you're the place where we do that.
Exactly. And I think when we look at this year, what's interesting is, I think we started this year with some really big assumptions, and they were bullish, and it made sense to kind of, see continuation. But I think what's interesting is we've seen some of those assumptions slowly disappear. So, I mean, first of all was first 4 rate cuts, then 2 rate cuts, now 1 rate hike, maybe.
Yeah.
That's a huge change in models if you're trying to model where the market should be. But secondly, we were expecting coming to this year significant double-digit earnings growth pretty much every quarter. Now, those numbers have not been marked down yet. But I think regardless of what happens to the U.S. economy, when you get overseas earnings and other things like that, it's difficult, in my view, to expect that those rosy expectations are going to remain in effect. So we entered this year with high valuations, expecting a really great macro environment, and now those things seem to be, kind of shifting. And to me, that's really what I kind of see. And it's like this kind of slow, almost subversive degrading of conditions. Instead of a single massive event, it's like this continuous decay of a bullish thesis. And I don't know, that's just how I kind of view it. And it's different, but we do have something of a real topping pattern. I think if you look at the S&P here, I mean, it reminds me a little bit of 07. And I'm not going to say that in terms of the subprime, because that was a single asset class that could blow up. But what's interesting about 07 was the market was topping as payrolls flatlined. And that's what we're seeing now. And we're also seeing, and then energy ran up. I mean, they're totally different reasons, but still those things happen. And so I think we're in a similar sort of environment now. I think you don't have as much leverage. It can all come together in one cataclysmic event, but it's more of this continuous one, $50 million loan gets written off here. Another, this one here, this one, it's a slow boom, boom, boom. And that's what I think makes this environment different, but there's also the similarities.
Yeah, and David, let me ask this, and I've been asked this quite a bit. I was just at SIBO the other day, and a big chat about the traders themselves and the gambling aspect of this, and the Kalshi world and the poly market world. I was listening to Kalshi's CEO talking about, hey, we got a license now. We can do whatever we want. That gambling. I mean, for those of us like you and me and Ron, we this makes us sick to our stomach, because we know people are going to lose money left and right, especially days like today, like March Madness. What is it exactly, this dopamine? Do they feel like, are you seeing the more into the Kalshi feel and poly market? And you don't see it on your platform, right?
No, we haven't been involved with that with that a whole lot, and it's something I've tried to kind of understand, and I just don't know how much to trust it. I've noticed that I haven't looked at it that recently, but I found it strange that we didn't see the volumes increasing in certain areas that there should be. Like right before the Iran war, it seemed like there was less activity in some of these betting things, and I don't really know what to make of it, to be honest. I think it's relatively new of a market, and the other thing that concerns me about it is I feel that people can place smaller bets in something like Kalsi, create an impression that then they can actually manipulate in the deeper real market. So I just don't know what to think of it. I haven't studied enough.
What's interesting there too is right at the moment anyway, insider trading is not illegal in these gambling markets, or if you will, these exchanges as they're being described by the Commodity Futures Trading Commission. That 71 minutes before we attacked Iran with Israel, someone put down an $85,000 bet and made $550,000. And by the way, $500 million was put down in the days prior to the attack on Iran. So it wasn't really that small. And the other thing is, like, what things we don't know. Was it somebody inside the government with classified information who made that bet? You know, now granted, that's an important signal for everybody because that's real information. But profiting off that real information is what we're trained not to do, right? I mean, so there are a lot of questions that arise out of the emergence of these markets, whether it's Kalshi. Polymarket claims to be an exchange and is trying to get approved in the United States, but each and every one of these platforms is adding sports betting to it, including some of the brokerage exchanges that are relatively new. And you got young kids. I've got Gen Z kids who have dabbled in this stuff, kind of messed around in it. And I also know some young kids that age who are getting addicted to it. And it's the mindset we don't want for investing and trading. It's not an addiction play. It's not the dopamine hit that Steve was talking about. It's trying to make money and enhance your financial prospects, with some degree of discipline.
And I was listening to Apple News yesterday. There was an article about how these people were pressuring a Washington Post reporter to change their article. Wow, Ron, to me, David, that is just asinine. I cannot believe that was happening. And it was because they had $1 million bet on whether or not who they were going to attack in Iran, and pressuring the fifth seed here is bothering me a little bit.
Well, look, I mean, in my career, I've had a lot of sources who are very big name people. No one ever called me and asked me to report differently on something, even if I knew what their position was, right? I mean, and it could have been a large position. It could have been something meaningful. And there, to a person, and I'm talking about really big hedge fund guys, right? They wouldn't call, and there were some people in that business who tried to use reporters to get things to move. The real guys, the really big guys who were important, not once did that happen to me in my career of talking to these folks. And that's the danger when, this thing becomes so diffuse, and then you've got people who aren't really players in the business, but are trying to make a quick buck. They're going to do stuff like that. And it's going to be problematic over time, unless, there's some regulatory scrutiny of the way in which these things operate.
And, at the end of the day, you look at the system we have, it was mostly really put into place in the 1930s. And, you can say whatever you want about FDR, but he brought in Wall Street people who created the SEC and the regulatory framework we have. Who?
Joe Kennedy.
Yeah. And he trusted the people. And it was actually, I think, a great innovation. There's a reason why the United States has the most trusted capital markets in the world. And, the fact is that when you go into the world of things that are not as well regulated, you're going to have inevitably manipulation. You're going to have all kinds of things that are, problematic like this. And so for me, I'm very much always just focused on public markets. And that's one thing that I just do. And that's one thing I think it's interesting. In some ways, you might even be able to draw parallels between what's happening in private credit and what's been happening with the betting stuff, because these are emergent new markets and they're not regulated. And the transparency is not massively clear. And I think at the end of the day, it's like it's all the more reason to focus on things like trading futures and the big products that we have at something like TradeStation, because ultimately, this chart that I see is the same chart that the hedge fund sees. It's the same charts that the insiders see, and that's not necessarily true about some of these other cases you're talking about.
Yeah, well, it's interesting when you bring up FDR and Joe Kennedy, coming in to take over the SEC, the first version of it. He brought in people who knew how to cheat. they knew where the holes were in the system, and they were able to establish a framework for regulation that prohibited that type of stuff. Bear raids in the 1920s, on individual stocks, painting the tape, all that type of thing that used to set up, to the extent retail investors were involved, set up retail investors for failure. And so they came in and created an environment which eliminated a lot of that. Now, granted, we also had a 3-year horrific 90% downdraft in the Dow. We had a depression. We had a world war. And so maybe individuals were not quite as exposed later or involved later than they were in the 20s. But, it did establish that framework. We want free and fair markets, but we want guardrails around them so that they can be trusted.
Yeah, if you do me a quick one here, David, let's talk about TradeStation. Tell me a little bit about what TradeStation does. And I have the website up here, so if you kind of your products and all the things you guys are doing.
All right, yeah. Well, TradeStation, we're brokers that focus on futures, stocks, and options. And one of the things that we have is we have a platform. It's this very sophisticated platform that's been around for a long time. It allows people to automate, especially futures trading. That's kind of our original kind of legacy product. But then at the same time, what we've done recently is we've been adding, these API partners like you guys can be joining in with, which allows people to access their accounts via these outside relationships that like, for example, I believe we're going to be having relatively soon. So I think the thing is it means that on one hand, you can access your account externally, and you can then jump in and access one of the most legendary and useful platforms all in kind of in one spot. So what I do is, if you go up to the top there, actually scroll down a little. I forgot the blog post at the bottom. I have blog posts. I do the Market Insights blog. If you scroll down a little, you can see some of the blog posts. Those right there. Some of those images there. Those are the blog posts I do. I do webinars on Monday afternoon, and I talk about the overall kind of condition, state of the market, and I'm trying to think of other things that really kind of distinguish us. I mean, I think at the end of the day, it's one of these things that we really focus on people who love to trade. And for me, in many ways, it's so much of the retail world is just about, it has this underlying implicit bullishness. And we don't have anything like that. We're perfectly willing to kind of embrace all sides of the market, all the kind of directions I think are out there. And I think ultimately with TradeStation, you get a company that's dedicated to innovation. We have a new integration where you can access your account with Claude Pro. You can literally have Claude create option strategies for you using what's called an MCP connection. It's a relatively new thing in the world of AI, when the AI can access certain resources for certain kinds of companies it has connections with. So, we are just trying to lead in terms of this kind of services that really matter to born traders and people who love to trade.
Yeah, and I'm super excited about the partnership with TradeStation. I was in Tokyo and I had a chance to talk to the big dog at Monex, and he said something very interesting to me, Dave, because we no longer just want to bring people to us. We need to go where people are, and that meant a lot to me when we talked about it and the partnership that we have at TradeStation and the machine coming on. Let me ask you this. What do you guys have coming down the pipe? I think everybody wants to know about that.
Well, new things coming out. We've recently launched a new platform called TitanX, which is an update of our of an old web trading platform. And I think in terms of new things coming, as I really think about it, I mean, we have partners like Quasar Markets. And I think aside from that, I'm trying to really think of, I mean, we are going to be expanding also our MCP relationship. I believe that will also work in the future with other AIs. And at this point, we're just looking to, I think, continue focusing on these areas like the API relationships and just our platform. So I'm not sure if there's anything really dramatic coming out. I think it's just a lot of ongoing incremental kind of investment in our customers.
I love it. I love it. I'm going to get us out. I'm going to take off the sheet here and bring Ron back in here because I think Ron's he's ready to go again, my man.
No, I'm just trying to keep an eye on the market. Supermicro is down 28% because its co-founder and some of his colleagues circumvented U.S. Restrictions on shipping certain NVIDIA H200 chips to China. And what they did was put them in boxes that were supposed to be their product.
Dryers.
No, their product. Their super micro computer products. And they got friendly inspectors in China, and they sent billions of dollars illegally of NVIDIA chips to China, which have national security implications and technology implications. And so I just was glancing at the screen, and stock's down 28% now that they've been effectively charged by the DOJ for violating all these acts, which is, to a certain extent, almost an act of espionage. And so corporate espionage for sure, if not, something more broad. And, it's this type of thing every day, right? I mean, you have to be so attuned to what's going on. And if you have a position in a company like that, which has been one of the, or at least was earlier this year, one of the big high flyers, is just getting absolutely crushed and has been now since late yesterday, now done at 28.25%. So, it's keeping you, this is an environment where your head's on a swivel all day long.
And you think about the criminality of all this stuff. You would think the days of criminality like this are over. That we just have so much technology and so much security. But how much security can we have? And then we see these things happening, right? Like what do we need to do to have more Cloudflare and more problems? I mean, David, do you have problems on your platform with these kind of things, unscrupulous acts?
Not that I'm aware of. I don't really. Yeah, I mean, for me, we have a great team of people who watch all those things, and I'm not really aware of anything. I mean, we're absolutely committed to following all the rules. And I can say that the one thing though is I don't think the days of criminality ever end. I think this is just part of the way things are, and it's one of the reasons why we're always so focused on not doing things like that. But I don't really know anything I could say about that. I do think, though, that when you look at what's happening with Supermicro, it's kind of like they got us in many ways to the AI trade. They were one of the first ones. And when I look at this market now, I think what's really interesting is we had this big value outperformance for a while, 3 to 6 months, and that kind of faded about a month ago. And it looked like we were going to go back to big tech leadership. There were some real signs of relative strength in the large cap tech. And in the last few weeks, that's really come apart. And I think what's interesting now is, in my sense here, we're kind of at a spot where if you look at Meta, you look at Microsoft, Tesla breaking down on the 200-day today. I think now we're in a spot where we're kind of losing that aspect of the market. And I think that, to me, is actually something that really stands out. And at the end of the day, Micron, in some ways, that might be the last sell the news event. And I think now we have GTC behind us. Now we have the Micron behind us. And what worries me now is that now what do we have ahead of us? Well, we have ground invasion of Iran. So,
and you know what, by the way, which not a lot of people think about this, and it was something I was looking at the other day. So in Taiwan, the Taiwan Semiconductor, right, they're extremely reliant on Middle East energy and the amount of power consumption it takes to create the very high-end chips that they produce, and they control 90% of the world's most advanced chips. When you look at places, like South Korea and Taiwan, that have, that are really energy intensive when it comes to computer, components and what have you, that is a big disruption. And that might be, at least in part, what's in the back of some people's minds, is if this thing goes on for a period of time, that bet gets gummed up, right? I mean, you need the power, you need the compute, you need to be able to buy all that stuff. And if it suddenly becomes less available, all your assumptions about earnings, sales, and what have you change pretty dramatically. And so that might be a small item. No, it's not a small item, but it might be an item that people are, holding on to. But it's a big disruption. It's not just that energy prices are going higher. It's you're disrupting supply chains once again, not maybe to the extent that we did during the pandemic, but something similar that kind of really screws up everybody's forecast.
Yep, and the helium for chip making. And I think ultimately, we have to remember that AI is a CapEx cycle. And if we look at a period of slower economic growth, that is not favorable for CapEx. And so I think that's a part of it. And then also just the wealth destruction. And my biggest concern about what's happening now in the Middle East is that, first of all, it takes a long time to rebuild these energy facilities. People have been building this LNG since the 90s.
So
and the other thing is,
3 to 5 years to rebuild the facility that they lost. One of the biggest LNG facilities, and it is the biggest LNG facility in the world.
And there's been an assumption of stability. And what I really see is like, I don't know what kind of real diplomatic or legal stability we're going to have coming out of this. And the fact is that just the threat that at some point in the future, there could be missile attacks on Dubai or something. I mean, it becomes much more difficult to be shelling out large amounts of money on the capex that's going to be necessary to fix these things. So from my view, this does certain things that undermines a lot of assumptions. Like I said before, we've had a lot of good assumptions, and a lot of these assumptions that things have been built on have been kind of crumbling. And this to me could be another.
Tom Friedman wrote about this in the New York Times this morning. He was talking about, look, if you were looking for a short war, this was not the one to pick, because we just, again, you can game this out in a wide variety of ways. The U.S. and Israel have, military superiority, and are on par with no one, right? We were able to knock out just about everything that they wanted to knock out, whether it was missile launch capabilities, ballistic missile development capabilities, nuclear enrichment capabilities. The question after that, though, is what do you do? I mean, the hardliners are still there. The Iranian Revolutionary Guard Corps still intact. I mean, they may be degraded, but it doesn't mean that we now have a democratic Iran that's going to be friendly to the West. In fact, as many people have said, Iran has a say in how this war ends, when it ends, if it ends. They could continue to hit energy installations. They can continue to fire rockets into Dubai, which has been, the playground for the entire Middle East that expats have gravitated towards because it's tax friendly. There's a whole host of advantages to go there to raise money. They keep hitting apartment complexes and other, civilian infrastructure. That changes the arc of their future growth. It changes the way in which we deal with the Middle East. And it could be an open-ended conflict that, may not end in 2, 3, 4, or 5 weeks.
No, I know you hit the nail on the head. And I think at the end of the day, the geography, when you really study it, I mean, the Persian Plateau or whatever it's called, Iran geographically dominates that region. And it's hard to see how, that does end really quickly. If, it seems there's a lot of potential for it to drag on. And so I agree. And that's what I mean. So, if you roll the clock back like 5 or 6 years or even 2 or 3 years, we had free trade that's gone away to a certain extent. You had certain things like a steady inflow of immigrants to the country that were driving a degree of population, labor force growth. That's gone away. Now we have this idea of the Middle East providing oil and helium and fertilizer. Maybe that's going away. So all these are like kind of assumptions that you don't even think about until suddenly maybe they're not as clear cut anymore and you can't rely on them as much. And I think that is really what kind of, to me, is most worrisome about this environment, is that a lot of the things that long-term growth models were based on, I think, are not as clear.
Well, they're based on status quo, right? I mean, and you look at even, impoverished nations, and we're going into the planting season where fertilizer, nitrogen, urea, and a host, you can't make ammonia without some of these components that goes into fertilizer. And, if you destabilize certain parts of the world because food becomes more scarce, those are, tipping points for a lot of societies. And, granted, even our own farmers are struggling to get fertilizer into the United States. I think 50% of it travels through the Strait of Hormuz, at least the components of it.
Yeah.
That's a pretty big deal when you're coming up on the spring planting season and that stuff's not available. It affects big economies. It affects small economies. And no one's really ready for, on top of the tariffs, an agricultural shock that's meaningful. That's the type of thing, too, that just kind of comes out of the blue that nobody gamed out when this started. And that's something that, Treasury Secretary Bessent yesterday said they're going to make some announcements about what to do with respect to agriculture. God knows we don't have a strategic fertilizer reserve. There's no SFR, that I'm aware of. And so I don't know exactly how they solve for that problem.
No, I agree. And I think if you look at what that actually means as well for, for farm credit. I mean, to me, I just view this I agree with you about the credit thing. We have this they lost a lot of the soybean exports to Asia, to China, and now you throw this on top of it. We have a lot of things in this country where if interest rates were to go down and inflation went down, a lot of things could have been really great in 26, 27, 28. We could have refinanced debt. We could have had a huge rally in regional banks, which I think a lot of people were looking for, the deregulation. That was supposed to be a great thing. We had all these things that were supposed to happen. And I think when you throw in no rate cuts or rate hikes, when you throw in this uncertainty, suddenly those awesome things that we had kind of baked in the cake long term, all of them look a lot less certain. I think that's really, to me, what the worry is, because, I was very bulled up on regional banks about 6 months ago. I thought we were going to have a huge rally in small caps. I thought all these things were lined up, but it was all predicated upon inflation coming down and rates coming down. So it's just not happening.
Well, here's on the flip side of that is the thing that bothers me about the banking system is they just successfully lobbied the administration to lower, capital requirements at a time when you probably need more capital if there's going to be a problem in the private credit arena.
Yeah.
Banks extend credit lines to these private credit firms. And from what I've been told by people involved in transactions, those credit lines are collateralized by the loans that the private credit firms are making. So you've got a daisy chain that could affect banks. And if you're lowering their capital requirements, they're suddenly in this position where they need more capital because they're losing money on these, transactions. And it's just this, full-scale deregulatory environment doesn't take into account the amount of risk we're now facing.
I agree.
Yeah, and you see all of this going on. Do you think that the retail understands all we're talking about?
Some of it, not all of it.
Okay.
They understand. If you look at the redemption requests across, the private credit sector, they know something's not right. They're asking for their money back because the vehicles are not performing as advertised. So, they got a whiff that something's wrong. What we don't know and what we can't know, since these are marked privately, is what are the real values of the loans that are in these portfolios. John Zito at Apollo was presumably talking at rather ironically, a private conference and suggested that some of the software loans that have been made in the sector are 30 to 40 cents on the dollar. Are they being marked there? We have no idea.
I think a lot of people, the big bad bully word of stagflation has been running around now for so long. And I've been saying it for 6 months. And now all of a sudden here it is on our doorstep. And yet it seemed to me that yesterday or Wednesday, Powell just kind of poo-pooed it. Oh, well, no big deal. And it became more political than anything, Ron and David. I mean, and yet look here, the market's down 300 points today.
Yeah. So look, so if you're going to compare it to the 1970s stagflation, it's not the same thing, right?
I agree.
Yeah. So if you go from 66 to 80, 81, right, we peaked at 11% unemployment, 13% inflation, and 20% interest rates, right? That's not what's happening here, except that inflation stays above target, the labor market's weakening, growth is pegged at about 2.5%, which, negates the stagflation argument because you usually throw a recession into the mix. But if you do see the U.S. start sliding into a recession because of demand destruction, as prices, and particularly energy prices, remain higher, go higher, then you could talk about what I've been talking about, you've been talking about. It's mini stagflation. It's enough to drive everybody nuts. The grocery costs are up, the childcare costs are up, health insurance, car insurance, home insurance, and then you have a labor market that's not growing at all. And might weaken from here. So it's still in a certain sense the worst of all worlds. It's not the 70s and the early 80s, but it's also not the 90s where there was broad shared prosperity that everybody got jacked up about.
But David, it seems like with your platform, it seems like retail didn't care during COVID. The real world should have fallen apart, and they bought stock during that time. They have a different philosophy than the institutions. The institutions have a different philosophy than the retail, but are they starting to blend a little bit together?
I don't know if I can quantitatively measure that in any clear way. I think there has been a cohort of people that, for a lot of people during COVID, obviously, to a certain extent, it was good for them financially. They actually got a lot of, they got different kinds of stimulus. They sat home. They didn't have to spend as much money. They had more opportunity to trade and stuff. And we were in the midst of a great growth cycle. It was still the era of the cloud computing and the SaaS model that was on fire. So there was a lot of good momentum, I think, at that time. So I think that was a very different situation. And so, for me,
Dave Portnoy, who couldn't bet on sports, encouraging every 20-something to get out there and trade stocks and go nuts. I think some of those voices like his had a pretty pronounced impact on retail because you're sitting at home, you got nothing to do, you can't gamble on sports. Why not take a flyer on stocks?
And I think if you look at the stagflation point, which Ron made, we're like nowhere close to the levels. But the thing is, in the 70s, we had a huge surge of baby boomers who were demographically entering the economy, and we had like much less debt. So if we had 11% inflation now with an aging demographic and the debt levels we have, I mean, we'd be in serious trouble.
And you know what? Let's do this, David. Let's bring in John Kilduff while I have you here. Okay. I love this. John Kilduff from Again Capital. John, looks like your screen is off there. Are you on your phone?
It was on. I'm trying to work through these technical issues. I apologize for that.
Ron had those this morning too. Don't worry. Don't worry.
Kilduff's, eyeball deep in oil. So this is. He's buffering at the moment.
I see. And the days of technology are just really changing here. Okay, so let's get right to it. Back to it. Let's talk about David Russell here, the global head of strategy for TradeStation. I mean, so exciting that we have you on here, David. Talking about TradeStation and what you guys have brought. I mean, 40 plus years of a platform. Talk to us a little bit about TitanX.
Well, TitanX is it's basically it has a few really interesting innovations in it. It sounds small, but it's a big improvement, which is the order ticket functionality. It's a single kind of integrated order ticket that allows people to trade essentially stocks, options, and futures in a single interface. And a lot of other things have been kind of fragmented in the past. So one of the interesting things off the bat is it gets a lot easier to manage a lot of the positions and entries and things that are in it. Some of the other things about TitanX, it simply has a kind of new, more updated charting model. And I think about some of the other innovations in it. Essentially, it makes it easier to trade options, which I think is really key. I mean, it has a lot of things that it helps you kind of pre-build strategies ahead of time. And that is something that before, in some ways, TradeStation has had a little bit of a fragmented experience when we have our desktop, which works one way, and the things like the mobile work a different way. But with TitanX, it's a single kind of way to approach options trading. And so I think that is something which is big improvement. And something that people have been really kind of focused on. It allows you to quickly build complex strategies in a way that wasn't as easy before. So those are two things that really jump out to me right now. I really like the ability that whenever you're looking at anything, you easily can hit a button and the trading panel comes up on the side to manage positions. It's a lot more intuitive. And so I think those are the main things that stand out to me about it.
Yeah, and I love it. TradeStation's been a part of the trading world for so long, and I love it. And I'm glad you guys are a partner with us too, and super, super, super excited. All right, David, thank you so much for joining Quasar Markets Live. I'm looking forward to having you again. I'll have Andrew reach out to you and get you booked up again, but we'll bring John in here now. I think he's finally got his computer running and phone here. John, how are you, my man?
I am well. How are you guys doing?
I'm good. I'll bring Ron back in here too. And we just had David in here talking about the markets and Ron talking about the markets here and where we are. And John, talk to us a little bit. John's over at Again Capital. Love it. And talk to us a little bit. What are your clients seeing? What are you seeing in the markets? What are the thought process behind all this today?
Well, I mean, obviously, from my end of the world, the oil market and the Strait of Hormuz is the biggest thing. I mean, everyone's now, of course, a military expert and a navigational expert and a topography expert about what's going on and what's going to be needed to get that strait open. I'll say the biggest takeaway for me right now is that the oil market's doing a pretty good job trying to look through this, as they say, in terms of that this won't be lasting and that this won't be a prolonged episode. What we're hearing right now from the military folks, and this was a bit of a learning experience for us all, because, of course, when you're sitting there as an energy person for literally decades now, you would think the Strait of Hormuz would be the top military priority if you're going to take on Iran, right? But apparently it wasn't. And we're not military experts, so it makes sense to me. But the securing of the strait apparently was always part of the second sort of phase, the 3 to 4 to 5 week period. So, you're hearing things about troop movements now. It's hard to imagine not having some kind of defense or military presence on the shoreline, at least on Iran's side of the strait. But again, we'll see. And but for now, here's the thing. For me, if this isn't resolved here come the first week of April, then that's when the real pain is going to start to really register.
Explain why you say that. So first week of April basically takes us to about almost 5 weeks, which was the original, forecast for how long this was going to take, according to both President Trump and Prime Minister Netanyahu. What happens at the 5 week point? And granted, I mean, listen, we have military, we have air superiority, we have to a certain extent military control, but we can't control what Iran's going to do going forward. And then surging 5,000, Marines, as it were, and other special forces into the strait. From what I've read, taking that strait, taking over the cargo oil island platform would require more than 50,000 troops to secure that. So at that fulcrum point, 5 weeks from now, if we're battling it out Iwo Jima style here, what happens in the oil markets?
Right, and so we're using that time frame, Ron, because all the measures that have been announced recently, the SPR reserves from around the world, 400 million barrels, these efforts by the Saudis and UAE to divert their supplies out to via different pipelines, especially for the Saudis going to the Red Sea, and these other measures and the military campaign as it stands, the benefit of the doubt for all of those things runs out. I think by the time you get to that first week of April, and that includes the sanctions lifting off of Venezuela, Russia, and potentially these lifting of sanctions on the floating storage that Iran has out there in their various ships. I think the patience of the oil market, the sort of trust, or like I said, the benefit of the doubt goes out the window, and we just reprice higher and higher and higher, because by then you'll be hearing about real shortages in bigger countries like Japan already, South Korea. We're already hearing it in Vietnam, Malaysia, some of the lesser Asian entities out there. So I think that's when the chickens come home to roost, if I could use a technical term.
Yeah, yeah, exactly. But listen, so the release of the SPR, desanctioning Russia and Iran, you're really talking about, a couple weeks worth of supply. You're really, if indeed it's going to be used. I mean, Iran's going to send the oil to China, as they have been now, if indeed their tankers are allowed to, depart. It doesn't really change the overall calculus. There's some extra oil coming to fill the gap that we have at the moment, but we're short at least 10 million barrels a day coming out of the strait, if not more. And so it seems to me that temporary fix, it almost looks like the oil markets look through that almost as much as they've presumed that the war would be short, because prices haven't exactly collapsed on any of the news headlines that talk about, the temporary increase in supplies.
No, but we're not materially higher either.
Right.
So that's sort of the thing for me. I'm a little surprised we're not a lot higher. But again, all of these measures that have been announced, I mean, they are throwing everything in the kitchen sink at trying to keep the front of this market in check price-wise to the best degree they can. And that's what we're seeing. But I think we're going to run out of time on that.
Yeah, let me get you to explain that. So the front of the market, when you look at the, if you will, the curve of oil prices, what people are paying today versus what the futures market expect, 6, 9, 12 months from now, prices are higher today, or appear to be higher today, than the oil market is pricing in the future, something that's called in technical terms backwardation. That suggests that the oil market thinks this will be over sooner rather than later. Could they be making a mistake?
Yeah, to a degree. Interestingly, a backwardated market in the commodity sphere is bullish because, like you just pointed out, the prompt barrels, the supply right now is seen as much more dear than these later months because, as you're pointing out, we do expect or hope that this situation will be resolved and the supply will be back on the market. However, those prices in the back have crept up. We're pretty much above $70 a barrel throughout. What you're seeing as well is that as much as we go up to 120, or we did a couple of weeks ago there now, we're falling back to successively higher levels. So we're installing higher lows here as we go forward, as also part of the, which should be, unfortunately, just the repricing to the upside as we go forward on a daily basis here. Because you're absolutely right. The 10 million barrel per day deficit that we have now coming out of the Strait, it's massive.
Yeah.
Massive. I mean,
it's 10% of the world's consumption.
Exactly. And we were talking about glut at the end of last year, and the metrics there were that we were going to have an oversupply of 2 to 4 million barrels. Some other folks, there were outliers who had a lot higher number on that, but that was pretending, $50, $40, $30, $35 type oil prices, right now, which of course has not materialized. But that, just to give you some sort of perspective on what a over under of a couple of million barrels a day surplus deficit, kind of impacts the market.
Yeah, let me ask you this, John. Let me ask you, John. When I look at oil, and I grew up in the oil patches, of Southern Illinois, and I understand the oil market, and it just seems that WTI and the spread between WTI and Brent is really widening, and people don't really understand that we have a glut here in the United States. Is this a boon to the United States in destroying EU, or are we just trying to help the whole world here?
Well, I mean, certainly, we've seen some price appreciation for WTI, but you're absolutely right. And in fact, the Brent price is much lower than the traded Dubai marker, which is 150, and then the cash markets are even higher. So this backwardated market structure, really goes into the stratosphere as you get to the cash delivery points, the basis points as they're called.
How many points?
I'm sorry?
How many points? You think we go higher? You think the spread gets higher? You think it gets bigger?
I don't. I think especially as these shortages sort of materialize in Asia, they're going to come a calling for our West Coast, our Gulf Coast crude oil barrels are all of a sudden going to get some real nice attention and get pulled up, and you'll see the gap narrow on that. We're going to those prices should reflect
the wrong way, right? It's our price goes up, not the other price coming down.
That's correct. The gap will be filled by WTI getting repriced more like the international markers, again, because they're going to start scheduling those ships to sail out their way and not to where, we might prefer them to go.
Yeah, and we talk about oil in general for the United States. What's going to have the biggest impact? WTI? Is it going to be the Permian? Is it going to be in the Gulf Coast? Or is it going to be fracking up in South Dakota?
Well, everybody's waiting to see whether or not there'll be more pipe put in the ground because of this price rise. And we did see, I believe it was Diamondback came out with a secondary to try to have cash on hand to capitalize on this. We are seeing hedging by some producers in the back of the market. 70's not bad, although, I never met an independent type producer who didn't prefer to, play for the blue sky returns. But we're seeing it. There's some discipline out there. That this is supportive of an industry that was actually in trouble as we got into the latter part of last year, and fears over the glut had them really, redoubling and going back. But here's a key thing that I think needs to be pointed out. At the end of last year, with all the glut talk and the lowered oil price forecast, ExxonMobil was printing an all-time record high right before the war even got into the equation. So it's these companies are doing very well and continuing and will continue to do well. They don't need a war to outperform and just put in solid results. What this is going to do, and I know that the Democrats at least are already talking about a potential windfall profit tax because of this, but but this is going to just really, I think, strengthen the balance sheet of the big guys like Exxon and Chevron that you'll never have to worry about the dividend again.
But you talked about laying some, and I hate to use that expression that way, laying some additional pipe. But I mean, that costs money and takes time, right? It's not something that would have an immediate impact on the availability of supplies.
No. But when we get past this, we won't have to worry about sort of decline rates and U.S. oil production potentially peaking. This should keep us in the game now for another several years.
And does this give the president more speaking talks about the Keystone Pipeline and all the new pipelines that he wants to put in?
Well, of course, we're in an episode here where supplies are dear and needed to the fullest extent from wherever you can get it, especially when you have over 10 million barrels a day shut in. So yes, I mean the Keystone Pipeline is a good example of really a misinformed and really spun the wrong way kind of argument, because it targeted the tar sands, which they claim is dirtier oil, but it's not. The only problem you have there is that you kind of need natural gas burnt to heat it up to get it flowing. But yes, this will definitely be the America sort of energy dominance argument will be able to be, I think, table pounded again, for some time.
John, do you find any irony in the fact that the Trump administration has, in both its first and second term, backed away from alternative sources of energy? And, now we find ourselves in a situation that we had not anticipated. And the investment and I'm not trying to make this a political statement at all, but the investment that the Biden administration put into alternatives, trying to get EVs, more, broadly distributed in the U.S., as is happening in the other parts of the world, having put more money into that was also a hedge against moments like this.
I don't understand the attack on renewables, on solar and wind especially, because compared to nuclear, they're a third of the cost for a kilowatt hour, which nobody seems to talk about. I thought we weren't favoring various industries here in this pro-capitalism administration, but and I have no problem with nuclear. It's certainly a great baseload provider, and I'm an all of the above person myself, not to get political, but the attack on wind and solar, I don't understand, again, because they have cracked the cost barrier there. And they do very well. And as you well know, Ron, in Texas, sometimes when the wind blows heartily, 90% plus of their electricity is coming from wind now.
Yeah, the state with the biggest alternative footprint is Texas, rather ironically, right?
Indeed. We'll never escape. I've been trying to say that we're not energy independent, but we're not energy insulated either. These high prices that they're paying for over $6-7 a gallon for diesel fuel out in Asia, and the shortages and the like, that's coming our way. It's just a matter of time, unfortunately.
For diesel, right? I mean, and you see, gasoline's going to go over $4 next week, probably.
Yes.
And jet fuel has doubled, and the Delta CEO said that's going to raise ticket prices, although they haven't seen any slowdown in travel demand. But that'll depend, right, on where ticket prices go. I mean, they were already more expensive than we've been accustomed to, and now we're adding this jet fuel premium, if you will, going forward.
Right, and the shippers are already, and they're quick on the draw on this to lay on fuel surcharges. I heard the CEO of Stu Leonard's this morning in an interview saying he's already paying them. So there you go.
For anybody who's outside our area, Stu Leonard's is a grocer that and that's going to be true for all grocery stores, right? I mean, around the country, because shipping is extremely expensive, and you've got the truckers who are going to have to pay up for it, and that cuts into their margins and so on and so, unless they put the surcharge on.
Right. And especially that the produce, meat, the fresh perishables, they're being trucked in every day. So that hits immediately.
So if you had to lay down a bet today, and I hate to use that expression, but I mean, if you had to make a projection here for where oil is going to top out over the course of the next, however many weeks or even months, where do you think we're going, both domestically and overseas?
Well, on WTI, we printed that 120 on that Sunday night when this haul first started. What's that?
That was Brent that printed 120, right? We printed 100.
Yes, I'm sorry. I expect us to go back to those levels because we printed there. The old trading size, we'll go there again. And again, it's just hard to see. The volume of lost supply, Ron, is just too great for me to see this not repricing higher in the short term until this gets resolved. And I think the messaging is not going to be satisfactory to the market here over the next. Very soon, the market's just going to throw in the towel and be like, "Look, we gave you the benefit of the doubt. Buy now, ask questions later." Mode will kick in a big way.
Yeah. From your perspective, this is more a geopolitical question than it is specifically an oil question, but from your perspective, I mean, what does resolution mean? We could walk away tomorrow, claim victory, and leave Iran effectively in shambles, but still have a hostile regime in place that maybe continues to fire on oil installations and energy infrastructure in the region, and it's no more stable today than it was when this all started. When you look at this, how do you see it playing out?
I think that's the $150 a barrel question, because I do think that, look, for the oil market, they need to just get that straight open and make it secure, cut a deal, do whatever they have to do, or get whatever military resources marshaled to get that done. And the in-country political stuff, I hate to say it, doesn't really matter all that much to the oil market. Iran's output itself off Kharg Islands, 1 million to 2 million barrels a day. It's always been kind of written off. It's gone to the dark side of the world in terms of subterfuge, you name it. But you get everything else back online, we're good. And two, even the Iranian natural gas position is nothing really on a global perspective. They don't do LNG. They do export some, liquefied not LNG, but LPG and other things along the line, but nothing material, nothing we couldn't get by on. But it comes down to the straight for the oil market. That's just it.
Yeah, and you what's your bet? Does that get resolved easily, or is that going to be one of these, like I probably used Iwo Jima incorrectly. It's more like Corregidor, a real ground down fight that, is going to be the last man to get that thing secured.
I think it's going to take some effort, and we'll probably take real troops in my view. So but I don't think it lasts. I do think this is something that should be wrapped up no later than mid-year in terms of securing the strait. So I'm going with that just because I think they have the ability to do it. I think the better sort of analogy, it's Iwo Jima style, sure, but I think the better analogy is, are we dealing with a post-invasion Iraq or Vietnam, where there's just this persistent asymmetrical terroristic type attack that keeps the flows hindered in a big way.
Yeah. How much premium is in this market if boots to the ground?
If there's boots on the ground, how much higher will we go?
Yep.
Again, that's going to signal this is going to take some time. So easily upwards of $130 to $150 a barrel, because there will be no oil coming through the strait then still. I do want to point out, though, that there's a significant trapdoor under this market. If somehow, lions lay down with lambs, as they say here, and we can achieve some kind of ability for the international community to transit the strait, then we're back. Then we're down a good, $20 to $30.
I'm short the market, John. I can't help it. I just can't help it. I'm short this market.
Yeah, no, I mean, there's a huge trapdoor under this market, and the market doesn't seem like it wants to embrace the worst case scenario. The trading action we're seeing is that every sort of effort that's made here to stabilize, produce more supply is getting rewarded in the market, and is rewarding the bearish position for sure.
Well, we're up $1.26 today. So
I'm just looking at it right now, 96.38 now on the spot. I think you talked the market up there, John. I'm losing money as we speak.
These days, give it half an hour.
Exactly. How is this going to affect some? I mean, I'm looking at Royal Caribbean. I'm looking at all these different companies. And I'm old school like you guys. Dow theory, right? If it moves, it's burning energy, right? How much the premium is it also affecting those companies like cruise ships and UPS and FedEx? And is it really, or are they hedged well enough to actually be able to get through this?
It's a mixed bag. A lot of them don't like hedging. They don't like the scrutiny they get on the quarterly conference calls.
Right.
Because they ride the hero dummy roller coaster on that. And even Southwest Airlines, who was a notable hedger for years, sort of stepped back from it because they took heat. What they tried to rely on, and as I was mentioning earlier, is the fuel surcharges. And whenever when I worked at the banks and we were, trying to show them, hedging solutions, they would always be talking about how they had the fuel surcharge to rely on, didn't have the exposure. Of course, they find out they do have the exposure, and the fuel surcharge doesn't quite cover things. But that's the story they'll trot out. I've seen the cruise lines do it, to passengers, slap on a fuel surcharge. Yep. Haven't heard announcements yet, but look for that. So this shouldn't be particularly damaging, but you have to note that fuel is their number one variable cost. usually they're number 2 or 3 overall operating costs. So it's certainly significant.
And you got to admit that the administration is closely watching fuel prices go up with gasoline. They know that the November is coming very quickly with the midterms. Is this going to be an opportunity for state governments, local governments to also raise taxes as well, raise the more on the fuel charges?
Well, interestingly, I think, I've already heard potential, fuel tax holidays talked about, which from an economic perspective, a harsh economic perspective, you don't want that because you want the price higher to engender the demand destruction. But once you come back down,
California, though, it's going to hit $8 pretty soon for a gallon of gas.
It sure is. It sure is. And so I don't think they'll be raising taxes. They'll try to back off that. But the problem you have is that once you visit these higher levels and come back down, all of a sudden this new cheap gas can be taxed. So it's something that feeds in later on us all from those folks.
Yep.
Yeah, John, we'll let you go here in a second. But again, talk to us a little bit about Gain Capital. Tell us a little bit about your company and what you guys are doing, and then how we get a hold of you guys.
Yeah, so you can contact us. On our website, there's a way to just write to us. But we specialize in really energy derivatives, the futures, the refined products, and structures around those items, and natural gas. So crude oil, refined products, natural gas, really, truly energy focused, energy commodity focused investments. Not really not in the equity markets, per se. Just really in the blue collar end of Wall Street, I like to call it.
And I love it. For those of you who don't know, he also has the Kilduff Report as well. He puts it on there. He's a contributor for many years in CNBC and all the fun places that we're all on is right. John, if you were to look back in history and you look at this time, how do we look towards, if we think about the Gulf War, like Operation Desert Shield, Desert Storm, in regards to energy? Are we in that same feeling yet, or is it a little bit different this time around?
This is really not comparable to anything other than that, really anything. And I referenced the 70s, the 2 energy crises there. I mean, the closest thing would be the Arab oil embargo, where we had volumes of crude oil that rivaled what we're facing down right now. But nothing comes close to, where we're at. We have the bulk of OPEC offline right now. And, as Ron mentioned, is the 10 million barrels per day. And that's with them doing everything they possibly can.
No spare capacity, right? Yeah.
No spare capacity. Matter of fact, they can produce more. They just can't get it out of there. And their storage is filling up. The problem we have here that's going to extend this is that the fields as they get shut down will take months to come back. And that'll prolong this, because they have to be very careful with their fields out there. The engineering is, questioned at times in terms of how they manage it all. The problem that I have in terms, and this is I think maybe if you guys are going to continue on from here, and for Ron, is the dilemma that this is going to cause for the Fed, because this rise in oil prices, it diminishes U.S. GDP. The old saw was always a sustained $10 rise, trimmed about a quarter to a half point off, but it's inflationary, obviously. So, it's a classic stagflation environment set up here. And so what does this Fed do? Does it try to, deal with the stag, or does it deal with deflation? I wouldn't want to be them going forward, but that's what we're staring at here, is a terrible stagflation event from this dislocation, he tried to say.
Yeah, man, for those of you who don't know what stagflation is, that's where we lose jobs and inflation keeps going on up. John Kilduff, again, Capital, man, thank you so much for being on the show. And I look forward to having you on the show more often, huh?
I would love to come back. I appreciate you guys having me on and being with you. And great to see my old friend Ron and Sana.
Yeah, good to see you as well, man. Pleasure.
All right.
Thank you very much, John. All right, Ron. Well, I guess the oil world's falling apart here, huh?
Yeah. Well, yeah. I mean, it is and it isn't. I mean, it's like John says. I mean, when they do make the announcement of some attempt to increase supply, you get a relatively positive response. Although, as we just discussed, we're ticking back up $1.26. Holding it around $96 or wherever we are at the moment, and Brent in London is comfortably above $108, $109 a barrel. it's not in inflation adjusted terms equal to what we've seen in prior moves, but
Right.
again, it doesn't really matter. It's still having an impact on consumers. It's still, again, as we discussed earlier, if you're talking about childcare, health insurance, home insurance, grocery bills, all those things, cumulatively, have been obviously at the top of all the surveys that you get among consumers who are saying, look, affordability's not coming down.
Yeah.
We didn't get a price break day one of this administration. So now we're upset, and now it's getting worse. And we're just adding this one other element to it, which makes our commute more expensive, and adds to the sense of unease about the economy. And that's, to a certain extent, that's soft data, but it's also hard data. And it's having a real impact. And then the Fed, again, Jay Powell said we're not, stagflation is something different. By the same token, Chris Waller, Federal Reserve Governor, who was considered as to be the next chairman, didn't get the job, said this morning to Steve Leisman that he's conflicted. He doesn't know what to focus on, and he's more worried that inflation expectations might become unmoored the longer this goes on, and then that puts the Fed in a real box. They can't cut if they see consumer inflation expectations turn abruptly higher and stay there for some period of time.
I appreciate that, Ron. All right, let's get to it. Let's change the story a little bit here, and let's talk about sports. I mean, it's March Madness, and then our next guest does not need an introduction because he is show me the money. Let's get him in here, Mr. David.
May I take a quick break while you guys do this? Because I know very little about college basketball other than Duke almost lost last night. Ohio State and Wisconsin went down, which is a surprise, and everybody's bracket's been blown. But I'm going to take a quick break and be back in a bit.
Thanks, Ron. Hey, David, how are you, man? I'm super excited about this one, man. David Meltzer, and I did the show in Vegas with you. I really appreciate you. You've got an amazing family and amazing things that you guys are doing. I love Marissa. Talk to me, David, about what you're doing and what you're up to, man.
Yeah, well, first of all, just want to thank you so much. Just elevating all of the different shows that you're on, from office hours that we have digital and with Apple TV, and so many other places, bringing, facts, which, is so difficult today. There's very few credible sources, and it's nice to know that I have one when you give me the big beat. So for me, my mission later here in life, like you talked about, was to empower people, to build a community of people like you, Stephen, that are here to help other people and know people that help other people. So I write books, I speak, I coach, I mentor, I teach, travel the world on things like the Aspire Tour, Web Summit, Sigma, just trying to pour into people positivity and giving them frameworks, giving them the dummy tax that I've paid. You deal with taxes all the time, and I live in California, and people are like, why do you live in California, man? The taxes are so high. I said, first of all, I've paid the ultimate tax. So the weather tax in California, the taxes in New York, they don't bother me. The dummy tax cost me everything I had, over $100 million. And it would have cost me everything, including my life, if I didn't figure out surrounding myself with the right people and the right ideas like you. So I wrote this book as my 8th book about don't do business with dicks, and helping people to ditch the toxicity and surround themselves with positive influences. Don't let the title fool you. It's just to sell books. This is a very positive book about utilizing positive energy to make a lot of money, to help a lot of people, and have a lot of fun, which will guaranteed to make you happy.
Yeah, and I'm putting out the website here for everybody. Just click on that button right there. I love it. One of the things when you reached out to me, David, and at the beginning of all of this with the Apple show in Vegas, and I'll tell you, it's your heart, right? I mean, you've seen it pretty much from the get-go of your life. It became a movie, yes, but you've lived the life that we talk about all the time, right? Is that you have the ability to raise up other people. And a lot of times we don't do that in this world. We pretty much are, we're all about ourselves and who we are, but you don't. You bring together a group of people that are like-minded and have a better feel for the world than the negativity out there. And I really appreciate that as a person because we don't see that very often. But tell me what gets you up in the morning, man? What makes you go, God damn, I gotta be up tomorrow because this is what I'm going to do, and this is what I'm doing today, and this is what I'm doing tomorrow.
I was born with a great capability of helping other people make a lot of money. And so what gets me going in the morning is the fact that I have been blessed with experience, situational knowledge, and relationship capital to move the needle for millions of people. And if I don't show up, I'm missing an opportunity to be close to God, because we're closest to God when we're able and capable of helping others. And that's why I teach people to receive. I said, when you receive, you actually are giving, because when you receive someone else, even allowing them to buy you lunch or dinner, you're actually allowing them to be able and capable of helping you, which is when they're at their higher self, they're closest to God. So what fires me up in the morning is being grateful for that capability, forgiving for all the mistakes that I've made and all those who have trespasses on me, and accountability of what did I do to be responsible to attract this, to participate in this perception, to learn. And I'm a lifelong learner. I have a saying, be more interested than interesting. And that attitude wakes me up in the morning to help other people.
Yeah, that whole stay curious feeling. And one of the cool things I like about you is you have these dinners, and you're not just sitting at home all the time. You're in New York, you're out international, Vegas, obviously, and you go to sports events. You still are out there, very, very popular, and you're still doing the events. I have to ask you know everybody. Your Rolodex is probably even bigger than mine. And I have to ask, who are the interesting people to you now in the world that you also look up to as a mentor?
Yeah, there's several people. I think the guys that Aspire, I'm really close with Kevin O'Leary, Damon John on the Aspire tour, David Goggins, Andrew Cordell, my tax architect, is extremely interesting. And then on the inspirational side, guys like Tim Story, Les Brown, Sharon Lecter, bringing all types of, now historically, you can see behind me, I'm the chairman of Napoleon Hill Institute. And Think and Grow Rich and Outwitting the Devil are text content that I read almost every day or listen to every day. And I'm trying to proliferate and amplify the message of Napoleon Hill, of what we can believe we can achieve, and what the mind can conceive we can achieve. And if you haven't been exposed to Napoleon Hill, if you haven't listened or read Think and Grow Rich, Outwitting the Devil, The Laws of Success, these are the books that our generation were motivated. They were catalysts to huge mindset shifts, heart set shifts, and hand shifts. So, beyond my books, Napoleon Hill and all the different lessons are absolutely a great way to inspire. And we teach that at the Aspire events. You show Charlotte and Houston. The next one's Phoenix. We're going to be at the Masters for a mastermind. I want to invite everyone in your community to join us. But even more importantly, email me. I'll send you the rest of my books for free. Just tell me you bought Don't Do Business with Dicks. You don't got to prove it to me, but I'll sign copies of my other book. I'll send them to you. I'll pay for shipping. Anyone in your community that emails me, I want to share and amplify the powerful dummy text and message that I've learned and I share. David@dmeltzer.com.
Yeah, and one of the cool things is you're not playing around. You actually have the who's who of the world here. Shaq and Mark Cuban and Martha Stewart, and of course David Goggins. I like David, by the way. Kevin O'Leary of Shark Tank, and of course Damon John. I'm on his show too, as well, as you know.
Yeah.
And Marcus Lemonis from CNBC. That's what we've always wanted to do at Quasar. Marcus was bring people like yourself, the smart people in the world, put them together and do that. And you built it in a way that really brings them to the people. Because I think a lot of times, David, we don't have that opportunity to actually shake hands and talk to people like yourselves. I do, you do, but the average person doesn't, right? They don't really have that ability to say, hi, David, I really liked you. I really like what you're doing, but they don't have that. You give them, hell, you even give them your phone number, your email address, you put your family to work. You really are all heart and soul into your company. And we need more of that, David, than anything else, man.
Yeah, we need to teach values. There's some basic principles that I share every single day, whether it be gratitude, forgiveness, accountability, or even effective communication. But there's also practices, behaviors. And, I really make it simple. I categorize practice as in behaviors as, is this aligned with where I want to be or better, or is this interfering with it? And if you just start with the values and the practices, it's amazing how exponential the outcomes financially, health wise, family wise, faith wise, they become exponential. And people are like, how do you do everything you do? How are you attaining and achieving so much? Well, because I'm very consistent and persistent in behaviors that are aligned with what I call my divine direction. There's a difference between being disciplined and devotional. I'm devotional in my behaviors. I'm more than disciplined. I don't get so busy working I forget to make money. I don't get so busy working I forget my family, and I don't get so busy working I forget my health. I'm devotional about making money and helping people and being healthy and having fun.
And talk to us about that divine side of you. When people ask me, I was asked the other day about my spiritual side. I'm not spiritual. I'm a Christian. Here's my side of me, right? But it's just who I am. It's not to me. You live it, you walk it, you talk it, and you are it. And you walked out one day. Do you feel that sports is still the same way, or do you feel it's getting worse? I mean, we're seeing a lot more gambling going on. You see, what is it your thought process for the future? What is it that you would like to do to change things or to make it better, to align with your philosophy and your divine side of you?
Yeah, well, first of all, sports is a backdrop. It's a backdrop to your capabilities, your skills, your knowledge, and your desire. So we can look at all types of different sports, and we have exposure and awareness to all types of participatory as well as spectator sports. And so, we can take isolated microcosmic visions of NIL and paying athletes and, corruption of gambling. Look, most of the things today that are bothering people, all they've done is moved from the back porch to the front porch. There's nothing that's going on in sports today that hasn't always gone around. It's just been on the back porch. Now they've created a mechanism to taxes to help the economy, and they put all of the things that have gone on in sports for years and years and years on the front porch. And I believe it's a positive because it already existed. Now we're taking away the blame, the shame, and the justification, the hypocrisy in sports. But for me, even with the movie Jerry Maguire, people come up to me and say, Jerry Maguire is my favorite sports movie of all time. And I'll say, it's not a sports movie. It's a love story in the backdrops of sports. And everything that I see in sports is the backdrop to finance. I got hired to run the most notable sports agency in the world, not because I'm a great lawyer or a great sports agent. I got hired because I had the highest level of competency in venture capital and technology. And
Right.
Lee Steinberg, the visionary in the early 2000s, said the future of sports is in venture capital and technology. And I will tell you that the majority of what I do in sports is venture capital and technology.
It's interesting. I work for the NBA, PGA Tour. Everybody knows MLB and all that. And I saw that technology. I saw that money being spent as that's part of it. Thank you, right? They spent it with me. But when I look at the technology moving the way that it is, and it's being more interactive and more part of our lives on a daily basis, we still got to have the David Meltzers of our world, understanding the spiritual side, understanding, how to make things better. And not because when I hear, oh, well, technology is bad. Technology is bad. Well, technology is not bad. It's based on how you use it, right? How do you see technology being used for the right way in the future here?
It's such a brilliant question, and thank you for asking it because it really parallels my entire career. I got out of law school in 1992. At that time, the internet was what was called pre-chasm. Most people didn't know the internet or want to use the internet. In fact, Justice Scalia, when I presented Legal Research Online, Westlaw, which we exited in 1995 for $3.4 billion, Justice Scalia told me, word for word, nobody, and son, I will repeat, nobody will ever do research on a computer. You need books. And so early on, I was exposed to the resistance to change. I have a saying about technology, it changes things faster and faster, and it will continue to change things faster and faster, as we've seen today. But nobody likes change except for a wet baby. So when we look at technology, I know that technology is put here to make humans more human. So if you're a good human, it's going to make you a better human. If you're a bad human, it's going to make you a worse human. It's very much like the energy of money, right? Money just amplifies who you are. Believe it or not, technology does as well. And so what I'm asking you to do is let's build a foundation based off of productivity, accessibility, and gratitude, empathy, accountability, and effective communication. Let's live with great values and have the practices that are aligned in our divine direction, and even give meaning to the past, the failures, the setbacks, the mistakes of the past to align in that divine direction of two. And then let's use technology to accelerate, aggregate the resources, go from 0 to 1 faster than ever, and to compound the outcomes, just like money. It compounds. Like rule of 72 applies to behaviors, it applies to technology, and of course it applies to money. So let's double our impact and double the productivity that we can have utilizing technologies to make humans more human.
Yeah, and I like that rule 72. I mean, if those who don't know, can you explain what that is?
Yeah. So if you have a certain amount of money that has an 8% interest rate, it's going to double in 72 months. And so in a conservative investment, most people, if they save their money and make 8% on the money, it will double every 72 months. Why it's so important is that the more consistent you are and the earlier you start, the extra doubles. This is why we should put money into our kids' accounts when they're born, because these, doubling in 72 months, which is 6 years, by the time they're 18, they get 3 extra doublings. And so you may be at 2 million at 65, but check this out, when they're 65 and you started at 18, for example, but they get 3 extra doublings. Or if you started at 24, you would have 4 extra. At 30, 5 extra. So if you started saving at any of those ages and you have, which is a nice savings, $2 million saved by the time you're 65, someone that started when they're born and you started at 18, they're going to have 2 times 2, which is 4, 4 times 2, which is 8, 8 times 2, which is 16. They're going to have $16 million, let alone if you started at 24 and did it and they did. Now they're going to have 32 million. And if you started at 30, they're going to have $64 million. So there's a lot in the rule of 72. So the same thing happens with behaviors. If you're kind and you continually get kinder and kinder, you're going to have quantitatively 8 times the kindness, or 16 times, or 32 or 64 times. So I'm a big fan of how things aggregate, accelerate, and compound.
And, in my life, I'm always told and advised, don't hire your friends, don't hire your family, keep them out. You're the opposite. You love working with your family. I love this story, especially your daughter Marissa, and I have chats all the time. And she's an awesome person, by the way, and keeps you going, right? Talk to us a little bit about what is it like working with your family?
Yeah, so it's interesting because, I made some big mistakes early on working with friends and family, only because I thought I was helping them by putting them in a position that they weren't ready for. And then when they disappointed themselves because they weren't ready for the position, then of course, most of them went to blame, shame, and justification, and it destroyed or it impeded my relationship with those friends and family. Later on in life, I've learned the best way to work with friends and family is to put them in a position to succeed. And then it becomes mutually beneficial and a positive experience. So for me, my oldest daughter is what we're referring to. Marissa was very well top of her class from Tulane Business School, worked for Hintwater, worked for Celsius with Alex Machinsky, had multiple offers when Celsius went down as a crypto bank. And the head of my media said, you need to hire Marissa. We can't find anyone more capable. And so I hired my daughter to do something she was capable of, and something that has great room for growth and enjoyment for her. And it's worked out extraordinarily well for both of us. I do stay outside of the management role, though. I believe, especially for your daughter, you can't manage friends and family. I train them every Monday, Wednesday, Friday. I have trainings, free trainings, thousands and thousands, if not even now, hundreds of thousands of people come every single week. And I train my daughter as I do with hundreds of thousands of people, which is easy, but very rarely do I manage her. You know the rest of our team. They've been with me 13 to 15 years. They started as interns, and they manage Marissa like a normal manager or boss would. And it's such a great relationship. And I will tell you, out of all the money I make, all the people I help and all the fun I get to have with the backdrop of sports, the thing that most people are jealous of is the fact that I get to work with Marissa, and they can see how much we both love working together.
And of course, I'm jealous of her because she went to Tulane. My dad and mom would not let me go to Tulane.
Oh no, I went to law school there.
They said I would never finish. They're probably right.
They were right. I went to law school there, and I would not have finished if I went to undergrad. I wasn't ready.
That's
But
what they said, yes.
Tulane is a beautiful place, and I'm blessed that my daughter went there as well.
I'm very jealous of that. David, one of the things that I'm very proud to say that you've allowed me my opportunity to come on your show too, as well as to tell our story. You do that for people. You give people the ability to tell their story if they have a story to tell. Not just, you can't just come on there because you want to say something. You actually tell people, hey, come on my show, and you're very syndicated, Apple and all the cool things. What is it that separates the people that are on your show from everybody else that isn't on the shows?
Yeah, for me, you have to have one capability of some sort that can be of service to our community, but you also have to have asked for our community. So we're looking for people that not only are on my show, but are going to join my community like you, people that are going to help each other and know people that help each other. So, I've had the biggest names like you on my show. I have had everybody. I've had Cameron Diaz. I've had, Tillman Fertitta. I've had billionaires, millionaires, entrepreneurs. I've had every Hall of Famer, Olympian, and they all share that not only the desire to be what they must be, but they share the ability to, in our community, to help one another and know people that help one another. And that's why we give access to the community for people that have something that they can help people with and also need help.
And what is the common thread between all of those people you've had on? What is the one thing you always see about each of those guests coming on your show?
Gratitude. Every single guest has some sort of gratitude and a practice of gratitude. And that leads to the desire that they must be what they can be, which means whether it was Tom Brady, doesn't quit. Evander Holyfield doesn't quit. Cameron Diaz doesn't quit. They're not overnight successes. They all had an opportunity to quit. They all had an opportunity when the people who loved them most told them, you should quit. You're never going to make it. And they told that out of love because they don't want the people they love to be hurt. So they give them bad advice out of fear and they tell you to quit. But if you are gracious and you have that desire that you must be what you can be, you won't quit. And if you're talented, I promise you, sooner or later, they'll laugh at you, they'll scoff at you, they'll make fun of you, but sooner or later they'll applaud you. And it's so nice to be in that stage of my life.
The Gandhi feel of life. Yeah. And I've seen so many of your shows, and being a part of your group, I love it too as well. And I'll tell you, one of the things that I saw from your group is the one thing, yes, gratitude, yes, the pushing up, but love. There was so much love in your group amongst each other. It's like they all had a common thread. They didn't need to hear it. They just knew it, right? It's a feeling that you saw. And no one was like, I'm so-and-so and you're so-and-so. And it didn't matter. It was like they were all equally there and trying to learn, even at the highest level. Some of the people you have there that are just really high up in the world, and they're just part of the world. They're not trying to be bigger than they are. And that to me was really gripping to my own soul. And I appreciated that, David, from my own heart. Yeah.
Yeah. We have a group of vulnerable and honest people, very generous people and loving people. My favorite quote is you're either humble or you're about to be. And we try our best to live in that humility and being kind to each other and kind to our future self. For each other. So you fit in perfectly into our community. I also want to invite your community once again. Reach out to me, join us, david@dmeltzer.com, and I'm happy to send you my books, my guides, exercises, all for free. I'll sign the books, send them, pay for shipping. I'll pay for the books. I'm here to empower over 1 billion people. So your community is important to me. You're important to me. I look forward to seeing people on the Aspire Tour in Phoenix, our next stop. Come and see us on stage in Phoenix, Arizona in April. It's coming up. Come to the Masters with us. Come to the Vegas. We're filming again at the Sirius XM in the lobby of the Wynn. just email me, david@dmeltzer.com. Stephen, thank you so much for having me. Let's do this again and come back on our shows. We love you.
David, you've already got that. Now I'm going to slow down a little bit with the website, but I appreciate you asking me back, and I will be there. I'll come to dinners. I can't wait to see you guys in New York and in Vegas again, and I'll see you at some of the events because I do go to sporting events. David Meltzer, everybody, listen, do one favor for me, everybody. Click that button. Go to Aspire Tour. Go see him. Go literally. He's giving you his
I'll give
personal
them free
email
tickets. I'll
address.
host everyone. If you email me, you can come for free to the Aspire Tour, david@dmeltzer.com. So you don't have to go to the website. Just email me. I will give you all and host you there. I speak at every single one. I'm involved on the Diamond Lunch, a variety of other things. So if you'd like me to host you, no matter where you are in Phoenix, david@dmeltzer.com.
david@dmeltzer.com. How many people out there actually will give you their personal email like that? I don't know anybody. I don't even hardly do that myself. David, thank you so much, and we'll see you right back here again, my man.
All right, brother. Take care, Stephen. Thank you, audience.
Wow. That's not normal, folks. David Meltzer, Jerry Maguire, you all love the movie, but he lives his life. I know him personally. He is a great person. I've been on his show, Office Hours in Vegas, and I've done the shows, and the Dan and John show you'll see soon. That's coming out very quickly. And folks, I don't think the person I'm bringing back on here needs any whatsoever introduction. We're gonna keep going live here, but my boy, my friend, Steve Flanagan. Wow, Steve. One of the things that David Meltzer was saying was that it's the gratitude side of life and how we go through it, and we hear all this, the markets and the money and this and. But it's about the personal relationships that we all have, and the personal relationship that you and I have for many years now. It's not because of the markets; it's because of who we are as people. And Steve, I personally just want to say thank you for being part of the Quasar Markets as we move forward here and in the new platform, a new website, and what we're doing. But bringing that knowledge that you bring day in and day out, Monday, Wednesdays, and Fridays, and day in and day out again, and it's continuity that we don't always get with a lot of places, but it's also the fact that you're bringing decades of knowledge. And so personally, from Quasar Markets and myself, I think you're being a part of what we're doing, Steve. And man, I'm going to leave the show to you.
Well, thank you, Steve. And let me tell you, we're having some fun. And boy, when you look at the future for Quasar Markets and you listen to a guy like David just speak, I mean, you can feel the passion in his words, and it's exactly what we need. I have 43 years in the currency markets, finishing up for the last 15 to 20 years running the electronic risk management FX trading platform as a risk manager. And what I hope, and the tools that I hope I can offer to the viewers here, is to cut through a lot of the noise pollution that we're bombarded with, the narratives. And keep in mind, many of these narratives today are just being recycled via, automated, it's AI picking up from social media. The one thing that AI does not have, or computer trading does not have, is they do not possess the human emotion. And emotion is what drives trading. So by plugging AI into social media, a lot of these models now are picking up, and they just keep, right now, look at your headlines. You can score them yourself. 9 out of 10 are negative. And what does that mean? The model is going to then sell, and it reinforces, because the lower it goes, the more negative the news is. So what I hope to do is be, my career has been as a major observer in the front row of the international financial game. I went through the period of the Plaza Accord. I executed, orders for the central banks in order to drive the dollar's value down. I had the opportunity to talk to a lot of people. And so I hope that I can perhaps decode a lot of these real market mechanics so that perhaps you can trade with more clarity in the market. Because, you have to believe in the data over the hype, over the narrative. And I hope that I can share a lot of my practical insights with you, which I do with Steve and Howard, on 3 mornings a week.
Yeah, and we're going to bring it right now. I'm going to do it right now. I'm going to bring in the website. For those of you who don't know, the new website has gone live. It's quasarmarkets.com. For those of you who don't know, we just went live with the new site. All of the things that we're doing, institutional grade intelligence layer for the next generation markets. We want to build something for you, for everything in this platform, and we did that. Education, a new platform feel and look on the new Web3 versions, GUI 3, which from Google. Thank you, Google, for partnering with us. A little bit more about me as well, right? And looking at the all the things that we're doing, and we did it in a way that you can start a free account, folks. It's not there's no need for all that other stuff that you're talking about. Free account. And if you do this, I got it down to about as cheap as I can get it for everybody here, right? $99 a month for institutional data. And look, education. And of course, we couldn't do that. Kiwi Tech, our partner, and our advertisers as well. But we did everything. We got education, spotlights, a little bit about us, right? The next generation markets that what Steve was just talking about, right? How we bring the markets to you, our new platform. And I can give a little bit of a taste to that as well. And you can also see we have a media page. I won't turn it on because we're live here. You can see it in our media page. Freaking boom. It's right in there. And of course, you can see here our merchandise. Now, there's a couple of grayed out things right there. One of them is invest now. You'll be able to invest into Quasar Markets. Some opportunity coming in to be able to invest in the company here as well, as the SEC has also approved this. And you'll see we also have a brokerage coming too as well. Name how many companies doing that, Steve Flanagan? Doing all of it, right? Not many. And we've been approved there. The fastest in history. Been approved by the fastest in history of a brokerage as well. And there you go. So, and a little bit about me. But here's what we also like. And that is the ability to be able to also buy merchandise as well. So there's that as well. Kaboom. You want to buy a hat?
Got to get myself one.
There's your jacket. I think you like jackets. I think you live in Florida now, Steve. You don't want a jacket. Do you think you want a shirt? Yeah, it's polo shirts now. But for sure, absolutely. All right. Yeah, loving this. We are still going live here.
Yeah, Steve, I got to say one thing, to the viewers. Bad data destroys trust. And a lot of what we get today is such bad data. And Steve, I think your mission here is to clean that up, because you're looking to no noise. You're just looking to give everybody an edge to trading. And I'm so joyed at being part of this with you, and keeping our friendship alive for over the many years. This is a lot of fun that we're having, and I really do enjoy it.
It's funny. I was just asked by Damon John's team, like, what's your biggest advice for startups? Like, it's a lot of work. I mean, it just is a lot of work, but you know what? It wouldn't be worth it unless I had the fun doing this with everybody too as well. And yeah, I get it. I know all these people, and I got a great big Rolodex and all that, but that's not it. We talked about it earlier with David Meltzer, and we talked about it earlier with Ron and Son, and of course you just said it, that gratitude, that ability to move the needle forward, to show the world a better way of doing things, to help people, and not, this is about one thing. I get that. It's making money, but it's not always what it's about. What if I could do good and make money and do really good and try to help people at the same time? And you've done that pretty much your whole life, Steve. I mean, give us let's do some fun stuff. Let's talk about the fun stuff. Let's do some of these exciting old time. You have stories. You've got stories, man. I'm gonna step out, give you a few minutes here, talk to the stories about being on the desk.
Well, some of the stories, obviously, I don't know. I don't want to get myself in trouble, but there's no doubt that, for the last 20 plus years of my career, I was in the front row, and I started off, I was a voice trader. So I watched the entire electronic marketplace start. When I first started in 1979, they walked me down the floor of the International Letters of Credit Department, which I had an international economics degree, and I loved it. But I was looking at an entire city block, row after row, people all down the rows with baskets of paper on their desk. And I went, I was, oh no, I hate paperwork. And, but, I took the job and they walked me down to the end into a glass case and they said, we noticed the word computers. This is 1979 on your resume. And this is our first automated operational department, letters of credit, reimbursements. And we hope that you could supervise. Well, what a lucky break, because I stayed in computers right through my career. Got into the foreign exchange, started trading in 81, 82. And, there's been story after story. Steve, you alluded to one on this morning where, you had a keyboard in around the early 90s because trading suddenly became automated and the numbers were right in front of you. Now, I come from the day, the first 10 years, where you picked up a phone. If you look at my LinkedIn, you'll see I have 2 phones. Well, that's how we traded all day long. You just turn them and you'd say, what spot? Yours. What spot? Sell it again. And you just, that was the way we traded. But then suddenly the automation came in early 90s and they put the price in front of you. And suddenly you looked and you didn't have to ask where the market was trading. It was now being displayed in front of you. And it also showed the liquidity that was there. Because in those early days, when you said, you would be trying to sell $100 million Deutschmark and you'd say, 20 yours, I mean, 20 million I sell. And the broker would come back and say, 5 only. And what's the next price? Well, you can be sure the next price was lower. Now you saw the market. So I stayed in it. And then around 2000, 2002, my boss said, you're starting to get a little slow out there now and reacting. But this automated thing is starting to come on. We'd really like you to be part of it. I jumped in. I saw what it did to the voice brokers in the 90s, decimated those desks. So I jumped in and stayed with it. Some of the stories, you had a little keypad as you'd trade. And I can remember there was a trader, a good friend in the marketplace actually, had spilled a cup of coffee. And that's the worst thing you can do, is spill a cup of coffee, which always is on a trader's desk, on your keyboard. Why? Because it creates crazy mouse. If you haven't seen it, don't try it, but you'll see your mouse just starts going on. Well, this keyboard was a deal entry keyboard, did not have a mouse attached to it, but what it did, the coffee, yeah, he loved a sweet coffee, the sugar inside the coffee while he left for the day, he thought he emptied all that coffee out of his keyboard, turned it upside down, slammed it down, but when he went home, that sugar melted and hardened. Well, guess what? Sugar, I guess, now we learned, conducts the electricity. So it connected the key. You didn't have to push the key down. It connected it. Well, the guy came in and he heard from a friend in Asia, wow, you've been a seller all night long. You got it right. And he said, what do you mean? I've been a seller all night long. Well, lo and behold, his keyboard had been boom, boom, and it had just been selling all night long because it connected the sell button. Well, he came in and he was several hundred short. Thank goodness he had the sell signal set to 2 million and not like 10, because it would have been 10 every time, and it was only 2. And it seemed to sell roughly about every 10 to 15 minutes. Well, he came in, and of course the market was much lower, and wow, he was short, and he couldn't figure out how he was short. Of course, he got in all sorts of trouble too, because somebody said, hey, you broke your limits overnight. But, that was one little story. And of course, he made good money. And of course, being that he made good money, that was a story that everybody talked about in the marketplace.
And I don't like making mistakes like that and making money because I don't learn anything from it, right? It's not the biggest spend, but I get it. I understand. I love it. I love it. I love it. Okay. Steve, it's interesting. We talked to Ron Asana earlier today about it, and yourself. What is it that you want to see out of technology in the future, and the things that you didn't get to do in the past that you're going to have carte blanche, as you know? What is it you want to see happening here that will changes the whole dynamics of markets in the future?
Great question, Steve. And, let me tell you, the one thing that I never thought of when I was sitting at the desk in the front row, right? Because any information that came out, and I'm talking about going back into the late 90s, we used to say, well, look, that information came out. Well, let me back it up a little bit further. I got on the trading desk in 1981, 82, and we had a dot matrix printer that would come out, and everybody traded money supply back in those days. The bond desk was right next door. They hated the currency desk because we always made noise. We were the cowboys. We traded like crazy. Well, when money supply would come out, it would dot, 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 dot. And I happened to be a good eye, and I would get in there and lean. So I didn't wait for it to suddenly go up. I could actually see M2 was plus 18 mil, and I'd yell it out. Well, almost all the time I got that right. So everybody said, well, your job, you sit there and you just watch the news come out. So, fast forward back into my career, I always had the news first. So therefore I was always able to act first, which, I didn't think about until I retired in 2022 and sat down in a retail space like everybody else here. And I suddenly said, hey, how come I don't get that information at the same time? Why is data held exclusively in the institutional space? Why doesn't data come out to everybody else? Now, we can watch news programs and pretty much get the news, but by the time somebody has given you the news, it's probably about a minute or more before you begin to go, and what was the breakdown of that, please? And they give you the breakdown, and we're now 3 minutes in, and you already see the market's moved. Well, machinery can operate within 2 milliseconds today. In other words, that news comes out, 2 milliseconds, 1,000 milliseconds to 1 second. So now you see where the advantage lies. And now when I always say to Steve, to the viewers, if you want to see what I'm talking about, next time non-farm payrolls comes out or a central bank meeting, put a 1 minute chart up on that financial instrument and watch the way the market moves in a 1 minute bar chart. Could you have sold? Would you have been able to interpret the news that comes across the headline? By the time you've got it, it's maybe a minute old, and you're going, well, it's already happened, most of that move. So this is something that has always been a quandary to me, is like, how does the retail sector get involved in the same space? How do we see news? How can we react to information in the same timely manner? After all, many of us are retail traders, but we're as serious a trader as any institutional desk could be today. So that's always bothered me, Steve. It's something I've always thought about. And, it was one of my big allures that, as you sold me, way over a year ago in speaking with you, that was something I really liked about your vision.
Right. And the vision hasn't changed over the last 30 years of my life. Because you're right, accessing data, and I've said this many, many times in the past, the difference between haves and the have-nots has been how much money you have in the bank. But I think in the future is how much data you have access to make better decisions. And I think that people will make better decisions on what apple to buy in the grocery store or what car to buy. And we're already seeing that. Oh, well, I can go online and I can see what a car price really, nobody's getting screwed anymore. But how do I make that and put that in the hands of everybody around the world in every language and understand how they're seeing the world? People in Japan see the markets, and we've done this in every language. And that's a good example of that, Steve. Actually, I kind of want to show everybody a little bit what I mean by that. And I'm going to do that right now, actually. If you guys bear with me, I'm going to pull back up the website here, and here's the page. What do I mean by letting everybody see everything at one time? And we have it already set up that you can see it in their language, right? I want to understand that this is Japanese, right? The platform is in every language. In German, and you can see here now as well, French coming up, French, Portuguese, all the languages are in the platform. And as people are in the platform in their language, you'll be able to see it in your language, in English in our case, right? But that's what I've always wanted to do, is make the world a little closer, a little tighter together. And that was part of what I wanted to do as well. I also wanted to make sure that when I'm doing these kind of things, right, is that I'm able to educate as well. And so we have an education platform here as well. If you don't understand things, right, Steve and I are always doing that. Where, you know, when Steve and I talk institutional speak, wait, let's go tell people what does that mean? What does backwardation mean? What does this mean in the technology world? What does this mean in a way that affects my trading? And we want to make sure that it happens. And I do that all the time. And of course, I couldn't do any of that if it wasn't for Kiwi Tech and WebMob, our partners here in business that helps us produce the platform that we have done here. And that to me means speaks volumes, Steve, is education and being able to bring this in technology to people as well. And I think it all fits that air of gratitude that we all have towards each other.
That's absolutely, Stephen. You know, I would encourage, you know, sometimes we get some pretty good questions on our morning show. And I would encourage people, you know, to reach out through Quasar Markets. I'd be more than happy to address, you know, because one of the things that I try to bring, and Steve has on my banner, you know, money moves first. And you need to understand how important the currency market is in making investment. It is just one of many parts that go into a decision, but you must understand that when money begins to move in a direction, often you will get the corresponding moves. Likewise, if it moves out, you could begin to see markets, because everything today is so correlated, you know, and that's why, you know, I talk about FX. It's the fulcrum that sits underneath of the seesaw. The seesaw is the balance of the world. And you can put everything in as many of these very large institutional models that balance trillions of dollars. The currency rate is what makes the beam go back and forth. If it moves in one way, it means they need to buy this side to bring it back into balance. And that's why it's so important to watch your currency, specifically currencies like the yen, because it's been a fundamental vehicle to finance over the last 20 years so much of the world activity. To watch the euro dollar as a major offset to the US. Now, keeping in mind, the United States dollar is the reserve currency. If I just look at this example of what happened in the Middle East, everybody was talking for the past 3 months about the dollar demise, the world going against the dollar, people diversifying. Well, look at the dollar move on any chart. That's not true. That didn't hold up to this test. In fact, the dollar will shine further, and that is a very positive, in my view, just my view, that I believe through a series of what I term quantum convergence. Quantum being essentially the technology, computers, everything else. All of these advancements are coming at such a rapid pace. And the convergence that I talk is, if you just look, you have better thinking models. You have AI, agentic AI. You have AI growing at leaps and bounds. People trying to say it's overdone. AI, I equate, and I've been in technology for my entire career. AI is like the invention of the telephone in the 1950s. That's the type of effect it will have in the marketplace. And that's what Quasar Markets brings at a forefront, is an AI base here to educate people and to have that availability. So, you know, believe in the data, not the hype.
I agree with that, and I have to ask, Steve, your passion is just it's incredulous. I mean, it's unbelievable, right? But I got to take you all the way back to the beginning, my man. How the hell did you get started in all this market stuff 44 years ago, man? What got you started in all this?
Okay, that's a good story, Steve, and that's one I usually publicly don't necessarily always talk about, but I will. I graduated with an economics degree, special in international economics, out of Assumption University, or college back in those days. And I said, you know, 1978, what can I do? I can send my resume to the Fortune 500. So with my father's financing help, I printed up 500 resumes, folded them all in envelopes, sent them to the Fortune 500. I still have about 360 of those letters today. I keep as a kind of memento. Every one of them said, "Thank you very much for applying. Your resume is on file." I did not get one lead at all. So I sat there. I had worked in the post office in the meantime, and I was, I basically said, "Check your brain at the door." I got an international economics, but I put my foot up on a table as I was sorting mail, and some supervisor came by and said, "Hey, union rules says you can't put your foot up there. You're not allowed to sit like that." I came home and I said, I got to get out of this job. I went for an interview at a operations level in Manufacturers Hanover Trust, and took that job in the letters of credit. And then that set off, because what my grandfather said to me, get your foot in the door to a big company and things will happen. And sure enough, my third month with the bank in an operations department, which I loved the people I worked with. My third month, I overheard, as I walked by a copy machine, somebody say, "Oh, we're going to really have a rough go for the rest of the season because we just lost our sweeper back." Now, a sweeper back, I perked up and said, "Hey, are you talking soccer?" He said, "Yeah, we lost our sweeper back and we have 3 more games left." I said, "Well, I played soccer in college. I was the starting sweeper back at my university." He said, "We'll show up Saturday at Boys and Girls High and Bedford-Stuyvesant, and we got a game." I did. I played the next 3 games. They loved me. I loved them. It was great. I was actually the only American that was playing on the team in 1979. Everybody was from all over the world, and it was so great. And they said, "Well, you played with us, but now you got a chance to join us on our International Cup over in London." Actually, it was in just north of Milan in Italy, in Strezza. And so I went, and for a weekend, we played soccer. And it was great. All the branches from the bank came in. And I heard this guy on the sideline saying, "Oh, I just love this game." Well, it turned out that he was the head of all international. And it was his trophy that everybody was playing for. Well, we lost to our London team in overtime, 2-1. And he came up and said, "Hey, great game." And I said, "Well, thank you." And I met him. Dwight Allen was his name. And he said, "Hey, this is a guy next to me. His name, Tom Devine. He runs foreign exchange." I said, nice to meet you." At night at that banquet, I talked to him. I sat down next to him. I was engaged because I was in international economics. He told me all about currencies. Boom, flash forward 8 months, about a year. There's an interview, the last person to interview for foreign exchange trading. And my friend, who was now on the trading floor, said, "I got you an interview. You got to be up there in a half hour." Boom, I go up off the elevator into this office. And the guy looks at me and goes, "Hey, I know you." And I said, "Wow, Tom Devine. We just met a few months ago in Italy." He said, "What are you here for?" I said, a position in foreign exchange." And he said, "Okay, you got it." He goes, "I love talking to you that night, and the rest is history, along with everything else I've done." Back to David's, when you had him on, boy, I tell you, sometimes you just got to put a foot forward, and God opens up a path, and you just got to go with the flow. So, that's how I got started in a nutshell, Steve.
I love the story. It's always inspiring. People always ask me, how do you get started in the markets, and how do you do this? And everybody has a different path, but I think it's always a path is opened up for you, a door is opened up for you that you didn't expect, when you expected it, or where you expected it to be from. And we choose as humans if we walk through that door or don't walk through that door. And I don't think there's a door I haven't walked through, Steve, yet. But sometimes it's the, people ask me all the time, what is it that's different about you? And I said, I don't collect things. I collect people. I like people, and people are what makes the world go round. Rakesh Gupta said the same thing. I don't invest in in places. I don't invest in things. I don't invest in businesses. I invest in people. And I think that's, I'm very happy that, and I don't want to say we're blessed, but we use too often, but I am blessed to have Steve Flanagan in my life. I learn every day. I learn every time you're on the show. I learn, and every time that you come on, you're always a nugget of wisdom, and that is the thing that I want to bring to the world as we have Media Day here and the new platform and the new website. And I appreciate everybody out there so far. You guys have been great. Numbers are going good. Make sure you subscribe, like, and hit that repost button as to push it out there. We are growing at leaps and bounds. Looks like the numbers are pushing up. So I'm super excited about that.
I got one quick one for you, Steve.
Yeah.
I know you brought Ron on earlier, and just to end up, I just wanted to say there was a point in my career, and it was around Ron, and I've told this story 100 times. I used to get to go do all the FX, because FX was big in '84 because of the Plaza Accord. I got an interview, and Ron Insana was asking me questions, and he was banging questions at me, and I was answering. And I guess he must have had an extra 30 seconds, so he had to fill in. He turned to me, and he said on live air, because that's how these things were. There was no prep, there was no taping, and he said, "The Russian central bank lowered rates today. What effect did that have on the Deutschmark?" And I tell you, you want to talk about a deer in the headlights. I was like, the what? Now we're talking in the 80s. The Russian ruble. What the heck? Who trades that? That's what we call an oddball currency. It's done by the desk down there in the corner. But I had to fire an answer to him. And I remember walking off going, what was that? The Russian ruble. Oh boy! But I was going to tell him that this morning when I saw him. But anyway.
the Turkish lira, the ruble. All those things. The oddball. I love all that. Let's talk about the oddball and the person who got to live the life that we all expected we want to live. I'm going to bring him in. We all love him. I'm going to leave you in here, so you don't leave yet. I'll bring him in here. Our boy, our friend, Peter Thomas, Mr. Metals himself. Who had a hell of a time on the floors, still pretty much are. See, we're going back. He and I went back. Peter, let's take you back. Tell us the stories of you being on the floor. Why don't you guys have some time together? Because you guys are But Peter, for those of you who don't know, was there with the Hunt brothers when they tried to corner the silver market. I'm gonna get out your guys' hair. You guys have fun talking about it.
Well, Stephen, I don't think they tried. I think they did.
Did.
And they did it legally, and they did it properly, and they disclosed everything they did right up until the government came in and went, citizens can no longer buy silver. And that was the end of it. So there was no cornering involved. They were accumulating, taking delivery, and putting it in their vaults. And I happened to be one of the people filling the orders for them. And I always, when people make it sound like it was a crime, you don't commit a crime in public and report your positions every day. That's kind of how I felt about it,
That was some event. I remember reading that book, Silver Bears.
Oh yeah.
It was a total legal. In fact, I read a number of articles how people try to draw some similarities between the recent silver drop and the difference between trying to buy physical silver versus the paper silver in the market, and still the gap exists between them. And, people are like, well, who manipulated that price down when 2.5 times the entire global production of silver traded in that one Friday,
Right. Yeah, that was interesting, wasn't it? And most people don't realize the magnitude of that break, but we're going through it again now, and the current liquidity crunch, let's call it, and also on Bloomberg this week in Dubai, I coined a new phrase which is called margin victims. And that's why I'm looking at the people in silver and gold. They're margin victims when they change the rules again for margin. We're going to go from a posted rate to a flexible fluid rate. So if it happens to go higher, so does your margin. And oh, by the way, the machine just took you out of the market. And so we have all these margin victims. So that's kind of my new thing here for Steve. We'll refer to our silver traders as margin victims, you know.
Wow, Peter, that's amazing. And you know, when people talk about manipulated markets, is there any market that could be more manipulated than that one in being able to do that? Were you a floor trader back in those days?
I was a registered floor trader and member, and my father was a floor trader and a member before me. I started as a runner when I was 13.
Wow.
You know, back in the days before they had all the law, yeah, you can't work, you're too, you didn't care. You know, your father was on the floor, you were a runner, period. You know, and I was one of the grinders. I started as a runner. Then you know, I'd go get packs of cigarettes for the guys. You know, back when you could smoke on the floor. You know, it was like, you know, like,
Was that the Comex in New York, or were you out
no,
in
it was the Board of Trade in Chicago.
Chicago? Yeah,
Yeah.
I used to go out and visit. So that would be in the mid '80s, out to visit for the currencies. But
Yeah.
we'd always go up in the gallery to watch.
Sure, you were right down the street at the CME, and the currencies. No one expected the currencies to get as big as they got. You
That's
know,
right.
and I think the leverage is what really attracted people to that market. You know.
Yeah. Yeah, I often tell people, if you really want to see a good movie or a documentary, kind of watch Floored. It's one of the traders out in the floor
Yeah.
who often talks about the glory days and how the
Right.
electronics came in the '90s and wiped
Yeah.
everybody out. So
Well, you know, Barbarians at the Gate, which was a takeoff on the Silver Bears and everything that happened on the floor. James Gardner was the lead in that, and Jimmy was just a wonderful guy. And I remember I was racing at the time, and I was out at Elkhart Lake, and I looked over, and there was Jimmy sitting on a bench, and he did all his own stunts when he was younger. And
really,
his hips were worn out, you know. And I came, you know, I was a young guy. I kept bouncing over to him, and you know, and I was getting ready to go out and run some hot laps. And he said, I was good. He was such a gentleman. He wanted to stand up and I said, Jimmy, just sit. It's okay, you know. And he was such a nice guy. That was a great film. Yeah.
I got to watch that one. So I got to ask you, you know, with the way gold and silver are getting hammered here, what, you know, it's not the traditional safe haven hedge that one would expect. I mean, the dollar clearly has come out of the dust to be the safe haven. But normally you would say treasury bills and gold and silver. But
exactly right.
Why is it that people are just wrong way around now?
No, I think Stephen, let's look at it this way. What we covered when we first started talking, it's liquidity. There is no cash out there, and I'm still 3-4 weeks behind on shipments, and so I can't get silver coins. They're not around. People are, you know, and if you liked it at 120, at 68, you got to be a buyer.
Right.
And I got guys coming in going, Pete, I'm just going to average down. You know, get me a box. And I'm telling them, look, guys, I'll get you a box. You've known me for 40 years. I'm not going anywhere, but it's going to take 3 to 4 weeks to get there, you know? And so orders are still coming in from physical traders, but from guys in the futures and whatnot, they just don't have the money, you know?
But what's to stop a very large hedge fund from saying at 68, 65,
right,
and saying, I want to buy a very large position size and I intend on taking delivery?
Oh, let me tell you something. If there's anybody watching this that has a spare billion or two and they'd like me, I'm real serious, and they would like me to, because I have access to multiple vaults globally, I would love to start buying and accumulating silver, because this is the point. Nothing's changed. China is manufacturing 1 square solar panel every 60 seconds. They are plans for delivery out to let's see, 4 years out. There is what they're planning right now. So production isn't going to slow up. Silver demand isn't going to slow up. They project 2030. We're going to be looking at 2030. We're going to be looking at 40% of global above ground production of silver is going to go into solar cells.
Wow.
Buy it and hold it.
Yeah.
Buy it and hold it. What, you're going to buy a T-bill and get 4 or 5%, or you can buy silver, throw it in your wherever you're going to store it with me, in your safe, whatever. In 4 years, where are you going to be if 40% of it's gone?
Right.
I mean, you're going to beat, you have the potential to beat, anything that you're in, except for possibly some aggressive stocks.
This raises a big question, though. As I always have looked at in my career, gold and silver have always been the store of value.
Yes.
And everything kind of goes off the pyramid from them. If the store of value is dropped roughly 40%,
correct.
That's 40% of the paper, but that's 40% of the global available liquidity.
Right.
Has just disappeared.
Yeah.
And that is kind of a warning of deflation, not inflation that everybody's focused on because of oil. And I worry about that is an underbelly shot to the financial markets if it doesn't rebound again, because it could have a cascading type of effect
right.
in financial markets. Because when one asset falls as much as this, you have to begin to sell off your profitable assets to cover a lot of the losses.
Well, that's interesting. On this show with Steve Orr, he asked me pretty much the same thing 6-7 weeks ago. He said, "Look, we were making these new highs every day." He goes, "What happens if this thing breaks? What's going to happen to gold and silver?" It's because he felt it was kind of coattailing it, and we were getting equity from Bitcoin traders, stock trade. Where I'll sell a Bitcoin and buy a couple boxes of silver. That kind of thing was happening. So I said to Steve, and I look at a lower, as the water goes down, all boats go down. Yes. And it isn't a matter of you going, "Oh, I'm getting out of my stock, which just lost 20%. I'm getting out of my stock and hanging out because they got scalded, they got burned." So there's an adage, Stephen, I'm sure you've heard it. Good money always gets thrown after bad, always.
Yeah, always.
And so I got a winning trade in the gold, so I'm going to pitch that, take the money, and I'm going to meet my margin call on my AI stocks. Really? You're going to do what? And so to get to your point, I think that it's just a vacuum sucking everything down. And to me, nothing's changed. Nothing. Yeah. And demand is bigger than before. I'll give you an example of what I'm talking about. Samsung just cut a deal with one of the largest producing silver mines in the world. They said, "Look, we're going to run out of silver here in Korea. We don't have it, so we're going to buy directly from the mine, and we're willing to sign a contract for all your production for 2 years." And they were like, "Really?" Okay, we're in. So for the first time in history, we're seeing the dynamics of a modern company building phones, TVs, going, "We're just going to buy it from the mines." So what does that take off the market? Are other people going to step in and do the same thing? You bet they are. Yeah. So I believe that this break right now is really presenting you with an opportunity to start loading the boat,
Yeah.
Well, I mean, $4,600 an ounce here now, Pete. I mean, it was $5,600 not too long ago.
Not too long ago in gold. I just, silver was the most dynamic, and that's kind of where we were, and that's kind of what I'm feeling. I mean, I looked at the PPI, it was dismal. I look at all these signals and I'm going, keep bringing it down. And I know quietly we're seeing accumulation by some of the bigger players. But as I always report on your show, Steve, I try to bring in central banks because I feel the central banks are one of the pillars of precious metals now as never before, especially over the last 36 months. And their activity is down dramatically last month. So we're seeing that high price that you pointed out, Steve, that we're seeing that kind of getting pull their horns in a little bit, and they're not accumulating as much. But you watch, we get a little more of a break, and you're going to see all the stands coming in. We're going to see Asia being a major buyer. We're going to see some of the banks coming in massively buying gold.
What about copper, Dr. Copper?
Well, copper's kind of off the rails right here. People are look at your dissertation on AI. We know they're using massive quantities of copper for their electrical passages on the new campuses they're building. The demand for that is going to be phenomenal. And, you get down below this 550 area in copper, certainly looking attractive to me for the long term, Also, here's a little tidbit that I picked up last week. The resistance, the R factor in cables in copper is faster if they use pure silver. And right now they're figuring out ways to use braided silver cable because it's faster for their high performance areas. So we're seeing a brand new demand coming in, and it's not a small number. So
is that for housing, or is that just for data centers?
That's just for AI. That's just for AI
data centers. Wow. Yeah. Oh my goodness gracious.
Yeah. Yeah. So new things are popping up, and as I always mention, the colloidal spray in the panels for solar, all the new phones that are being created, the lead silver paste that is used to put every keyboard that you're tapping on, all of that has not gone away, and the recycling numbers are dismal. We're going into the 6th year of lack of production to meet demand. 6 years in a row right now, officially. Why? Because in order to recycle it, when it's mixed with lead in a keyboard, in a phone, that are tossed out, that aren't captured, we aren't capturing that and recycling. Plus, it's costly. And oh, by the way, when you start melting a lot of this stuff down, like lead, you get a lot of toxic fumes. So it isn't as easy to recycle a lot of the stuff that's combined with silver. So, the alloys that are used there's this little baby, 73 metals in that. Okay. So, to strip just the silver out of it, very difficult.
I had a chat with Dell Computers yesterday, and they were saying, get ready, because the metal markets and chipsets are just, you're not gonna be able to get them in 2 months.
I've heard that too. And you know what else is interesting? They're using a lot of gold now in some of the more advanced chips. So, and also the fingers on the cooling towers of the AI are gold plated as well. And I found that to be interesting.
Well, gentlemen, this has been enlightening, but I got to get running.
All right. Nice meeting you, my friend.
Peter, I love following your stuff. Keep going, man. You got a great.
Thank you, man. I appreciate it.
Thanks, Steve.
See you, Steve.
Yeah, I mean, I'm going to, Peter, you are the chairman of AU Secure. I'm going to let you talk a little bit about AU Secure and what you guys are doing. Have at it, my man.
Well, we're trying. It's not easy to meet demand. I'm the head of offshore development. I'm dealing a lot in the Midwest and from the North American delivery side, but in Asia and through the Middle East, I have a fair amount of viewers between CNBC, Bloomberg, and the like. And I try to get out to people what's happening. There's a great thirst for knowledge, and I try to present to people the facts, which is rather unusual when you look at what's on social media. And I try to deliver reliable and certified metals, and we've been doing that for a very long time, and we will continue to do so.
Yeah, and if you don't just do gold and silver, you also have rhodium, you have platinum, palladium, you have everything.
Right. Well, the thing is that I've always felt that demand drives commodities, and platinum palladium's usages in, let's say, for example, catalytic converters. When we saw a pullback and a big push in the EVs, I knew that platinum palladium's demand would go down, which it did. We stepped away from it. Then it started to base. And when Trump was elected and we saw less demand for EV, the credits for EV cars go away, I started putting people into it. And actually, you knew on this show, I told all of our viewers here, time to step into platinum palladium, and it doubled. So I got lucky. And, so we have those, and rhodium as well. And it's involved in a number of things. So I have those because when people come to me and want to create a portfolio, I look and see what demand is. If I see platinum, palladium, rhodium look like they're going to have industrial demand, I feel you should own it, so I put it in their portfolios.
Okay, so talk to me a little bit about what the needs are for rhodium and platinum, things that we don't normally know. We don't really understand rhodium or what the needs are for those
right. I think let's just do something somebody can wrap their heads around real quick, which is NO2, which is a gas which is toxic. It's not a good thing to be breathing. And so we have the catalytic converters, and they run the exhaust from a diesel and or a standard car over a suspension of these metals, and it scrubs the pollution out, and what comes out of the tailpipe is cleaner, and it works very, very well. And it has been one of the larger recycling institutes. Yeah, we see as the cars get old, we see, and they're going to the scrapyard, they cut the catalytic converter off, they ship them out, they break those in half, they take them out, and then they recycle that. And it's a big number. It's almost 20% of platinum palladium now. So we're seeing a lot of demand for that. And that has now faded. The electric cars have pushed into it. They're about, 13% in China now, I think. It's a big number, I think. And so we're seeing a small amount here, and that's receding a bit now. But so I'm looking for a pickup in the economy in the next couple quarters. I think we're going to be seeing more trucks and more cars being sold, and we'll probably be active in platinum palladium again, Steve.
Yeah, and I always know when the markets are getting hot for copper and those kind of companies, or those kind of metals, when crime goes up, a theft of air conditioners, and I'm like, oh well, there we go again. There's a reason why they're running and stealing stuff is because the price has gone up, right? We're not seeing that right now, are we?
Well, no, we haven't seen that in a while. I think also the regulations. That was one of the things that all of us were pushing for in the metals business was the scrapyard that said, hey, you just can't have people walking in with 17 catalytic converters in the back of their pickup truck. Come on, guys, call the cops. Let's get these guys in jail. So what they did was, in a lot of the big scrapyard, they just said, look, unless you could show us where you got them or you got a receipt, we're just not going to take them. And that really put a nick in that crime wave,
Very cool. All right. So obviously, Pete, I asked Steve Flanagan, I've asked several people. All right, let's circle back, go back in time and history, and just open up that brain a little bit. how did you get started trading on the floors in Chicago? How did it all start, man? Tell that story.
Well, you know, it's funny. My dad was on the floor. My sister was on the floor. My brother-in-law's in the meal pit. We're a family, and it's always been family trading. Like I said, I started off doing my father's charts when I was a kid, 12 and 13. He would lay them out on the table, and I had my little mechanical pencil, and I would do the dailies for him every day. And so when I was a runner, and then I went to a phone clerk, and then when I was in undergraduate college, I would come back in the summers, and I would work on the floor. And then one of the guys who took a liking to me said, "Look, I need you to fill back months for me." So I started filling back months, which are real inactive and quiet, and it gave me a chance to learn the trade and how to hold a deck and what was needed. So it was a lifelong thing, Steve. I didn't just walk on the floor, buy a seat, and become a trader.
And back then, what did it cost to own a seat?
Oh, they were cheap. I mean, you could buy a seat for around $1 million. It wasn't a lot back then.
Yeah, $1 million was a lot back then. Didn't you say?
Well, oh yeah, but I mean, the thing was that a lot of guys that owned them would lease them, and so I didn't. Believe me, I didn't reach in my pocket and pull out $1 million. And the guy who had me filling for him gave me a really cheap lease rate, and against that rate, if I didn't fill enough paper, he'd pick it up. It wasn't a big deal to him, because it was more important for the integrity of the company. And back in the day, the only thing you ever had was your word. The rest of it was nonsense. So, if somebody sent paper into him, it had to get executed. So it was worth every penny to him,
Tell me the best moment you remember being on the floor. What was that moment that sticks in your head that you just, oh my God, that was the best time ever, or a moment in time on the floor that it was very memorable to you?
Well, I mean, you remember the good and the bad. The good part was one of the things I'll never forget with Gene Gottlob. When an order comes in, you look at it, and then you do a hand signal, and then you confirm it, and you write it out, and then it would go get logged in. I thought it said 7, and it said 17. The slash in front of us, I was out 10 cars, and the market had moved dramatically, and I was in big trouble. And towards the end of the day, the market had settled back down a little bit. And to make a long story short, Gene just looked over at me, and I said, "Gene, I just found out my assistant had come in and told me, hey, you missed this order." And I went over to Gene. I go, "Look, I missed this order. I'm going to have to pay for it out of my pocket. It's going to take me a little while. I don't have that much money, but I'm going to do it. I'm going to stand here every day until you're paid." And he looked at me, and he took the card, and he tore it up, and he threw it on the floor, and he said, "What trade?" I mean, I was, what? Nah, it never happened, man, and that's the difference between then and now is a guy's word. It kind of made my bones on the floor too, because everybody went, wow, he got hit, and he said he's going to stand his ground and make it good. He's good with us. And he just said, okay, you're one of us now. And that's how it felt. I was like in the club after I cleaned my shorts.
and that's how Chicago was, right, back in the day. Yeah. I mean, it was a in a lot of ways we get it. It's like a locker room, and it was the good days, we could call it, but it felt like family every time you were there, right?
Oh, because it was.
Yeah,
it was. You knew what was going on with everybody. How's your kids? So and so got accepted into Notre Dame, and you knew it was family, and we were all family, and we all knew each other, and we could rely on one another. you know, but it doesn't mean that, you know, it was any less ruthless on fills. Everybody was fighting for a quarter or an eighth, you know. It was, you know, I used to leave the floor and go play rugby. And it was sort of like a rugby match, except, you know, it was on the floor, you know. So.
Now, did you leave the floor like the rest of those boys and go to Joliet and go gambling?
No, I never gambled. I never drank. I was the most boring guy. You know, I would either go get in the ring at the Degerberg Academy and do Muay Thai or box, or I would go over to the rugby pitch. You know, and you know, I just booze and gambling never made sense to me. I gambled all day with my life, you know, and my family.
People ask me that all the time. Like, I'm like, no, I don't like gambling. I move money all day long. I go, this is like the most boring thing ever compared to playing blackjack compared to like moving millions of dollars in the markets.
It just wasn't my thing, and you know, plus the fact I had so much stuff to do, and you know, and then I was working towards something, and I later on started my own house. So I had aspirations, and sitting around drinking myself into a coma wasn't one of them, you know.
I mean, but nights at series, I still remember some of those nights at series.
Oh, you know, it's funny when you got your membership. You had your badge name, you know, which is sitting over here. I still have my badge, and they opened an account for you in your badge name at series. You just walked down and go, oh, I'm gonna put it on your tab. You're like, I got a tab. Wait a minute.
You'll know about the end of the month. I promise you. Yeah.
Oh, for sure. Because they would actually send a bill to your clearinghouse. You know, that was so funny. You know, it'd be like, we took something out of your account today. You'd be like, for what? Well, you had lunch here or there, you know. You'd be like, okay. You know?
I learned a long time ago on Air Force One, pay your liquor bill. I learned that the hard way, my man.
Oh, I bet.
University of Illinois played last night. We won, I guess, and they did well. And I think we're going to do well. Chicago, is the weather turned yet in Chicago yet, Pete?
No, it's still cold, Steve. Still got snow on my back deck. So barbecuing is still a little delayed, but we'll get there.
And I'm on my way to St. Louis next week. I'm going to go see opening day for baseball. Yeah, I can't wait for that.
Oh yeah, that's right. Yeah, you're a Red Sox guy, or?
I'm a Cardinal fan. I'm red blood. My blood turns red every time I open it up. I love that. All right, Pete's chairman of AU Secure. This has been around for a long time. Knows the game. Understands metals. He has made. If you've been listening to Pete throughout all of this, you've been crushing it, folks. Ladies and gentlemen, you've been crushing it.
Right.
And you can buy AUSecure.com. Get out there, buy those metals. You can do it right on our platform as well. We will have a new way of trading also metals on our system very soon. As you know, Pete, and you know as well, the new platform is out. I think I'm going to do that one more time while you're on the show, because I think you've been part of what we've been doing for so long, Pete. And as you know, the new machine is here, and I'll share my screen, folks, if I can for you.
Cool.
There you go, and you can see the new platform. It's come out, the new website and platform. Go up there. You can go to the very top. You can click join, as you know, and it's a free account. You just click there, put your email address and password in there. If you're signed already in, if you don't know your password, you can forget your password. Go ahead, but early sign up, you got to do all the NASDAQ forms. You all know how that works and everything else we do, but fill that out, free account, and you'll get right into it. And I'm looking forward to seeing a lot of people on the platform. And of course, we've added education. You can also next week, you'll be able to also an opportunity is coming to be able to invest in Quasar Markets. You'll be able to buy shares of the company here in next week. As well as the brokerage that we have, two fastest in history have been approved. Looking forward to that too as well. And of course, we have our own merchandise page. Pete, I can't wait to see you in a Quasar Markets jacket, my man.
Hey, I'm ready, man. That'd be cool, you know. And give me a polo shirt too. I got to get one of those too.
My goodness, I love it. I love it. All right, ladies and gentlemen, we all know him. You all love him. Peter Thomas. Oops, sorry about that. Peter Thomas. Thanks, Pete, and for all the things you've done for Quasar Markets, and we look forward to the great future here together and what we're going to accomplish in the future.
Thank you, Steve. Nice being with you. So remember, everybody, We're seeing liquidation from pressure, from spilling over from all the other markets. I am not telling people to panic. I'm telling people to average down on their physicals. So that if you take anything away from today, other than a couple of old guys reminiscing, just try to remember that you don't get margin calls on physical. And if you bought some a little higher or you bought some a little lower, it's time to average in right now.
Time is your friend. Always the best pleasure, man. All right, Pete. We will see you right back here as always. You're on the show every week. Love it. All right. All right, everybody. I want to bring in the next guest. We all know him. We all love him. And institutional is important. We need to know what's going on in the world. And that company is Trade Pulse. Let's bring him in right now. Jim Batches. Jim, how are you, man?
Hey, Steve. Always good to be with you, my man.
I love it. And guys, if you don't know, Jim is the head of business development there at Trade Pulse. And we as a partner here and in the new platform, Trade Pulse obviously is in the new platform. You can sign up right in the platform as well. Jim, I'm going to get out of your hair as always, but talk to us a little bit about what's going on in the markets. Show off that awesome platform of yours, and I'll put it right up here for you.
Yeah, I appreciate you. Yeah, obviously been a crazy week in the market, pretty turbulent. And, really our platform, what we aim to do is try to give people an edge. We're really trying to get people in at the most opportune times possible. So for anybody unfamiliar with Trade Pulse, we're an order flow analytics platform. Essentially what that means is we provide real-time market flow data. We provide real-time order flow data. We also have our own AI-driven indicator to help give you even a further insight in how a stock may perform. So, really we're trying to provide the most up-to-the-minute real-time info so people can make the most informed decisions for themselves and attain information that may not be readily available to the general public. So figure we share a live example today on our platform and really how you can best take advantage of it. So as you see, Steve, you got pulled up there for SanDisk today. So this is live on our platform. All this data is updating as we speak. So I'll go through some of the different data points here, really help tie everything that we're looking at together. First thing I'd want to point you to is the black line there that you see. That is the stock price for SanDisk today. So again, this updates minute by minute in real time. So you know how the market's moving for SanDisk, or, if you wanted to search any other symbol, you can see at the top here, we have a little search bar if you wanted to track the order flow for any other stocks. So again, black line's the stock price. You'll see that light blue line basically running with the price there. We call this our large deal flow data. So this is capturing all the big money that's been coming in for SanDisk on the day. So this is really your institutional buying, your hedge funds, mutual funds, really any orders over $100,000 is really what we're quantifying there under our large deal flow data. And then you'll notice this red shade here. It's taking up a lot of the screen. This is the momentum flow data that we track on the retail side. So this is capturing the intraday sentiment there. The red shade indicating that there's been a lot more selling than buying. If you were to see more buying than selling, you would see some green shade up here. But as you see, as a common theme for the market this week, it's been a lot of selling. And then lastly, you see this vertical green bar here, center of your screen. This is what we call our power inflow signal. This is that AI-driven indicator I just mentioned a moment ago. This only gets activated for select stocks in our platform daily. Any stock that we've seen a real significant shift in the order flow from negative to positive is when you would see this signal activated. So, we track over 2,000 stocks on our platform. We only provide around 10 to 15 of these per day. So it's a pretty significant indicator, and it's really specific to the order flow that we're seeing. So this was one of the SanDisk today was one of the stocks that have generated that signal. And essentially what we're saying here is when this gets activated, it's a bullish trend indicator essentially. We're expecting that the stock has a very high likelihood of rising in the short term following that signal. So that's what the power inflow signal is there. So, looking at this example a little bit deeper here, you'll notice SanDisk opened up around 772 this morning, and you can see it's been a pretty steady drop throughout the day in the first couple of hours of trading. And along with that, you can see the large deal flow data, that light blue line we just touched on. You can see how that has been in a steady decline as well. And the red shade, you can see how it started out pretty thin, and you can see how thick the red has been throughout the morning, really indicating, the retail side's been heavy selling. Same deal with the institution side. You can see that big decline there and really how the price coincided with it. Then you see a little after 11 a.m., our power inflow signal came in just after 11. And again, what we're trying to capture here is a real shift in the order flow, a positive shift in the order flow. And you can really see that here. The red shade, you can see how deep in the red it was. You can see that trend upwards really starting to thin out and almost got into a more positive buying situation following the power inflow signal. And same deal with the large deal flow data. Again, how steep in decline it was those first couple hours. Right at the time of our signal, you can see it really flattened out and actually picked up a little bit. And you can see that trend really lasted, really as we're speaking now, the last hour or so. And sure enough, what do we look at with the price? The price was around 717 when that signal hit. And you can see a real immediate trend up and how that coincided both with the retail order flow turning positive, the institutional flow turning positive. And you can see just in about an hour following the power inflow signal, the price got up to, looks like a high of around 738. So about a 20-point increase in just about an hour. What's that, about a 3% gain there in just about an hour? And Steve, this is on a day where the stock, you can see, is down 6%. And this is really the advantage we're trying to provide. We want to get people in at the most opportune times possible. Even on days where, stocks aren't performing well, there's still an advantage to be had. And that's really the edge we're trying to provide with the real-time order flow data and, really up-to-the-minute information that we can provide on our platform.
Yeah, and I love it. I mean, what's cool is I always want to know what institutions are doing. And sometimes you just don't have the software or the ability. You can't always go down to Stuyvesant and go down to Goldman Sachs and here your software actually does that. I love it. And one of the cool things about it is you guys have perfected that, the institutional side, so that people can see it. And of course, you can get right in the platform, Quasar Markets, or you can go right to Trade Pulse itself and actually do that. Is that right?
You can. Yeah. It's always great to partner with you. As you touched on with institution data, as Steve, as we sell our data as well to institutions. So, this is data that they have that they can trade on. So really, what we're trying to do is bring it to the average trader, the retail trader, the active trader. That's really what we're meant for.
Right.
Trying to level the playing field. That's ultimately what we're trying to do by giving this information out there.
That's my saying, level the playing field. I love it. Jim, do you have any suggestions to everybody out there that is looking for that edge? I'm gonna bring it right back up one more time before I let you go. I'm gonna add it back to stage. But I look at that little green bar. I mean, that's unexcusable to not know when to buy SanDisk. It's right in front of you. It's like blasting at you.
Mm-hmm. Yeah, and like I mentioned, this we only provide around 10 to 15 of these signals per day. So this is the one example I just wanted to pull up and share with everybody because it really captures all of the data points that we provide. But if you had just specific stocks that you wanted to track and you just wanted to see what the order flow was doing and act based off that, you could use the platform that way as well. As you see on the left-hand side here, we do have a section of our power inflow. So this would show you all the different stocks that have generated that signal today. And moving further down on our list here, you see top flows. So again, during a period where there's been a lot of selling, we actually do provide a list of the top 30 stocks that we're seeing the strongest buying power on the day. So we separate it out through our data points. So you see the large deal column here, momentum here, and then we sum it up with our own score to show you, which stocks in total have the strongest buying power. So, I would imagine if we went down the line for these, that black line that you see, the price, we would probably expect that to be ascending in most situations here because, again, these are the stocks that are showing the most strongest buying power on the day. So there's various ways you could use it. If you wanted to check our platform for the signal itself, you could do that. If you want to see, hey, which ones are performing the strongest just overall in terms of buying power today, you could do that. You could sort by momentum or large deal. So if a certain order flow data point meant more to you and you wanted to see, hey, what are the institutions buying today? You could sort by large deal and see which ones have had the strongest buying power there. And
I love the spark lines. That's the tech side of me, the techie side of me, loving those spark lines coming out. I helped invent part of that. I love that. All right. Well, okay. So Jim Batches, as I've been saying all day on the media day here, thank you so much for partnering with us. This is what it means a lot to Quasar Markets as we move forward in the new platform, as I've been showing, the new new website that's out now. And but nothing means more than the partnerships and the ability to forge the future ahead of us, right? In order to do that, those partnerships had to happen. And I appreciate Trade Pulse and everything you guys have done over there. And all the success on both sides here is definitely dear and dear in my heart.
Likewise, Steve. You've been with us from the beginning, man. So, we love it. We love being with you. We love being able to share our platform and likewise yours. So, looking forward to a long-lasting, beautiful relationship.
I agree, Jim. Jim Batch, everybody, business development manager at Trade Pulse, knows his stuff. Give him a hit, give him a shot, and go click on Trade Pulse. All right, Jim, and I'll see you right back here next week, my man.
Can't wait. Appreciate you, Steve.
All right, everybody. This is where I get to have some fun. I'm going to bring in two of my favorite people now on the planet because, as I've said a million times on the show, that the only way that Quasar Markets works is the partnerships that you have. And obviously, that partnership would not have happened if it had not happened for Kiwi Tech. And I'm going to bring him on the stage first. So everybody welcome in my friend and business partner and brother, pretty much from another mother, Rakesh Gupta, CEO of Kiwi Tech. Rakesh Gupta, I see you got the memo of wearing pink today. I like it.
Hi, Steve. How you doing? Yep.
I'm
My favorite
good.
color.
I love it. I love it. If you don't know, folks, about Rakesh has amazing parties. If you're able to get on the guest list. But what's interesting that Rakesh has said to me over many, many times is I don't invest in things, I don't invest in places, I don't invest in businesses, I invest in people. And Rakesh has invested in Quasar Markets and the idea, and not just myself, but the people that we're bringing here and trying to help educate, show the right way of doing things. And Rakesh, from my bottom of my heart, man, thanks for being a part of this roller coaster we've been calling it lately, huh?
Yeah, thank you. And thank you for making us part of the journey. It has been a roller coaster headed up in the positive direction. So
and the stock price is going up, my man. I love that, right? I'm going to get out of your hair. I'm going to bring in my other friend and partner here on the business and let you guys talk. That is Ron and Sonnen. I'm super excited about that partnership too. So I'm going to bring Ron in to talk, and I'm going to let you guys have a chance to talk together, my man, and interview it.
Hey, Rakesh.
Hi, Ron. How you doing?
I'm interviewing you.
How's it going?
Good. How are you?
Hey, Ron, I'm not hearing you.
I've got my
Is it
mic
on my
on.
end?
Let's see. You hearing me now?
No, not now.
No?
Nope.
It's very bizarre.
Well, I hear you both. Can you guys both hear me?
Yeah.
I think Rakesh lost some sound here, Rakesh, on your side. But it's okay though, Ron. I think we talked about this, the partnerships, that you have to have in this business. And when I came to you about it, you're like, "Oh yeah, I'm in." And when I look at it from that perspective, what is it that you also want to see in regards to the forward thinking of the business?
Well, I think it's not just that there are basic elements of business news that I think can be broadened, deepened, and we could travel into corners that aren't traveled in currently. But I also think that there's an enormous opportunity to disrupt the industry, broadly speaking. If you see what's happening, with not just our competitors, but even in the general news business, today's layoffs at CBS, the shuttering of CBS Radio, which has been around since 1927, serving 700 stations. There's a new model that's required. And my question is whether or not legacy broadcasters, linear cable, can reconstruct the business in such a way that they remain competitive while adding value. It's a really difficult balancing act, I think, for a lot of them. And the cost structure, both on the, and I'll be blunt about this, on the talent side and then on the legacy tech side, is hard to support in this environment. And I think when you start from scratch, you view this, through an entirely different lens. And I think while the content is supremely important, and there's nothing that replaces, high and higher quality content, the opportunity set around new media, I think, opens the door to a new way of thinking about how we integrate all these tools when it comes to platforms, when it comes to predictive markets, when it comes to AI analytics, and incorporating those into programming in ways that haven't been thought of before.
And I'm gonna bring back in the higher analytics, Rakesh Gupta. Rakesh, can you hear us now?
Yeah, I can hear you very well now.
I'll step out. You guys have a nice chat.
Thanks.
Okay, thank you. Hey, Ron, how you doing?
Hey, good, Rakesh. How are you?
Very good.
Good. So what are you thinking here? So what's on your mind when you look out into the future of platforms and the integration of platforms, digital video, and really remaking, I think, from scratch, if you will, or at least I should say starting fresh with new business models in the space?
Yeah, I mean, I think AI is dominating every conversation these days, right? Whether it comes to software, it comes to services, it's entering our lives in so many different ways, and hopefully for the better. I've heard very optimistic viewpoints from people that are thinking about this and thinking about what it brings in the future, especially with some guardrails. I think it has a potential of having a very positive impact on society in general. So I'm optimistic about it.
And I think it has, interesting use cases in this business with respect to real-time fact checking, with respect to adding depth to coverage, to keeping even the folks in my chair honest by having a kind of a reactive component that, really kind of not just fact checks, but really also provides opportunities to access, deeper content while we might be live streaming. And so the viewer could be better served by that. That was the original dream of the internet, that you would combine it with a media service and that you would have instant access to, much deeper content. And that was never really fulfilled. It was never really blended. The AOL Time Warner experiment failed, but it seems like the technology has become sophisticated enough and integrated enough that you can pull that off in this environment. Nowhere is that more important than in financial and business news, because you need that data so badly.
Yeah, I think that's true. And I think what's happening with generative AI is that it's very good at working with unstructured data, and it's advancing very fast. The AI models are advancing very fast. They're coming out with new versions of ChatGPT and Claude on a very regular basis, and trying to
I'm playing with both right now. So yeah.
So I think that's and generative AI is just the beginning. There's going to be other advancement in AI, but just the fact that it looks and sounds kind of human-like in terms of its interaction, because it's pulling content and putting it together and in a nice, coherent fashion from unstructured data, is interesting.
Yeah, I've been fascinated by the speed with which I can ask a relatively complex question about business models, about leverage buyouts, about things like that. I've been playing with it in a variety of different ways just to see what it can do. And I did an LBO analysis of a publicly traded entertainment company, just really for giggles, and it came back and all the numbers were right, because I checked them against publicly available data, and I checked them, it can't kick the tires. It can't go in the office and see who the good employees and the bad employees are necessarily, or who needs to stay and who needs to go. But the analysis that a financial expert would do was effectively replicated by this, even so far as to give library values around content, and it was all spot on. It was amazing.
Yeah. I think when it comes to public companies and public equities, it probably does a better job. When you look at startups or new business models, it's a little less reliable. I've tried that with startup business models and tried asking. I tried it with ChatGPT, and I got different results, wildly different results on different analysis projections of what would happen. So
yeah, and it's funny because Chat and Claude kind of respond to your prompts differently, which I also find interesting, in the sense that Chat is easier and Claude makes you work harder at phrasing your prompts. But
Right.
it also has the delta between. It's funny. I just did this morning. The delta between projections for the very same business model were wildly separate. They were very, very different by
Right.
orders of magnitude. And I'm not sure if it's my language or whether they misperceived what I was asking or whether one was right and one was wrong.
Yeah, I think it's just the way it's pulling the data together. And what I found is with ChatGPT, with these early stage models, if you look at an early stage startup and you ask it to do a forecast, if you give it the same question again, it gives you a different answer with different analysis because it makes different assumptions along the way. And it's kind of like optimizing. It's not finding the exact answer. It's looking at the data.
So we're going to have to figure out how to use this properly in this venue, right? Because we don't want to misguide anybody.
That's true. That's true.
When you're looking at the markets right now, I mean, we talked earlier in the day, about some of the inherent risks in both public and private markets right now, and I have concerns that the private credit market, is overdone, and that may lead to a financial event somewhere down the road, particularly in extension of credit to software service companies, and we know about the SaaS apocalypse and all that kind of stuff. Are you digging into any of that stuff to see if there are any vulnerabilities, given that you extend or you make investments in this space, I would imagine. And so what's your general sense of what's going on?
Well, with private credit, I do think that some of the larger funds have paid up because they're competing for the same assets, and they get into a competitive mode and end up paying up. So I think some of the larger funds are paying up. They also offer redemptions or liquidity, which can essentially end up like a run on the bank, although they limit it, I believe, to 15% in a lot of cases.
Less than that, 5 in some cases.
Oh, in some cases. Okay. So, but the smaller credit funds, it's say under $500 million, I'm seeing less of a reaction there because they have to be more conservative just by the nature of how they invest. They invest at smaller multiples of EBITDA. They charge higher rates. So a little bit more probably steady, I think, for a longer period of time. I mean, we'll see what happens over the next year or so. But I do feel that we're going to see more kind of in the large private credit space. Smaller private credit, I think, is relatively well protected. From the conversations I've had from the private credit funds that we've looked at, it seems to be better protected. At least that's my impression right now.
What are you most excited about from an investment perspective? I mean, where are you focusing your firepower at this point?
What we're focused on is acquisitions, M&A, and doing acquisitions using actually a combination of private credit from smaller funds and then equity capital. So that's our focus. I like some of the arbitrage. The fact that AI is driving back down some of the multiples actually benefits us because we see that AI is kind of pushing down software services multiples, which is mainly where we play, and people are anxious to get some liquidity, so that kind of plays well. So I think right now it's playing well for M&A. I don't know what it's going to look like later this year or going into next year. There are a lot of economic factors out there. There's we're fighting a war, or it's a military conflict. I don't know what to call it, but we're
incursion, depending on whether the president's inclined to use one or the other words. Let me ask you about the SaaS apocalypse, because we had a lot of the AI CEOs come out and simply declare SaaS as being dead, and that they're going to invade the enterprise services area, that Salesforce is going to run into trouble, or any of the other relationship database managers are going to have problems, or these embedded services are going to become obsolete almost instantaneously. It's kind of not the way software installs work, is it?
No, not at all. I mean, there's so many interconnects, and I don't think enterprises are going to rip out a major software platform and put an AI developed platform in its place from a small company. I just don't think that's how things are going to work. And I think what happens is there tends to be an overreaction. When the CEO of an AI company comes out and says that we have this model and it can build this kind of product. I mean, it can build that kind of product, but then the adoption is a much longer process.
Yeah, I mean, there are integration problems, right? I mean, because you have to strip out the entire system that you have in place that took years to install, and it's not just like a snatch and grab. You can't just get rid of one and pop the other one in, right?
Right, exactly. So that's the basic issue.
Yeah. With that said, you know, on the flip side is, you know, we've got Elon Musk saying none of us are ever going to have to work again, and we don't have to worry about money. That's even the more utopian idea that doesn't just affect the software business, but every industry is going to run into this, you know, AI event that is in some ways going to make us obsolete, but also going to make us money. And I haven't squared that circle yet. Have you?
Yeah. It's a matter of, you know, when it's going to happen. I mean, we're also going to Mars, right? But when is
Well,
that
the moon first now. Yeah.
Yeah, moon first. Yeah. So when is that actually going to happen?
I don't know why we're going back. Do you? I mean, like, we've been there. It's not like, you know, I was 8 years old when it happened, and I was watching it on TV, and it was great then. Unless
Right.
we're going to be mining it, or as Elon says, putting data centers in space. I'm not quite sure what the end goal is there.
Yeah, I think it's to have more of a commercial base there.
Yeah.
But it's a little hard to inhabit the moon, so we'll see.
So you'd hit a golf ball up there, from what I understand.
I leave for 5 seconds and we're talking about Elon Musk going to the moon. I mean, like, what is going on here, man?
We're just tripping, you know.
I love this, and you know, I think that what's really cool is the three of us, I guess the three musketeers here, building this very cool business. If you guys will all stick around, I've got a really good one coming in right now, and we've been talking about partnerships, and I want to bring him in, Matt Goldstein. Matt, how are you, man?
Hey, how are you? Great to be here.
We literally have the co-founder of Dealmaker, and I'm super excited because this is part of the relationships that we've been building, Matt. And I guess I can tell everybody we partner with Dealmaker to raise some money here at the company, right?
We're very excited. Well, thanks for having me, Stephen. Ron, nice to meet you. Rakesh.
You as well. Pleasure. Yeah.
Yeah, I've been on for a while, just listening to the conversation. I'm glad to be part of it.
You know, and I look at the partnerships, Matt, and you look at the markets. They were just talking about private equity right there a few minutes ago, private credit. And what are you seeing in the markets right now when it comes to private equity? Are they turning to crowdfunding? Are they turning to the big dogs? What are they turning to right now?
Yeah, great. I think that's a great place to start. And I'll give a bit of background about Dealmaker for those who don't know. Dealmaker is a fintech. Dealmaker is a platform where founders raise capital. And those founders are focusing mostly on retail investors. Yeah. So I'll get into the whole background of Dealmaker and how we got to where we are today. But the biggest trends that I think are relevant for this conversation is an absolute explosion in retail capital formation over the past 5 and even go back, 10 years, right? There was a time where Robinhood didn't exist. Now there's 25 million retail trading accounts. There's SoFi, there's eToro, there's Webull, there's Fidelity, there's Schwab. The demand from ordinary investors to participate in the upside in the capital markets, I think, will be a generational transformation in the capital markets. And so for us, the trend of retail investing participation in the capital markets is very, very important. Our mission is to make sure we make capital formation offerings and opportunities available to the market at large, the retail component of the capital markets in particular. And in that way, I think our missions are very aligned. And I think the world we see over the next 6 months to 6 years is very similar.
Hey, man, I'm just curious, and to a certain extent, this would be a strange question coming from me in this venue at this time, but how do we, make sure that retail investors have the information they need to make an intelligent decision when at this stage of an offering, for instance, you're not required to do what you do in a full-scale IPO or even a Reg A or Reg D filing?
Yeah, very good. Hey, Stephen, got you back. So the way our platform works is effectively it's a self-marketed offering. So many people know us as the platform behind the Green Bay Packers offering, but the actual seller of product to the fans, to the retail investors, was the Green Bay Packers itself. It's their responsibility to just as the same it would be for any company doing a private placement.
Right.
It's their responsibility to provide the information to the market, and it's up to the market to choose to buy or not. Where we can help as a platform is to ensure the proper disclosures for a Regulation CF offering, for example, or a Regulation A offering. Those disclosures are posted compliantly, visibly. Every investor has an opportunity to review the same information, and those investors are frequently invited and able to ask the questions they want to ask, attend webinars, email, engage in some way with the issuer that's making the offering. And we see a really big change in the game with the internet and with the ability of offerings to be disseminated to tens of thousands of retail investors. The whole conversation around what's the offering, what is the track record of the team behind the offering, what does the size of the market opportunity, all of that conversation has now moved from where it once was when I started my career as a lawyer. And Steve, probably when you were trading, you've been graph paper, those conversations were happening in hotel meeting rooms and restaurants with a small number of accredited investors or qualified institutional purchasers who were being invited to participate in private placements. Today, we can make those offerings available to the market at large as public offerings, as mini IPOs, if you will, with what's effectively a self-hosted roadshow, and we've brought Wall Street into Main Street.
Yeah.
The Packers shareholders can't sell, though, right?
Packers shareholders can't sell. Why are you? You got a buyer?
No, I'm a Bills fan. I'd look there first.
I grew up in Toronto, so the Bills are our local.
There we go. Yeah.
And now we know the reason why nobody wants all the shares. Okay, so Matt, tell us a little bit about the barrier to entry in the in this space. When you have companies that are making that decision, do I just go to accredited investors? Do I do the crowdfunding route? How do they make their decisions?
Yeah. Well, look, our vision is for raising capital from the fans or the customers of the company to be a mainstream option in that list, Stephen. So today, founders, of course, can go to VC, or they can go to angel networks, or they can go to family offices and go the institutional capital route. But our vision is to make capital formation available for founders from the very people to whom they want to sell their products. The fans of Green Bay already, that brand has won their trust. It has won their loyalty. It has won their affinity. They want to be owners. They're opening their wallets every weekend at the gate and at the merch store. So it makes sense to make them the audience for that capital raise. And I think that's true of thousands of brands today, right? If you think of the number of founders, and yourself included, we're in an era where founders build their company by building their footprint online. And they develop relationships with the people who are going to be integral to the success of their company, whether those are customers or people who follow on Instagram or people who read the newsletter. You're building an audience. It's what you're doing. And thousands of brands out there are building an audience. So our perspective is, well, those are the people you're effectively selling to anyways. Make that the target of your capital raise, not some faraway roadshow where you tell a different story to a different audience.
Right. And I like the way you put that, but tell me a little bit about how you separate yourselves from the other crowdfunding companies.
Yeah, so we're not a marketplace. I think that's the most important thing to know about us. You can go on dealmaker.tech. You can scroll all you want. You'll never see offerings to buy. We're not out selling offerings to the public at large. We are a technology and a team that works for the issuer. So in the online commerce world, it's much more akin to the Shopify, right? The individuals are buying the shares from the companies offering the securities themselves, as opposed to, joining a crowdfunding site and then being marketed to various offerings that are trying to appeal to that specific investor base. That's the number one difference. When you're with Dealmaker, you are cultivating your own audience and you are running a capital raise from your own website, right? We call it the self-hosted capital raise. And so you're able to uniquely target the very people you are already building your story around for the capital raise itself.
And I see.
I'm sorry. Are there constraints on the issuer? I mean, in a Reg A and a Reg D, there are limits on the amount of money. Well, not in the Reg D, but there are limits on the amount of money that you can raise in certain venues. Is that different here, or is it just open ended?
No, various forms of capital raising have regulations that pertain to them. Reg D is the one everybody knows, right? The classic private placement exemption. There's no cap on Reg Ds. Reg CFs have limitations, as do Reg As, in terms of what the issuer can do in order to market the raise, who they can market to, and how they market it, as well as the amount they can raise. And there's eligibility criteria for investors as well. And our team will help issuers navigate through the complexities.
How is Dealmaker? It's interesting. I've been watching the crowdfunding space for a while, and Dealmaker's really pulled ahead of some of the companies that were the leaders. Start Engine, WeFunder, Republic, and it seems to me from the numbers that Dealmaker's pulled ahead of them. So curious how that may have happened. Is it just a different approach, not being a marketplace?
Hi, Rakesh. Great question. I mean, look, the success of Dealmaker is directly tied and dependent on the success of our customers and their ability to create audiences for their offerings, and the natural and cultivated affinity those audiences have with those brands. And the more that issuers build their audiences using Dealmaker, the more likely those audiences are to continue to invest in those issuers. And so we end up in a environment where we win customers to come on the Dealmaker platform, and they remain on the Dealmaker platform year after year after year with offerings that may start off at a single moment in time, but become 2, 3, 4, 5, 6, 7 offerings. And so our customer base builds over time the way, a SaaS company customer base would build over time. As long as we do a good job and our customers are happy, they continue to come back, and they eventually refer their friends.
And I see that you've raised over $2 billion with 1.7 million investments processed. I mean, over 900 offerings. That's a lot. Is that not, Matt?
It's a lot. It's a lot. And if you think of, the moment in time before which there was no online capital raising and where we are today, it's been a very steady progression. Go back to 2012 before the Jobs Act, and these offerings really weren't available to retail investors at all.
Right.
So it's really since that moment in time where it's even become possible for founders to raise directly from non-accredited retail investors. And as time does its thing, we expect to see much more of this activity, not less.
What's the average stage of a company that's utilizing your services?
There's a big range, Ron. There's a big range. There are companies who have $1 million in revenue. There are companies who have $100 million in revenue. The companies tend to be pre-IPO, where it makes sense to be building a shareholder base that will be loyal to that company even once the company makes the decision to become a publicly traded entity. So we have done offerings for publicly listed companies as well, but the vast majority of the offerings are pre-IPO companies.
So retail gets to be kind of angel level investor?
Funny you say it that way. What we've seen is the appetite from the retail investing market. You can segment into stages as well. There's retail investors who are interested in early stage company with stories that have not a lot of data behind them, but maybe founders who have credibility and track records that those retail investors want to back. There's retail investors who are focused on a different segment of the market. They want to see more traction. They want to invest in companies that have been around 5 or 10 years. And, as we continue to operate in this space and as the retail markets become more educated about this space, we get better and better insight into the buying patterns of those retail investors. And we're better able to advise founders what type of offerings we think the market has shown demonstrated interest in.
And how do you make that decision?
Oh, it's a lot of data. It's a lot of, as you said, we've been doing this for a long time. We have over $2 billion of capital formation. Millions of individual investors have logged into the platform and bought into the brands that we've been fortunate enough to host. And we get a ton of feedback from both sides of the market about, what the retail investor buying public is interested in supporting. And, it's kind of you've got a match on both sides. You have to have.
I was just going to ask you about that. Can you develop like an AI matching tool that, lines everybody up so that their interests are, squared off?
As I'm sure it's no secret, we've made huge investments in agentic AI, and we're seeing a lot of very transformational applications for agentic AI. It's really up to, the founders, and it's our responsibility, probably all of us, to be educating the market to the fact that, this is possible. It's possible to raise capital from a non-professional investing community. And the more we can educate the market as to that possibility, the more entrants we'll have into the space, the more we'll be able to put our data to work, the more opportunities and choice there will be for retail investors, and the flywheel will build on itself.
Yeah. And Matt, when looking towards the future, what do you see as what the investors are wanting right now? I mean, obviously AI, but is it still tech, or is it going to get back to the plumbing and the hardware and all the blue collar stuff? Are you going to be able to do that too as well?
Yeah, I think the reality from where we sit is the major trend is, or the major factor is, the affinity between the retail investing public and the particular brand that's offering. That might be in a space that the retail investor loves. It might be a brand that the retail investor loves. We've done offerings, and we've got on our website some case studies for New York City-based restaurants and cocktail specialists. And their community is diehard. They love supporting that institution. They love going and being patrons and opening their wallets to consume products, and they want to be owners. And I don't think that's a signal about the beverage or alcohol vertical as much as it is a statement of affinity between the particular consumers of that brand and that brand itself. So that's really what we focus on. We focus on founders who are building audiences for their companies. That cuts across all sorts of industry verticals. There are clusters. Same way, if you look at NASDAQ, you'll see 40% in tech. You'll see a certain percentage in healthcare. You'll see a certain percentage in consumer packaged goods. We see those trends as well, but it's much more important for us that we create the opportunity for the founders to build their specific audience and for retail investors to find the offerings that they like.
Yeah, and I think Rakesh and Matt, I think you two should get together, because Rakesh has got a whole bunch of startups, and he's going to need you, Matt, for a lot more things, man.
Great.
That's true. Yes.
How
The start
good
of
are individual investors at assessing risk? When you say it's interesting, you say they might want to go after a restaurant that they love if the restaurant's trying to raise money. That's a business with a 95% failure rate. I mean, are they fully aware of the varying degrees of risk amid the spectrum of companies that they're looking at?
I think that's the right question to ask. I mean, Steve, I'd ask you. You probably.
I'm not going to fail. What are you talking about, man? We're good to go, man.
You spent more years, thinking about trends in the capital markets, and from a retail investing perspective, what the right bets are. How do you respond to that?
Very simple. I think I would harken back to what Rakesh says. I don't invest in businesses. I invest in people, right? And I think for me, it's all about who's the CEO of that company. Can they execute? Are they somebody who sells alcohol on a daily basis? Do they have I call the pedigree, like Ron and Rakesh have in their respective fields? I'm betting on that, right? I'm going, hey, I know this person is Tillman Fertitta. We just saw David Meltzer on the show, right? And I know Tillman's going to win. I'm going to bet on him, right? I know Steve Orr's going to win because I've done it before. I know Matt Goldstein's going to do it because I've seen him do it a million times. That's what I'm betting on. And I don't call it betting. I don't call it gambling. I call it investing, because I'm not just investing what I think is my own money, but I'm also investing as you said earlier, your personality. I want to go, I'm going to eat there, I'm going to consume the food, and I want to be part owner. I just don't want to be the person having too many drinks going, I'm part owner of the company, right? I mean, that's the kind of stuff that, when I look at the future, the one thing I always look at, I'm always optimistic, right? Even if you see that 95% fail rate, that 5% is going to be the next Amazon or the next Facebook or Google. It's going to be that. And I don't, if I get one right, it makes all the other ones go right. So I'm that, and Rakesh knows that's why business is on. But the future's pretty bright, man. I don't care about the war. I don't care about it. I think the future is very bright, and I think people like you and Rakesh and Ron are part of that future. That's growing us new founders.
Yeah, I think that's amazing, man. We always say, to some extent, for someone to come on the platform and have the bravery to create an offering and market it to the retail public, without hiring an investment banker to, have quiet conversations in the corner. It takes a lot of courage and it takes a lot of optimism. And we always say to founders, you believe in yourself enough to build a business, to take a risk, to put yourself out there. Well, keep believing in yourself, in your ability to raise capital from the retail public, from the people who you're trying to get as consumers of your product or on your platform or following your Instagram. Have the confidence in yourself that not only can you win their hearts, but you can make them your shareholders as well.
Yeah, I think in general, like when you look at a startup or you look at a new business, you want to bet on a really strong CEO founder. I'd rather invest in a founder and a B idea. And in Steve's case, it was an A founder and A idea. But usually, a founder will pivot, and usually most good businesses will pivot at least twice and a good founder knows how to pivot when they need to, adjust the model, etc.
I find interesting when I talk to particularly people in my space, I'll ask them if they know when Dow Jones was founded, and Charles Dow started his newsletter in 1896. Then I ask them if they know when Business Week was founded, 1929, and it's still here. So you can get really pessimistic about environments, but some of the greatest companies in the world, even Microsoft, which was started in the 1970s, as was Apple, wasn't a great time to start a business by any stretch of the imagination. And yet, here we are trillions of dollars later.
Yeah, businesses that solve real problems for people stand the test of time. But I do agree with Rakesh. Over time, those problems change, and you have to be nimble. You have to adapt, and you have to constantly show that you're thinking not just one, but two steps ahead. Otherwise, you end up with a blockbuster, right? Huge commercial success until it wasn't.
And man, you've had your fingers
about that is a lot of those mistakes are failures of imagination on the part of existing management, right? IBM didn't believe in the personal computer. Blockbuster thought they'd never become obsolete. And Redbox, which became Netflix, killed them. And, and now we're going through that in the media business. We're going through it right now, right? I mean, all the legacy structures are being torn down, and you're trying to build new models that are, one, more sound economically, and two, leverage the technology that, separates new, more vibrant businesses from aging linear businesses.
Yeah.
Man, out of the founders that and you know lots of them, ones that use your platform, ones you haven't, what's that psychological thread that you see in all of them? What's that one thing that you see in all founders that are the same?
Oh, great question. There is a big range, of course. I think,
Mild degree of insanity.
That's right.
I mean, look, I was a lawyer for 12 years in the capital markets before my co-founder and I peeled away and started this business. So it does take some appetite for risk and adventure for sure. But I think the thing that stands out to me is unrelenting commitment. Unrelenting commitment. Because if you have the mindset that you will succeed, you have the vision, you can see the future state where you've delivered the solution that the market needs, you'll figure out the obstacles on the way. And you can't know in advance what exactly the traps and pitfalls are in between you and the ultimate destination. But if you have that commitment, if you have that relentless commitment and that drive to succeed, it's kind of a variation on what Stephen was saying. You bet on the right people, and those people find a way.
And there's a huge difference between the idea and the execution of the idea, right?
Always.
Yeah.
All things being equal, I'd rather have an A+ idea and an A+ team and an A+ execution. But sometimes you don't get all three, and you have to pick.
Do you have that all three in Dealmaker?
For sure. We've got an A+ team. We've got a great vision. And we know that this is something that the market needs, and we wouldn't have founded the company if we didn't think to ourselves, look, this world of capital formation that is so restricted to who and who qualifies to be an investor in certain companies, that's not right. And in the modern era where we live by a code of transparency and access and democratization, why shouldn't offerings be widely available to the public at large? Why should a select few get to participate in them? And it's not even a good market solution to only have certain avenues where capital is available for issuers themselves. It's better to have broader access to the market, and for the demand side of the market, it's better to have more choices. So for sure, capital formation through appeal to mass audiences and small investors, non-professional investors is a dominant trend over the next few years.
Yeah, we see private equity right now. We see all the headlines saying private equity failing, and redemptions right now, and cash on the sidelines. How are you feeling about the economy right now with the appetite of retail to actually spend that money to invest in those companies?
Yeah, we see a lot of continued signs of strength. We don't live in a private equity world where people are heavily invested in portfolios that were predicted to be worth huge multiples based on SaaS forecasts, which are now deeply under threat from AI. We don't live in that world. We live in a world where people are making small investments in brands they really care about. And quarter on quarter, we bring more of these brands to market, and we see just continued steady increase in demand from the retail investing public. Again, I think it's a matter of education and, in some respects, publicity, right? We have to make sure the public knows that brands can offer securities across the market to non-professional investors as well. We have to make sure, on the issuer side, founders and CEOs and boards understand that retail capital is here to stay. It's a viable part of the capital stack. It's a growing part of the capital markets as a set of markets. And for lots of strategic reasons, having retail investors supporting a brand can not only be a great source of capital formation, but it can be super advantageous to the brand itself. You get, a mini army of evangelists who are supporting the brand. And you see that play out on LinkedIn. You see that play out in commercial sales. You see that play out in referrals. It's been an amazing thing to watch.
Hey, Matt, Wall Street sells private credit and private equity and venture, with an illiquidity premium. The fact that, it's going to take 6 to 8 years to get in and then get out at some, presumably huge multiple. When it comes to liquidity in vehicles, or platforms like yours, what should retail investors expect? I mean, is there a vibrant market for the securities that they buy?
Yeah, great. So every, I can't speak about a specific offering, but every offering, if they're doing a good job, they're being transparent with their long-term plans. And a strong contingent of offerings on our platform have made the decision to become publicly traded entities and have IPO'd either through Reg A, which you can do, which we can talk about at another time if you want, or via direct listing, such that their shares are now freely trading on the exchanges. We did 6 on NASDAQ last year, 1 on the New York, and we'll do another similar amount in the next 12 months. So there is that opportunity for brands to start in the private markets and ultimately make their way into the public markets. There's also brands who will take their profits and distribute dividends. There's also issuers who will provide liquidity through M&A. So every offering should be diligenced separately, and founders have to be upfront about what their intentions are, but sometimes it's a function of the market opportunities as well.
Yeah. And how excited are you about Quasar Markets, man?
Well, we're excited for all of our platforms. We're excited for all of our partners.
Really? You're going to ask them that question?
Why not? Let's go, right?
We built Dealmaker so that founders could have the possibility of creating audiences, not just for their products, but also as shareholders. So this is exactly the type of thing that we got in business to support. And we're delighted to be, invited to join you on this show, and look forward to many more conversations to come.
And I look forward to bringing you to Florida, because the weather in Canada is not for me, man.
I'm in New York.
You're in Canada, New York. It's just too cold for me up there during the winter, man.
Yeah, I hear you. I'm in New York, but I think those who have made the decision to live in Florida have done something smart. So I'm with you.
Oh man, I appreciate that. And from the bottom of our hearts here at Quasar Markets, you have provided that place so that we can grow and take the dream that we have here to the world and let them actually use the platform and to build it. So for myself, and I won't speak for Rakesh, but I'm sure you'll answer the same way. Thank you, Matt. I appreciate this.
Yeah.
Well,
thank you, Matt.
Thank you. We're delighted to have you. Thanks so much.
Well, guys, that was very informative, and I learned a lot about the private equity side of this, man, and what the markets are doing, because we hear all these times about how bad private equity is, and it just seems that it's not as bad in the retail space as we think it is, right?
No, retail is spending a lot of money. I mean, they're out there. There's no doubt that they're almost, in a certain sense, setting prices at the margin now. And we've gone through cycles where it was hedge funds, then it was other interests that there was the program traders back in the 80s who were setting prices at the margin. Then it was institutions and mutual funds, then hedge funds. Retail has actually been very active in setting prices in the marketplace at the margin because they become so incredibly active, particularly over the last 6 years.
Rakesh, you live it. You lived it for decades. Building new companies and stuff. Where are we living in this time period? Is this a hard time period, an easy time period?
I think right now, in terms of fundraising for startups, and Quasar might be an exception to this, it's been very challenging. It's been 3 years now, since March of 2023, when Silicon Valley Bank melted down, and then First Republic, and it just has been quite a challenging fundraising environment in terms of angel funding, in terms of venture capital. And now venture capital funds, I haven't looked at the recent numbers, but the inflows into venture capital funds have gone down fairly dramatically. So I think general startups have had trouble. I think AI could start to change that a bit, because there's so much excitement and a hype, really, right? Excitement, and from that hype comes good companies. So I think that might put maybe venture capital on an uptrend again, and maybe angel investing in a trend again, because people have to see that they go into companies, they have really strong returns, and they have to see that track record.
Yeah, I mean,
so that's the case.
So there were 1,000 AI companies that were valued at $100 million, and there were 500 that were valued at $1 billion that were private, right? So the pipeline's pretty full. The question is, particularly in the current environment, can they make their exit? We're getting a little beat up today all of a sudden again. You got a rate spike, an oil spike, and the stock market's under a little pressure. That chills activity a little bit when the public markets are a little uncertain.
Yeah, from previous technological waves, you think about back to .com, or then then mobile after that. You had a lot of companies getting financed off hype, and then some companies emerged with real solid business models. I mean, so there were big successes that came out of those. So I think you'll see the same thing with AI. You'll see a lot of companies raising money with the hype, but then there'll be some real solid success stories that come out of it. And we're seeing that. We're seeing AI tools being built very quickly. I mean, even Anthropic, these companies are only like 5-6 years old, some of the top companies, and some of them only a couple years old.
And they're not profitable yet, Rakesh. And you look at them, not making money yet. All right. Well, with inflation, if you guys can stick around for 2 minutes, I want to bring in my friend and our other partner here, Bloomberg, Michael McGlone, Commodities. My man, how are you, Mike?
Good. Hello.
We got Ron Asana from formerly CNBC. And are you guys going to put on the gloves and get it?
We have always been respectful competitors over the years.
I love it. I love it.
Hi, Ron.
Mike,
how are you?
Mike.
How are you, Mike?
I'm good. Hello. Good. It's been a fun week.
I'm trying to guess, but I think I just saw a headline that suggested that Trump was talking about boots on the ground again in Iran, and we've got oil up $3. The 10-year is at 330, and the market's run into a bit of trouble. Is that what you're seeing, or did something else happen that we missed while we were chatting?
I think you went spot there. It's like the key theme today is we've just priced for the first hike. It's not a percentage in the U.S. in forever. Europe's already pricing for hikes, despite the global energy crisis and a tilt towards recession. Remember they did that in 2008? That didn't work out so well. And to me, that's the key thing. We have that 10-year note yield at 4.37, that bonds bumping up against 5%. That's a lose-lose going above 5% in the long bond. The key thing I want to point about crude oil is the handle right now is $97.65. We closed last week at 98. So crude and front contract is actually down on the week, despite the fact that straight is still closed. So I'm seeing significant peak eklings. Now, one thing about crude is it switched from the April to the May contract, and that's the key thing about futures. You have to go where the puck's flowing.
Yeah.
The December contract's at $77, $78 a barrel. And think about Mr. Trump. I think he fully expects, and I think he's going to get that price down to 50 by the time we get to the midterms. And the key thing I think is happening is gold has collapsed this week. And I think part of the reason it's collapsed is gold went up too much, but it sees a future of a secure straight. And I just like to point out is the thing I think that's really happening on this military side is the U.S. and Israeli forces, don't underestimate Israeli intelligence, are just going to pound and pound and pound and get harder and harder until Iran just has no more ability to harass shipping. And I think market's getting that. So we wake up Monday morning and there's not major attacks from Iran, which should be very much repressed by then. Crude oil can easily drop 10. It's set up for a $20 collapse as soon as the strait's secure, depending on how it's done and if it can be done efficiently.
But let me ask you about that mechanical thing that you said when switching contracts. Whenever you go into a roll, there's a differential in the price, and in this case, it's lower, and that happens quite frequently. And traders like Steve have played the role before. Is there a message implied in there, or is that just a function of that moving from one contract to the next?
It's both. It's the burden of crude oil that these contract at 78 right now, having to rise up to the current price. And there's a good reason it's down. Normal backwardation has been the case since basically around 2022. And you look at what's shifted. I love to look at that Dees contract because it's been traded around 10 years. When it started trading in 2017, U.S. was a net importer of about 3 million barrels a day of crude and liquid fuels. Now we're a net exporter of 3 million barrels a day of crude and liquid fuels. You add Canada in there, it's closer to 8 million barrels a day. The world's changed, and the high volume price for that contract is around $53 a barrel. My rule in trading commodities is, it's broken away, it's made a new high, but we saw this happen in 2008. Crude oil went up to 147 and ended the year around 40. I see that happening, but it's not just, so that's part of the nuances, but it's not just crude oil. It's natural gas, it's corns, it's soybeans and wheat. The whole space gets it that we can bring on supply much faster than ever, and the U.S. has a major overabundance. We have to export our crude oil, our natural gas, our corn, our soybeans, our wheat, or we have a problem, which is a good problem, but that's how the world's changed.
But you also have the tariff overlay, which is inhibiting some of that, right?
It is. It's part of what's messing with copper. Copper has switched. That's the key thing I like to point out is I'm looking for this year to be a pump then dump kind of year, and it's already happening. So the front natural gas future at the peak in January was up 100%, massive pump, and now it's down almost 20% in the year. It's at $3. Now, yeah, by January, by the end of the year, it'll be higher because it's a winter contract. Same thing in copper. Copper made a new high, pumped up to near 15%. Now it's down almost 5%. Almost the exact same amount of S&P 500. See that problem? Silver was up 63% to that peak on the year in January. Now it's down 3%. Gold was up about 30%. Now it's running roughly 5%. It's happening everywhere. It's classic pump then dump stuff. And I think this is just getting started. Remember, it's only March, only Q1. The key theme I have is we're seeing massive volatility, most notably in precious metals and energy, and still very little in the stock market. I like to point out 60-day volatility in S&P 500 right now is around 12%. That's still down almost 8% on the year. To me, that's an oxymoron. You got to pump up. It just this volatility needs to trickle over the stock markets. I think it's just getting started, particularly with bonds going down. Yeah. This to me is a year for traders rather than buy and hold investors.
In individual stock vol is way up, right? So if you look at the Mag 7, if you look at AI, you look at tech, you look at alternative asset managers, you look at banks, they're all getting killed. And it's just it's like the market's getting gutted from the inside without the averages necessarily showing it.
And I like to add cryptos to that. It's been my favorite leading indicator. MicroStrategy last year peaking and collapsing, Bitcoin rolling over, cryptos. To me, that's what's happening. Is we saw that volatility in gold last year. It warned us something was happening. And now that was the buy the rumor. Now we're seeing sell the fact. We've seen spilling over cryptos. And now it's starting to trickle down the stocks. And there's a good reason. But I think this kind of thing is, to me, this is some combination of 9/11, 2008, and 2022 all together. And the bottom line is it's hitting with stock market volatility very low and stock market cap to GDP near a 100-year high. At least it was a couple weeks ago.
Just one more question from me, and then I'll let everybody else talk. Why is heating oil ripping on the first day of spring?
Oh, there you go. It's all the distillates getting ripped, and distillates. I like to point out heating oil's one, but that's tame in the U.S. compared to what's happening in natural gas in Europe. TTF is up 100%. Heating oil definitely up 115%. It's a refinery issue because we have an excess supply, but we do have to import some. But also that key thing, it's diesel. Diesel is pumped up above $5. Right before this happened, is running below 4 on 350 or so. And the last time it really was above 5, it peaked in 2008 about 580. That's the grease of the global economy. So if you really want to hurt the economy, hurt consumers and consumer sentiment, you pump diesel, pump gasoline, and you drop stocks. And this is a worst case scenario right now for consumer sentiment and for our economy.
And Mike, keep talking because oil has dropped $2 a barrel as you've been talking. We're down to 97 quarter now. So keep talking, my man. I love this.
We almost touched $100 about an hour ago.
Yeah.
So my latest headline is I'm just writing, kind of get to editorials. I think you got to stick your neck out. Might as well take some risk. I think that 120 about peak in WTI is going to go down in history is very similar to 130 in 2022 and 147 in 2008. And here's the big difference. To that peak in 2008, we all saw it. I just remember when gas went above $4. I was a trader, and then I just started selling more and more stocks and buying defensive stuff. To that peak, crude oil was up about 50%. This year, it's been up 100% in the U.S. Okay, so that's worse than that. And we've also had like the retail price of gasoline right now is up 40% so far this year. It's only been a few months. In 2008 to the peak, it was up 35%, and then it rolled over. So to me, this is a worst case scenario. And the bottom line is stock market volatility is a lot lower than it was back then in 2008. And I'll end with this. In 2007, stock market cap to GDP was 1.2. It ended the year at 0.6, and right now it's 2.2.
2.2, yeah.
So are you looking at stagflation?
No, I think this is a classic post-inflation deflation kicking in. What happened in 2008? 2008, CPI peaked in July at 5.6%. It ended the year unchanged. And 2009, it bottomed at minus 2%. Right now, CPI is 2.4%. So sure, it's going to spike on a lagging measure, but that's what we did in 2008. The Fed was smart enough not to tighten. They just held steady. The ECB hiked, and then everything collapsed. So to me, this is how it works. But also, there's a significant reason this happened. But the bottom line, I like to point out when people, I love these pie in the sky outlooks for crude oil to stay above 100 in U.S. or 129 or something. That's a global recessionary trajectory, and it's basically has to be different, because what crude oil always does when it pumps, it brings on the supply, curtails demand, tips things over to global recession, rinse and repeat, and then collapses. And the difference this time is once we have some kind of secure straight, which I think is going to happen very soon. I mean, we know what happens with, we have the most powerful military forces on the planet, Israel and the U.S., and there's some pretty significant intelligence. I never underestimate Mossad here, and U.S. Marines, you don't underestimate. They're just going to keep pounding until Iran has no ability for offense. I don't see that as, it's been a major faux pas to have the strait closed, but now that it has, it's going to, I think, accelerate post-inflation deflation. So the rest of the world, as we come out of this, is going to have a much more of a global recessionary trajectory. And just think of the kind of data we're going to get 2, 3, 4 months from now when we sense consumers looking at their gas prices and seeing the stock market. And I know most of the conversations I'll be hearing is, yeah, honey, cut off the spending for a while until we see this.
Yeah, Mike, let me ask them, though. If you're going to go post-inflation deflation and use 2008 as to an extent, an example, there was an intervening event, right? There was a financial market event that triggered the recession, or however you want to characterize that downdraft, which was systemic. You know, that was a big deal. Is there something in the middle of the inflation deflation event that is the catalyst to go in that direction?
Let's start with the world. 10-year note yield in China is 1.84%. That's pretty severely deflationary, despite the fact they're running debt to GDP near 300%, and their money supply is running 2 times what it is in the U.S. So they're doing what Japan did in the 90s. We lived through that, remember. They're doing everything they can to fight. Now they're getting hammered. Their export market's drying up. Europe's pushing back on them. I mean, we have 100% tariffs on their electric cars because they're awesome, but for a reason. Because they,
but our whole market, so it doesn't matter.
But to me, the bottom line, Ron, is everything is all about the stock market. That's when I say copper is basically the same as the S&P 500. Just knock a few zeros off the S&P 500. It's been the same for about 10 years. But that's the bottom line. The difference is the U.S. stock market's so elevated. We didn't have cryptocurrencies in 2000, and they've collapsed. They started last year. And the big difference also is what gold warned us. Gold going parabolic last year was just, to me, I look back at that trying to, I suspect to write about it from the future. That was your warning. And now we're seeing the opposite is sell the rumor.
We just had Peter Thomas on here.
I'm sorry?
We just had Peter Thomas on here from Gold and Silver. Sorry about that, Ron. Saying that gold's going to go back higher.
Oh, well, they're supposed to. That's classic case we know about bull markets. So I really enjoyed going to a lot of cryptocurrency conferences a year ago and getting booed because I said sell. I didn't say sell. I can't say. I said it's going down.
I did not boo you, Mike.
I want to be booed, but that's the key thing. I wish you would, but that's the key thing is I was in Orlando and I think it was November.
Miami and Vegas, yeah.
But it was just, did you want to hear that? As a strategist, when people get that emotional and extreme about an asset, good luck. And it's also just a classic case of human nature. It's the most important thing to do is say, yeah, it's gone up too much. No, I got that, and I've been getting that in gold all year. Now, I was a little bit early, but to me, gold and silver, the velocity of these rallies are going to put in multi-year peaks. Now, I said that almost a year ago. I was a little bit early, but now we got them. It's kicking in. I fully expect gold to head towards $4,000 an ounce, silver towards 50. These are still up big markets, but the key thing I want to point out with things like gold and cryptos we can move on to is it's basically used to be a store of value. Historically, it trades a lower volatility than the S&P 500. That shifted. The answers have changed. Right now, 180-day volatility in gold's running 2.3 times the S&P 500. That's a risk, highly volatile risk asset. And sometimes you're just supposed to be selling when they're yelling, and some of us got ahead of that.
So what are your thoughts about the future?
Well, I think this year is going to go down as a tremendous trading year and a year where it might be the beginning of a pretty significant drawdown in U.S. stocks. Now, we will get a decent relief rally when the straits close, and I think it's going to be happening soon. If that doesn't get resolved, Trump is toast. His legacy is ruined. Republicans are toast. And the next election, and not just the midterms, will be Democrats. Just almost a guarantee. This is a career-changing event. He's going to make it happen, and he's a bully. Remember, he's the leader of the world's largest energy producer net export. That's how the answers have changed from most of our past. So I think this year is going to be a year where the only place that's going to really do well are treasuries. So far, I'm getting beat up on that a little bit, but I'm losing a lot less than any other asset. So I think the way I like to look at it is Bitcoin was basically alpha for most of the last few years. Gold grabbed that alpha this year. And to me, it's a year for treasury. So to me, the bottom line is my base case is all this volatility is going to trickle up to the stock market. And I still look at that 180-day stock market volatility measure on the S&P 500 and NASDAQ. They're still hovering near 10-year lows. Now they're starting to creep higher. To me, it's just getting started.
Let me ask you, though, you mentioned bonds. So we're getting up, what was it? What did you say, Steve? 338, 337 right now? 437 on the 10-year.
4.376 right now. I just looked at it. Yeah.
Yeah. So we're approaching the highs for the year. And we just had the probabilities of a rate hike exceed the probabilities of a rate cut this morning by notable margins. So clearly some psychology somewhere has changed about the arc of where we're going. Yeah. Those markets are usually pretty good. At the bond market, so much better than the stock market to predict the economic future. Yeah. Does it shake your confidence in the notion that bonds will be a good buy here at some juncture?
So, Ron, one of the cool things about bonds is I've been wrong for 3 years. Now, I was wrong, but you don't lose a lot of money. You get coupons. So that's the best way to be right. Is first, you got to admit you're wrong and move on. So I was wrong about gold breaking above 2,000 for about 3 years, and I was an idiot. Finally did it, went too far. I was wrong on cryptos putting in a peak for almost a year. Now they've basically collapse and have a lot more room. So that's usually how it works for me. Or I either miss it or early. Early or wrong can be the same thing. But this to me is classic peak kind of stuff, because I do not think so. I just imagine how entertaining that would be with our current president and our Federal Reserve if they did hike. Oh gosh, that would be so much fun as people in the business, but that's not going to happen. I will call that right now, because it's just a dumb thing to do. The Fed was smart enough in 2008 not to hike when inflation peaked at 5.6% in July. They just held steady. ECB hiked, and then they ended up cutting. But to me, this is part of that.
Hiked in the prior 2 years. Pretty aggressive.
Well, they started cutting in 2007 in September, and they were already cutting. So the cycle was low. CPI peaked because of crude oil, and what happened? Crude oil takes the world down, and that's what happens now. That was U.S. centric back then. We obviously had all the housing issues and everything. This is the world now suffering, and the world's already been suffering because the U.S. shut them off from their exports. Just look at Germany, flat GDP for almost 5 years now. What's going to happen there? China struggling to export to the rest of the world. Rising unemployment. This is I think this is kind of thing that like a 1929 say scenario. I'm sorry.
They have a $1.2 trillion trade surplus in China. They're not exporting. They're exporting.
They're exporting deflation in a way. So what's happening? So they're the decisive enabler of a war in the Ukraine, according to NATO. In their best customers' backyard, and all of Europe now is pushing back. All of the rest of the world's pushing back because all those exports that used to come U.S. are trying to expand out to the rest of the world. We've seen that everywhere. And like I said, we have a bond yield in China 1.84%. Yeah, I've been wrong on that one for a while, expecting the U.S. to go there, but we haven't had the one key trigger, just a 20% drawdown in U.S. stock market. But I think it's from the macro. It's China is who imports the most from the Strait of Hormuz. China.
Well, and Japan, yeah,
and India,
and Japan, but the most 50% of that mostly goes to China.
Yeah. Backwardation to contango, future, right?
Okay, so that's going to happen, I think, near a bottom. So here's part of being wrong. When crude oil was pushing above 100 in 2022, and everybody was saying it's going to 150, and Fred, including my good friend Jeff Curry, I put out the call for 40. I've been wrong so far, but the low's 55. By this time, most people said it would have a 1 in front of it. I said, that's the problem with crude oil. It's happening in the midst of a significant paradigm shift, which I enjoy writing about at the time, meaning it's shifted the world towards, accelerated that shift away from fossil fuels towards technology, EVs. Back then, 2022, it was like 10 to 15% of EV sales or automobile sales in China were EVs. Now they're 60 to 70%. It's just going to do it again, but accelerate it. And the bottom line, though, is the price maker status of natural gas, most notably crude oil, has shifted to the Western world, led by the U.S. being a pretty significant surplus of supply versus demand. Now, there's different grades that's messing with heating oil right now, but you take Canada down to Argentina, Venezuela, Brazil, Guyana. This is advantage U.S. energy producers, and I guarantee I know what they're doing, saying thank you very much. We all know what happens. You have to go for the boom to the bust. You get to low price cure, and they all just got a lifeline where they say, okay, we all know what happens. We've been in this business for years. We go through the booms. We're heading towards a low price cure. We started a curtail production. We just got a chance to sell forward well above our break-even costs, averaging around 55 in the U.S. Thank you very much. Bring on the supply. To me, this is just getting started. And if you get that stock market to drop 10, 20%, a normal correction gets volatility pick up a little bit. That's classic post-inflation deflation predicted by books like The Price of Time by Edward Chancellor. It always happens.
He's the best.
There you go. You probably, I mean, just, and you know, that kind of stuff, it just when and how to nail it. And yeah, that's where I used to have hair too.
Yeah,
I see right.
Yeah, I just gave Edward Chancellor's book to my son's girlfriend.
Wow.
The one about bubbles that was just so incredibly solid. You know, researching all the way back to first century Rome.
I love those. I bet you.
It's a great book.
I bet you've probably read Sidney Homer's History and Interest Rates.
No, I haven't read that one.
Well, I just remember I was in the trading pits in the 80s and 90s, and that was like my staple. I just love the history of it.
Same. I wrote a book on bubbles myself, and
go
back and find out that there were bubbles in bicycles in 1895. They just weren't publicly traded companies, but there were 1,000 companies that made bicycles, and then by 1905, you get automobiles blow them completely out of the water.
Wow. Well, I'm going to look for your book. I got to read it.
I want to read that too, actually. All right. Thinking about the world right now, Mike, and thinking about the future of technology and thinking about retail and institutional trading here, what is it that you're most excited about?
Oh, trading this year. So I've been putting key levels on it. Initially, Bitcoin bumping up in the beginning of the year near 100,000 was good resistance. 96 or so is a high. Now I see that around 75. It's a tremendous leading indicator. Prove me wrong is what I think about all these markets. Stay above 70,000 for a while. Stop me out.
Let's go higher, man. Let's go higher.
No, prove me wrong. Stop me blown out. Same thing in silver. Now it's a little bit lower now. It's 100 was the key level. Copper above 6 was just, prove me wrong. Bond yields now. That's the one I'm getting. To me, it's kind of lose-lose because I like to look at that long bond. It's 4.95. Every time it gets near 5%, the duration people come and say, yeah, I'll lock in 5% for 30 years. Thank you very much. I mean, it can be a lot worse. It reminds me very much of like 2007. That's the last time we were at levels like this. And so to me, it's the trading environment that I think we should be focused on. I can't trade anymore, so I can only say it. And those are just kind of levels I've been looking at. But I think this is going to be the kind of year it's going to make and break careers. And it's only March. And the meat to next big trade is going to be when crude oil drops $20. We get a relief rally in the stock market and then realize, that's just all it was. And we start rolling over.
So thinking about the spring and the summer here and the fall and the spring's planting, farmers are nervous right now. They don't know what to plant, and I'm concerned about the farmers right now, and especially with the margins being so tight, even on planting. Is diesel fuel, right? Is all the fuel they need to go plant those that corn and that soybeans? Are they getting concerned? Are we going to have problems with inflation in the food industry?
That's their dream. I'm in is to have some inflation in prices. Now, diesel's a problem. It's not a big deal. Fertilizer is a problem, but typically it doesn't make a big difference. A normal rotation in the corn belt is corn to soybeans, and back. So we planted a lot of corn last year. Have a major overhang of corn supply left in the U.S. 2.1 billion bushels. Right. That's pretty much near the highest ever. We have a major excess supply out of soybeans out of Brazil. And I was in Covington, Indiana, booming metropolis a couple weeks ago for an all-day ag outlook. And the number one thing they need is, please, just somehow we need some form of demand to give us higher prices. Brazil is just crushing it in soybeans. A good example, a statistic on that is right now, Brazil is this year in soybeans probably going to be about 180 million metric tons. That's again the most ever. It hasn't dropped for I think 15 years. It keeps going up. To put that in context, in the past, the U.S. and Brazil running around the same 55 or so million metric tons. Now Brazil's shut up, and the U.S. is still around 50 million metric tons. We're getting shut out. So the key theme they thought is the best place right now we're looking for potential demand is from biofuels. What does that mean? It's just going to add the excess of supply we have in the U.S. So that'll help with diesel. Right now, it's a bit of a short-term thing, so I'll put a number on it. December corn just peaked around $5. It's been trading for a few years. The mean is around 450. It's a dream for farmers to get that much anywhere near 5. The cost of production is around 390, and I fully expect it to continue to drop lower. It basically needs a drought for prices to go higher this year. These are kind of wobbly things. Sure, diesel's a problem. Sure, fertilizer problem, but most of the fertilizer in corn is what's the most fertilizer-intensive crop. It goes down in the fall through anhydrous.
And we're getting some news right now that the UK has agreed to let U.S. military use their British bases to strike Iranian sites. So we are seeing seeing a pop here in oil, 98.22 now in spots here to the U.S. dollar.
100. Yeah.
Yeah.
Wow. So it looks like we got the amphibious, Marine unit that's heading from Indo-Pacific over there. There's all the talk that they're going to try and make a move on Karg Island and open the strait at the same time. It's 5,000 Marines in total. There are some estimates by military experts that they need 50,000 just to, mount a decent attempt, given that Iran's got, coastal defenses. They've got mountainous regions and the high ground to fire at ships in the region. I don't know. I mean, this stuff's making me a little nervous because as much as the U.S. military has done an awesome job, if you will, in degrading all of Iran's capabilities along with the Israelis, this is a different fight. If you decide to go on land, if you put boots on the ground, it's not the same thing as just bombing the bejesus out of a country, right?
Agreed. Well, the one lesson I learned being the father and son of U.S. Marines, you don't mess with U.S. Marines. Now, Ron, I think those numbers are a bit scary. Besson said you're going to take it. Trump said they're going to take it. I think the number one thing, that's kind of silly right now, the number one thing, gentlemen, to our leaders in Israel is you got to secure the strait first. That's priority one. Secure the strait, and I suspect they should be pounding as hard as possible. So right now it's Friday. You got to price in risk for the weekend. We have options expiration. And it's what it looks like Monday. Will we be able to see Iran still harassing its neighbors and shipping in that area as much as it is now? And that's the major mistake. That was the main thing I got wrong. I never thought when this started they would close the strait. We all knew it was coming. Price crude oil was already up 25% on the year. It was ready for it. But the strait wasn't supposed to be closed. That was. That to me is priority one. As far as what they're doing with the island, I think that's next. But let's look at it this way. This leader of the world's largest energy producer and net exporter of crude oil and natural gas needs one key thing, a top key thing when he gets to the midterms, and that's lower energy prices. He's going to get them. Now, this is only March. We have till November. Crude oil futures are already going that way. We have a bit of a spike. To me, the sense I'm getting right now today, this is kind of as bad as it gets. One of the things that is telling me that is gold. Gold's collapsed, partly because I look at gold as bought the rumor, it sold the fact, and now it's looking forward to a more secure world where here's what I'm suspecting will happen. By the time Trump gets the midterms, he'll be able to say, Iran, the straits cleared up. And by the way, this unlimited friendship between Xi and Putin have lost as allies, Syria, Venezuela, Iran, and potentially Cuba. And it's only March. So it's a long way away. But if that doesn't happen, the future for Trump and Republicans is completely toast. How much, that's a very much binary model.
I wouldn't disagree with that. I mean, I think the other question though is Kenny, at the same time, you've got the ACA subsidies that disappeared. Some people are foregoing insurance altogether because they can't afford it. Groceries still elevated. And so gasoline was just, was a topper, right? I mean, you had all these other problems that were keeping people, somewhat perturbed, and then gasoline explodes to the upside. So who needs, from a political perspective and certainly from a military perspective, He either needs to win this in a relatively short period of time, or that carries all the way through to the midterms, and he gets smoked.
Exactly. He gets smoked, and just think of the future of the Republican Party. Think of his legacy. I mean, he took a pretty significant risk here, and I think he's going to find his way out of it. But there's one of the two key measures that hurt consumer sentiment is gasoline prices going up, stock market going down, and they're happening right now. Gasoline's up more than it was in 2008 to the peak.
Ouch.
Yeah. Although in 2008 we had no EVs on the road, at least this
There
time.
you go. Good point. I mean,
I smile every
good
day
point.
going, I passed the gas station. I'm okay with it. Good luck.
Good point.
Guys.
You should have let him keep going. I mean, they killed the $7,500 credit, and nobody's selling any EVs anymime. Tesla.
Yeah, well, I just look at where this is going. Is my 2014 Chevy Volt, 12 years old now. It's a great vehicle, but I can get that same vehicle if there weren't tariffs from China at a less cost, at 3 times more efficient, and a much better vehicle. That's where the world's going, I think, as far as deflationary forces, and that's what AI kicks in. So let's think about what's happening here. Is not only do we have this sentiment thing, but it's a classic case of, we all know, and like a lot of people I know, even at Bloomberg, is we got to fight about a fight with AI potentially taking jobs and crushing inflation. And to me, this is part of that blip in the trend. And I hope within a week we'll be able to say, yeah, crude oil is actually below 98, which is where it is right now.
I agree. Well, I'll tell you, Mike, thank you so much for being part of this, and obviously the weekly shows that you and I do. I love it, and the partnership that we have, and I look forward to a very good mutual future myself.
Thank you, Stephen. Thank you, Ron, and thank you, Rakesh. I'm looking forward to next Friday. How's the world going to change? It's going to be fun. But it's a great trading environment.
If, as I always say, let me see the tweets, and I can tell you how the world's changed.
There you go.
Yeah.
Yeah.
Thank you, Mike. I appreciate it, my man.
Thanks for having me on.
The partnerships that we have here at Quasar Markets are also going to be pushed forward by the next guy we have on here. And if you guys want to stick around, you don't have to, Ron and Rakesh, but I'm going to bring him in right now.
A little bit. I just got to take care of some business, and I'll be back.
All right, my man. Well, take it, Rakesh. If you're sticking around, I'll introduce you. I'll bring him in. Jay Sutherland. We're going to be doing institutional sales here at Quasar Markets, and Jay's going to be handling the institutional side of us. So I'm going to give you a couple questions, Jay, and I'm going to let you talk about the institutional side of Quasar Markets.
Sure, absolutely. Great to be here, Stephen.
Jay, looking at the future, you're always in those offices every single day. The big names: Goldman Sachs, J.P. Morgan, UBS, BlackRock, Blackstone. You name them, you're in those offices. What's the feeling right now inside those offices?
I think the main feeling is things are changing, and you better evolve and keep your eyes open, your ears open, and don't get complacent in what you're doing, thinking that you've got it resolved. And it can be uncomfortable for people sometimes to change. It's like when you get a new user interface on a website you're used to. It's a lot better, but you're just not used to it. And you've got to get used to it and be open-minded about it. So I think the main thing I pick up is just people do not want to be left behind because things are happening quickly.
And when you talk about left behind, are they worried that they're going to lose their jobs?
I think not necessarily losing jobs, but maybe not making as much money as they possibly could have made, not doing as well as they possibly could have done. And from the job side of things, it would be the losing customers, losing clients, losing just if they're not up to speed on exactly what's happening and what they need to be successful. That's the driver.
Yeah. All right, Jay. I'm gonna ask the question. I'm gonna let you go and do your thing, man. All right.
Okay.
Jay, how the hell did you get involved in all this fun markets and trading and being an institutional salesperson? How did you get into all this?
Well, Steve, as you know, I was an advisor for many, many years in the wirehouse world, and sold my practice a few years ago. Took a little time off, and then decided I would. I still have children at home. I said I'll get into the financial technology side of things because that's where the trend was. I could see it happening, and felt like my experience in the industry would help me be successful and believable when I'm talking to people in the investment world on the institutional side, and decided that that would be the way to do it. And so I've been involved in that with several different financial technology companies. I met Steve along the way, and saw what he was doing with Quasar Markets, and see that it's potentially a game changer. And I wanted to get in early. As they say, it's best to get in early in things that are going to be successful. So that's how that all came about.
Yeah, and I look at the future of institutional sales and institutions themselves, and there's a place for all of this, right? I get that retail is trading quite nicely, and they're doing their own thing with other platforms, and they're doing their thing. But I'm telling you right now, I think institutions are going to be back on top soon.
Yeah, I think you're right. I think you're absolutely right. And because information and the ability to make quick decisions when you need to make them, you don't want to read about it on a Yahoo chat board or something like that.
And 85% of retail traders are losing money. But I get the fact that they don't want to give it to their quote real estate advisor, their broker, their institutional advisor, their whoever they have for their robo advisor. They really are tired of losing money, and they're seeing it on a basis.
It's the old saying out there, penny wise and pound foolish comes to mind. And really, at the end of the day, you need something that is, and firms are going to help you make better decisions and take the emotion out of those decisions. That's so important. And I know that I've talked to a lot of traders and traded myself, is that your biggest enemy is yourself when it comes to trading. So if you have even Tiger Woods had a coach. And so keep that in mind. It's
his dad. Right.
A way to help him. Yeah. No, he had a coach when he was on tour, helping him. So that's important.
And I saw Fuzzy every day when I were at the PGA Tour. All right, so let's talk about it a little bit. Quasar Markets, my man, we have done it. So we built the platform, we built the website. It's now live, as you know, and we just had Dealmaker on, Jay. So the retail can now buy, and institutions now that aren't part of us can now buy shares of our company.
Right.
Next week, and we now have merchandise and everything else. We did this in 2.5 years. Name me another company like that. You've seen them all.
Yeah, no, I haven't seen anything come together so quickly. And what I think we're going to ultimately see is this could potentially be, Quasar Markets is almost going to be the Kleenex of information and decision making, and being ahead of the game is really what is the potential for it. That's where I see us heading.
Yeah, I agree. And one of the things I've talked about all day today, and it's been my thesis for 30 plus years, is that I want to bring institutional people. I want to bring people that actually are in the business all the time, actually know what really goes on behind the scenes, because I'm tired of retail losing money left and right. It was around 40-50% of people losing money. Now we're up to like 85% of retail are losing money because they're just betting and gambling and going crazy. How do we change that philosophy is what I wanted to build.
No, I absolutely agree. And I've seen it as well, Steve. Just people, if they're relying on chat boards and other things like that to make decisions, the only people putting information out there is more than likely just to benefit themselves. And you're the mark and you don't even know it.
Yeah. I love it when people say, well, my trades are free. Well, guess what? You're the product.
You're the product.
Yeah, you're the product. I've been in the markets for so long. I don't even 30. I think it's 34 years. I think this year. I don't even know anymore. But they sometimes miss the forest for the trees, right? For example, in the silver market, they just got caught with their pants down when it went to $120 an ounce, and kaboom! I was there selling and shorting, and it's going to go against you. And of course, I made a ton of money, and the market fell. I had that institutional knowledge. I knew where the trades were. I knew what the futures were. What gets the changes? What do we need to do to market to them to get them to understand that, hey, you know what? Let's raise that level of understanding. You can still trade on your own. I love that. I want them to trade on their own, but I want them to trade with a better understanding of how the markets actually work.
Well, I always like to say, Steve, that the market's never wrong. It goes up because there's more buyers and sellers, and it goes down because there's more sellers than buyers. That's the bottom line. What we want to do is provide them with some information so they can understand why that may be happening or why it may happen in the near future.
Right.
And that's what our data can provide for these traders, and using and institutions utilize it all the time, and to make sure that they're being to be successful.
Jay, one of the things that we've seen in the markets, in this technology side of things, the Kalshi's poly markets, the gambling aspect of this, and the ability to trade anything, anywhere, anytime on anything. I hate that, right? I think that's exactly the opposite of what the world should be, because people are losing money, they are gambling, and we are investing. We're not gambling. And what do you think is going to happen in the future with the companies like Kalshi and Polymarket?
Well, I just think that gambling is just the house always wins. Keep that in mind. And you're just a product in that respect, not an investor. You're a product, and your cash is what you're giving them. And I think that the data we provide can provide institutions and individual traders with an edge, just that, and to get emotion out of the equation, and which is so important.
Yeah, and I've had to learn to circumspect my my own passions and get my emotion under control 30 plus years ago. What do these new retail traders need to do to get their emotions under control?
I think they need to know that they have the data that can help them make decisions as opposed to hunches, and make hard decisions. And there's an old saying out there: if you're trading, do you want to be right or do you want to make money? Right. There's two different things. And if you think you have to be right all the time, you're going to lose money. And if you can accept when you're wrong and move on, and the data is showing you, okay, I was wrong, I'm out. I think another good way to, I thought about sometimes years ago when they had those Texas Hold'em poker matches on TV. I'm no card player, but it was very interesting that the guys, when they had a strong hand, they pushed hard. And when they had a horrible hand, they folded. They didn't try to fake it through. And that's something that I've always kind of kept in mind. And the data we can provide for people gives you the information you need to say, okay, hey, I'm really right, or wait a minute, I'm really wrong. Let's live another day.
And thinking about it from the institutional side, I get to ask this all the time about, I wanted my son or daughter to get an internship in these big institutions. Are they still doing that? Are they training them the same way that they've trained them for 30 plus years? Is it technology? Are they hiring for AI? What are they doing differently now?
Well, I think not necessarily. This added AI is just an extra arrow in your quiver, if you will. You still need people involved in it, and they now have an extra, more than an arrow, a machine gun instead of an arrow there to help them be more successful and train, and just make people accountable and disciplined. And discipline is so important. And it just that's the difference I've seen.
Do they hire based on psychology profiles?
Oh, I'm sure they do. I've never gone in the hiring, but I'm sure they do. That makes sense to me.
And Jay, you have a very hard email to learn. It's just Jay at Quasar Markets, right?
Right, that's correct. Yeah, that's a tough JAY. Yeah, that's it.
I love it. We'll put everybody out there, especially the institutions that are watching right now. There's quite a few people out there watching, by the way. Look, I reach out to us, right, Jay?
Yeah, absolutely. Happy to talk with you, and I'm all ears. Let's put it that way. And then we wanted to see how we can potentially help you. And help each other is really what it comes down to.
And I'm going to put Jay's email out there, just like we've had all day long, people just putting out email addresses. And that's how we are. I've always said, Jay, that the problem with a lot of times is that, you and I can talk. I can pick the phone up and call you, but the average person just can't pick the phone up and call people. And I want to make Quasar Markets a little more open to the public and to everybody, to be able to invest in this, to be able to trade, to be able to talk to, and to bring the institutional side to the retail and retail to the institutions, and create an ecosystem for everybody.
No, absolutely. And I'm available anytime. I mean, I work from home. I'm remote. So ever since I've been remote, I put in way more hours I did when I went into an office every day. I think we all have, but that's okay. It's no big deal.
Well, it is a big deal to me because Google has said that so far I'm averaging 17 plus hours a day working. So I don't know. I feel like but look, as my grandfather always said to me, Steve, if you like what you do, you never work a day in your life. So
Yeah,
that's
right.
how I feel about myself.
That's
Yeah.
that's absolutely right. I hear you. That's
All right. Well, I'm going to show the website, Jay, if you don't mind. If you can hang out for a second, and
sure. Yeah, absolutely.
let's do that. Let's show the new website. Everybody been asking me about it all day again. We'll do it once more. We'll keep continuing to show the new site out there. Here we go. Folks, if you're watching right now, look at that. Look at the number of people watching us. But this is the new website, quasarmarkets.com. And there it is right there. Institutional financial data, world government data, all this stuff's on the platform. There's so many things to do. And I made it cheap, Jay. I made it available for everybody. And $100 a month, right? Institutional. Just click the button join right there, and you'll see right there. You put your email and your password, and click sign in. If you haven't done that, you can sign up, fill out the NASDAQ paperwork, and Oprah sign up, and you should be good to go. But once you're in the system, and then of course we built it so that you can have education in the platform. We built it with just about everything you could possibly imagine inside of the system, and all the wins we've already gotten. For the platform, the new look of the platform as well. And of course, I'll show this. All right. Yes, you've been asked a million times. Yes, you can buy a shirt. You can buy a jacket now. You can buy some pens, hats, golf. Take a drink from your new cup on Quasar Markets. Click that button. Make sure you go in there. You can actually shop. You can actually click the button and shop right now. There's all the stuff we got. Man, that's amazing. All the stuff we have. Mugs and water bottles. Mugs. I mean, if you even want to play pickleball, I think my parents don't even play pickleball. They live in the villages. You can buy the big shirts and rock glasses. What are you buying, Jay?
I'm going for the shirts and some beer koozies.
I like beer koozies. Okay, of course. There's the shaker pint glass. If you want to do that too as well, the blankets. But please, let's get this thing going. We just had Dealmaker, co-founder, on here, Matt Goldstein, and talking about the new version and how these kind of things come to fruition, right? So this is how it happens, and if you continue to work through the process, you actually get it going. Those of you who don't know, I have been talking about it, about how the new platform actually works, and I'm going to give a sneak peek preview of the website. But there it is. Look how clean that is, Jay. It's really simple now. You can buy widgets. You can do it by your phone, your Oculus, your Apple Vision Pro, your watch, whatever you're looking at. It's all in here. If you want to do sports, weather, that's how you do it. But there, widgets. You can create as many widgets you want. It's literally that easy. It's fast as can be. And you can add widgets very fast. You click a button and you create new layouts. It is that fast, folks. We built it on a platform that is literally and I was told this by NASDAQ, the fastest on the planet. So there you go. We did it in 2.5 years, Jay. I don't know the company's done it that fast, my man.
Not many. No, that's right. You've done a great job, and it's simple is important. Intuitive and simple. That's so important.
And talk to us a little bit, Jay, about what they obviously they can email you and talk to you about the platform itself. And if you're not institutions, you can still call Jay. You can still text Jay, hit him up with an email. But when we look at the future of platforms, they're looking for AI. We built that as well. Obviously, we built it on 27 AIs. Sorry if you're just doing Perplexity. Love Perplexity, by the way. They're part of us, as you know. Right? They're partnered with us. But we're going bigger. I want to go bigger, right, Jay?
Mm-hmm. Yeah, we want to go international. We want to go we're a worldwide company is what it comes down to. There's opportunities everywhere, and let's make sure we can take advantage of them. And,
let's do that. Let's show people. That's a great point you just made there. For those of you who don't know, we are approved in several countries. I'm going to put that on the screen on here. But there's drop-down menu right here. It doesn't matter what language you live in. If you live in a country like Japan, very simple. It'll be automatically in your language, but you can see it already instituted into the system. Every language, data around the world. We have a guy named Andrew Johnson who will be handling our data and the data needs we have, as well as producing the shows here. We have a marketing team, as you can see here, a brokerage. We've got all kinds of things inside the system as well. You can also see a place where you'll be able to invest in the company here coming up very shortly. So I'm very excited about that too. And Jay, I'm gonna put your email up there one more time, man, so everybody can hit you up with an email. asking you about how to invest in the company and how to be a part of the company and how to sign up and how to get that institutional data.
That sounds good, Steve. I'm happy to answer any questions anybody has, and I'll be the first one to tell you if I don't know the answer. I find out who does.
Jay, we should keep talking as oil has pushed up a little bit. Super micro SMCI has dropped still, so markets still seem to be volatile. The only way to learn about the volatility is right here in Quasar Markets.
Yeah, that's exactly right. That's exactly right.
Yeah. And if those of you don't know who the heck I am, which is by this point, not sure who in the world doesn't know who I am, but you can also click on my website too, by the way. Yeah, that's me on the floor. You can see me and you can learn about myself as well. But and Jay, and my email is very, very hard. Yeah, that's me and POTUS back in the day and people that I know and mentors. But Jay, I'll put my email address out there so everybody can hit me up, and I'll probably hit up all kinds of people hitting me up now, but I'm okay with that because that's who we are as a company. Stephen at Quasar Markets too as well. I'll put that up there. So you hit both of us up and Jay up there as well. So Jay, that's how easy it is to get a hold of us, folks.
Absolutely.
All right. I'm gonna let Jay. I'm gonna ask you a couple of questions. I'm gonna step out for a second, then you can answer the questions for them. But Jay, people are asking right now, what does the future look like in institutional trading?
Well, it's not going away. Institutional trading is going to be around, frankly, forever. And as I mentioned earlier, having the ability to have someone to keep you focused on what you're doing and remove emotion out of the equation is very, very important, because emotion is a killer of success. As we all are emotional to some extent, and that's what you have there to help you avoid that. And AI coming into the equation is helpful not only for yourself, but for the institution as well, to make decisions based on data they know is correct, as opposed to a hunch or a guess. And we've got data to prove when X happens, Y is highly likely. Those are the kind of things that help you be more successful in the investing and trading side of things. And institutions use it, and use it even more nowadays, is really what it comes down to. And the fact that we have this information from all around the world is also important, because the world has gotten much smaller in the last several decades due to technology connecting everybody, and we can know where to be and where not to be, which is important as well. And so that's also helpful.
Yeah, I love it, Jay. And once again, Jay at quasarmarkets.com. Hit him up. He'd love to talk to you about institutional sales. He'd love to talk to you about the markets in general and see where everybody is. And look, small firms, big firms, retail, they're all going to go the same route, same price, and all that structure. We built it in a way that we want to bring the whole world right to your desktop, right to your phone, right to your wallet, right to that watch, right to that Oculus, whatever you're using. You don't even need to download an app anymore, right, Jay?
That's exactly right. No, you don't. You're right. Absolutely right.
All right, Jay Sutherland, I appreciate you, and I appreciate everything you're doing for Quasar Markets and all the companies and the places and the logistics and the things that it can't be a company like ours without people like yourself. So I appreciate you.
Well, I appreciate it, Steve. And you've done a great job, and let's just keep moving.
I love it. Jay Sutherland, everybody.
All right.
We'll see you
Take
later.
care, everybody. All right.
And, one of the things that I always say around here is that you can't run a business without great employees. And so one of those employees we have with us in the backyard there, I'm going to bring him in as Andrew Johnson. I'm going to bring him in here talking about data. There we go. Andy Johnson, how are you, man?
Good. How are you? It's been a good day so far, and we're going to talk about some DeFi in a little bit here, but overall it's been great.
Yeah, and one of the things that I've said all the time, Andy, is that I want to bring the world to the right people, right? And for those of you out there that would like to be on Quasar Markets Live, as you know, we have a huge following, and I appreciate everybody out there. Thanks for the reposts, likes, subscribes, all the fun things you guys are doing. But the back end couldn't be done, the social media, without Andrew Johnson. I've give him a whole list of people to put on the show, but he has gone out there, found more people and more people and more people. And if you want to be on the show, Andrew, I'm going to put your email out there. People want to be, yeah. But talk to us, Andrew, about the process of how to get on the show.
Yeah, so you guys can send me an email. We're gonna have a list out, and you guys can kind of send an email, say what you do, what your expertise is in, and we cover all different sectors, in all markets. So if you're a sports guy, we'd love to hear your sports takes, good or bad. Even there are bad takes. Sports takes, they kind of go anywhere. But we have top oil people, top market people. We have crop profit. They cover essentially all farming data, like any kind of market niche that you can think of. We want those type of people. We don't want people who are really good marketers and they say, oh, well, I have 1 million followers, so I'm better than you. No, we want the people who don't have that big of a following. They know they're the best in their field, and we want to bring them to light. Because a lot of times the smartest people don't have the biggest platforms. And that's one of the biggest problems right now is people will sell these courses, people will sell their Instagram accounts and say, oh, well, I got the best followers, so that means I'm always right in the market. And people have found that out the wrong way and the hard way lots of times. But there's also another aspect is if you have a website, you have a module, or you have data that you think that's be useful for traders, please reach out. I will probably find you before you find me, though, because we are going to be getting all data across any market. So, but if you have an idea, you have a module that you want to build using our data, please reach out, because we want to make all modules covering all markets in all situations.
Yeah, and we talk about it from the perspective of trading too, Andrew. And one of the things that I've always said is that it's not just about getting a stock quote. I get that anywhere. It's about having real-time access. It's about having access. Oh, well, I have real-time access. No, you don't. No, you really don't. I'm giving you institutional data directly from the markets, directly from the floors. That's what separates us. We're not a third-party company. I don't believe in third-party companies. I believe in partnerships and ecosystem. I believe in partnering with the NASDAQ, which they have. Great partnership with NASDAQ. Great partnership with ICE, the New York Stock Exchange. Great partnerships that are outlasting the company. I'm excited about this. Google, Facebook, all their data. We got it, folks. And connecting it and using it. And Andrew's out there finding me data from Japan and Germany and UK and LATAM. Oh my goodness, the amount of data that comes in from those countries, and be able to see it the way that they see it in their language and see it the way that we see it in our language, regardless of who you are. Super excited about that side.
Well, I'll say too is a lot of people say, oh, we have all the data in the world and we're better than you. But at the end of the day is you can get the data, but if you can't actually use it correctly or have a system that can actually find connections in the market, their data literally means nothing. It doesn't matter. Yeah, you have different data points, but good luck trying to use it. What we built is a system where any data that you have or we have, we'll be able to use it with our machine. And that's really the difference between us and other people is we can actually use the data that we get and we find. So I think that is really the main difference upon, other startups or, my AI startup module.
And you've seen a lot of companies out there, my man. And I want to bring up this is the platform, kind of a look. Yep. Look, you can make any screens you want. This is the screen that I've got today. I've got data coming out, news coming out, access to Fred, personally, Twitter news. Look at this, how exciting this is, right? Coming in the way that you want to see it. You can have it by hamburgers. You can create the screens that you want. I love this, right? You have all the kind of news that you're interested in. We have all, so many places just have one type of news, and we've got it every which way you could possibly think about it. You can have hamburger menus.
Well, it's funny. I'm sure people on X and Twitter and whatever you want to call it have seen, I built this global monitor system, or I built this module that tracks poly market or blah, blah, blah. Okay, man, you created a great front end visual display, but if you don't have the correct data, you're just fishing for clicks. You're just getting views. But the main idea is, but we have the front end material. As you can see, we are partnered with all these different sources. We have our Quasar Markets AI, and we can actually utilize the modules that we build on the front end instead of just, holy crap, this guy changing the poly market space with his front end model. It's like, okay, dude, that's great. But his data is from 10 years ago, and it doesn't even work, and it's not even going to make
Yeah, and one of the things, you're absolutely right. This is not about attaching it to Chat GPT or attaching this to Perplexity. I mean, we've done that 26 other ways, right? It's about giving the user much better data, much better access to it, and giving them the links and giving them follow-up questions that even they didn't even know to ask, right? And I think that's that to me is the answer, by time stamping it, by giving them and all the things behind it. Way better than just, ooh, look, I've attached my thing to my data. I like Perplexity. But I got 6 other AIs attached to it, right? And letting the machine decide what's a better. You'll notice on the top here we have Quasar Markets AI. You can actually select the database that you're interested in too, right? I mean, you don't even have to go just willy-nilly it out there. Go, ooh, this is the, I want to find out this question. This answer. I want to talk to the Google Civic database as data comes in, or I know people ask me all the time about WASD reports, right? I mean, the WASD reports are attached to this, right? For basketball, baseball, football, Twitter, stock tweets, Google, rocket launches. I mean, you name it. And we have 54,000 data points. Yeah. I heard the other day, somebody said, we have 1,000 data points. My goodness, I could lose 1,000 and still be happy about that. So I'm okay with that, right? And then to be able to see in every language, you can see trending keywords, what's going on. You can also see, and you can also see sports and stocks and news. And I hear all the time, you said it earlier, Andrew, about how, this is the better prompt. We have the ability to put the prompt in the system. The prompt you think is so great, attach it to real institutional data right here.
Yep, exactly right. Because at the end of the day, like, you can have the best prompt, you can have the best front end model, but if you don't have the correct data and it's not like optimal for your module, you're just making like a project, like a school project, to show your teacher that you built something. Like, if you don't have the correct data, it does not matter. It literally doesn't. I don't know what you're going to do with your little module that people build, but if you don't have the right data, you will not win or progress in whatever.
I totally agree with that one. I agree with that one. And Andrew, I want to appreciate you. I know you're working hard behind the scenes and making sure that everything's working. And that's part of how the magic works here is the people that work for you. So, Andrew, are you looking forward to a long career here at Quasar Markets?
Hopefully, we'll see. It's up to you, I guess, right? So we'll see.
I think you'll be okay, my man. I think you're going to be okay. All right, let's bring him back in here, folks. And thank you, Andrew, once again. All right, y'all love him and appreciate him, and I know I do. It's Ron Insana from CNBC, formerly now the man, the myth, and the legend is moving the legend to the next level here now. Ron, I'm going to take a break. I'm going to introduce you to Roman Rita from DeFi, overseas DeFi, and have fun talking about DeFi stuff.
Before we talk about DeFi, just bring up a note here. We got a headline that the Trump administration is making heavy preparations for potential use of ground troops in Iran. That could explain the spike in oil prices, the spike in yields, the drop in stocks, and all that kind of stuff.
And on that note, thanks, Ron, making us feel good about life. I'm going to let it go.
Friday afternoon.
Roman, how are you, Roman?
I'm doing fantastic. How are you?
I am very good. I'm going to get out of your hair. Let you and Ron have a chat about DeFi. I love the DeFi world.
Yeah, absolutely. Thank you.
So, Roman, I'm an old guy, and like everything that I read about DeFi is from the 19th century and independent banks issuing their own script and people arbitraging bad credits against good credits with their paper currency. And that's my understanding of DeFi. Bring me up to date.
Yeah, sounds good. So decentralized finance is a permissionless financial model that's run on the blockchain. So it's very interesting because it allows you to send money without permissions, and you can do it for pennies on the dollar and in under 2 seconds. So if I wanted to send you, let's say, $100,000 right now in USDC, which is a stable coin, I'd be able to send it to you right away, right? So so that's one component of it. The other thing about decentralized finance is the ability to lend and borrow without any permissions, right? So let's say you're a Bitcoin holder and your Bitcoin is traditionally, a non-productive asset, right? It's just sitting there in your Coinbase wallet or on an exchange, and it's not doing anything for you. But let's say you wanted to collateralize it and borrow against it. Well, you can do that on different protocols that are out there, and you can do it in under a minute again, without any banks, without any permission, all smart contract based. And let's say you have $100,000 in Bitcoin that's just sitting there. Well, you can borrow, you can lend it, collateralize it, and then you can borrow a healthy loan to value ratio of, let's say, 40%, and take that $40,000. And now you've got capital that you can invest, or you can do what you need to do with it. And you haven't sold your position. You haven't triggered any capital gains. And you're in a position where you can increase your velocity of money and start generating income with that $40,000 that you borrowed, right?
So I understand that, but let me ask you about this. I mean, that capability exists today against your securities holdings, treasury bills. If you have cash in the bank, you can borrow against it at a relatively low rate of interest. Granted, it's a little different with respect to Bitcoin. What's the difference between those two functions? And when you have the volatility of Bitcoin, and even if you have a 40% LTV, how are you sure that's a safe transaction to make?
Yeah. So the difference is everything is running on smart contracts without any intermediaries, without any institutions. It's all permissionless, right? I don't need to wait for a credit check or an approval to get access to funds. If I have 100K in Bitcoin, I can get it done like that. And I have access to capital and I can move it, do whatever I need to do with it instantly. So I think that's the biggest difference. And there is risk in the sense that it is running on code. It is a smart contract, and smart contracts can be exploited and all those types of things. But
because a lot of the proponents, say that this stuff is foolproof. It can't be attacked from, like a cyber perspective. Nobody can hack you if you're on the blockchain and you've got a smart contract that's been completed between two entities, two people, that it's invulnerable, if you will, to, outside attack. Is that true or not true?
No, it's not true. I mean, smart contracts, they can for sure be exploitable, right? It's code. So if you do a bad job writing the contract and an adversary has the ability to exploit it, they're going to. So that's why you want to partner with protocols that are constantly audited, that have a very robust security apparatus. I've spent 13 years in cybersecurity personally, so I know the type of capabilities that the adversaries have. And by the way, my business partner's in the waiting room. Can we bring him on board as well, if possible? His name is Brandon.
Andy should be able to. So.
Okay, cool, awesome. So that's one aspect of it, right? And then to your second question, right? Bitcoin is volatile, absolutely, right? We're down from all-time highs of like 126, 127 in October. So the reason we borrow 40% LTV is because, even with a massive drop, and Bitcoin's not going to drop, 40, 50% in one day. It could happen over a week or two, right? It could happen over a couple of weeks, a month, right? And for sure it can go down. But you have two options at that point, right? You have the ability to either repay your loan, right? And by the way, when you're borrowing against your Bitcoin, what's beautiful about this is there isn't a repayment schedule like a traditional finance agreement, that you don't have to make payments every month. A small percentage gets taken out of your wallet every single day, right? So let's say you're borrowing at 5% APY, a small percentage comes out of your account every day. Now, if Bitcoin increases more than 5% per year, which historically it has significantly, you never have to pay this loan back, right? You can just keep borrowing more as long as you're managing your loan to value ratio. Now, the other thing that you could do is you could buy more Bitcoin and you can lend it. So when you're lending more Bitcoin, you're increasing your health factor and you're increasing your distance to your liquidation threshold, and you're in a position where you can survive that. The other thing that you could do, and this is the last piece on this, you can open up some short deltas. So you can essentially lock yourself and freeze your portfolio in time so that you're not gaining anything, you're not losing anything. And once we start talking about what you actually do with the borrowed money, that really plays into, having a delta neutral portfolio where you're still generating fees. And that's the exciting stuff.
So let me ask them. So, I take it this is different than delta hedging, right?
Similar.
Delta hedging blew up the insurance business back in, I can't remember exactly what year it was, not too long ago, where that process was undertaken on the security side of the market. It was pre-Bitcoin to a certain extent. But aren't there some risks associated with undertaking a strategy like that?
Yeah, there's for sure there's risks, right? Because, well, I'll put it this way, right? Let's say you have $100,000 that you're lending, right? And you're borrowing $40,000 in Bitcoin, or sorry, you're borrowing $40,000 in USDC against that Bitcoin.
Right.
Well, what are you going to do with that money? Well, the first thing that you're going to do is you're going to grab that and you can move it into what's called a liquidity pool, which essentially enables you to earn income every time somebody is buying or selling a specific asset, right? So you're making money off of the trading fees. So the more volume, the more trades. Let's say the market's pumping, everyone's excited, they're FOMOing in, they're buying more of whatever the asset. There's more trading fees, more volume means more money comes into your pocket. Same thing on the way down, right? When things are dropping, people are scared, they start selling. Well, it doesn't matter. It's still a transaction fee, and I'm still getting paid on the way down as well, right? The thing that you have to watch out for is your liquidity pool value will also drop, right? Because it's an asset pair. You're going in with, let's say, ETH USDC. So if the market's pumping, your ETH portion is going to increase. If the market's dropping, your ETH portion is going to decrease. So what's important is to hedge your liquidity pools and to count up deltas that you have. Let's say you're in ETH USDC pool, you count up your ETH deltas, and you open up a short position to match those ETH deltas so that you're as delta neutral as you can be during that moment, right? And that way you're protecting yourself against market direction. There's still risk with smart contracts and exploits. And Brandon, who just joined us, he is an absolute wizard. He's the head of education for overseas DeFi. We teach this frameworks and this application to individuals who want to make their crypto productive, right? They want to actually generate an income from it rather than just sitting on an exchange. So Brandon can certainly speak in depth about the strategy that he has when it comes to delta neutrality. But yeah.
Brandon, let me borrow an expression, and I don't know who I heard this from the other night, but because there's a fair amount of jargon in here when it comes to discussing this kind of parallel financial universe, if you will. What was just said to me, what does that mean in English when you engage in a transaction like that?
Well, so delta refers to the change in value of a particular investment with respect to price. So typically we buy assets like stocks, or we buy Bitcoin, we buy ETH. Those are positive delta positions because when the price goes up $1, the value of your investment goes up. A liquidity position is a little bit weird because the balance of the assets in your liquidity position fluctuates. So we do concentrated liquidity positions, which means we concentrate our capital within a specific price range. And that allows us to be very capital efficient. If we all have a limited amount of capital that we can deploy into a liquidity position. And if we concentrate it into a narrow range of price, that allows us to earn a much higher yield because we're being efficient with the capital. So when we have our position within a range, the price goes up and down. And these liquidity positions are a forced market participant. So we don't get to decide what happens to our position once we put it into the market. It's the traders who are going to dictate what happens by making the price go up and down. So at any point in time, we might have a lot of ETH in there. We might have a lot of USDC. It fluctuates. So it's hard to nail down the delta exposure of a liquidity position. Sometimes it has no ETH. Sometimes it has all ETH. And then on the other side of it, we can implement negative deltas. So a negative delta is a position such as a short position where you actually benefit as the price goes down. And so depending on the market environment, particularly the last 5 or 6 months, we've been in a bearish market. Best case scenario, we're now in a sideways market. It's not a bullish market. And so to the extent we have long exposure, we also like to at least partially balance that out with some short exposure. So if the market tanks again, well, all of the losses on our longs are being absorbed by the profits on our short positions.
So you guys are pros at this, and you've been doing it, I'm sure, for a while. With respect to regular folks, though, and again, not everybody who's watching this is in the individual investor class. There are some professionals, obviously, institutional viewers as well. Can regular folks do this, or are they better off kind of confining themselves to the places that they're more familiar with when it comes to borrowing against whatever holdings they might have, and not kind of really going through all this, process of worrying about the ups and downs of these particular assets.
What we do is, I would say, a little bit more sophisticated than your average retail investor, which is why we have a business that teaches people how to do these different strategies. But I would say our secret sauce of what we do within crypto and DeFi is what I call the DeFi carry trade. If you're familiar with the carry trade, it's typically institutional investors. They're borrowing cheap capital in Japan where the interest rates are super low, and then they're deploying that borrowed capital into some kind of a vehicle that provides a higher yield, and they're capturing the spread. That's the essence of a carry trade. For the first time, with the advent of decentralized finance, we are able to do that as just everyday retail investors. There's a learning curve to that, which again, that's why we have an accelerator program. We walk every one of our students through how to do this. So it's not something that you can just download an app and you're off to the races. But it's very powerful to be able to invest in these crypto assets. All of us in our community are big believers in Bitcoin and Ethereum and the great tokenization and everything that's coming. We all believe in the long term that these assets, number go up technology, right? But the great thing about what we do is not only do we invest in these assets, but we're able to earn an income while we're waiting for that long-term narrative to play out. Yeah.
So I understand all this. Let me ask you about the Bitcoin and Ethereum in particular. I fully understand the technological advantages to blockchain usage and creating a system, if you will, that reduces friction, lowers price, speeds up transactions, and allows for secure transactions without any intermediaries. I get all that. The use case for Bitcoin and Ethereum still, even after kind of studying it for quite a long time, and admittedly having missed the entire run up since it was $100 when I first heard about it, which to my eternal shame, I would not be sitting here talking to you guys if I just put 25 grand in.
Sure.
But walk me through the use case for Bitcoin and Ethereum.
Yeah. So the Bitcoin narrative is pretty clear at this point. The whole digital gold.
Yeah.
A lot of people understand that at this point.
Although
it's hard money.
Bitcoin by leaps and bounds in the last year and a half.
Pardon?
Gold has outperformed Bitcoin by an enormous in the last year and a half, anyway.
Sure, right. If your lens is focused in on the last year, 18 months or so, then there's been some outperformance. If you zoom out to the entire track record of Bitcoin, Bitcoin has massively outperformed basically everything else. But the value of something like Bitcoin is that it's hard money. It's arguably the hardest money on earth, meaning it's very difficult. It's algorithmically increasing the supply, as opposed to a bunch of central bankers getting it together in a room and deciding this is the inflation rate of the currency. This is the debasement trade, right? For me, the Bitcoin narrative is one thing I'm excited about. I'm way more excited about what I call the Web3 and DeFi narrative. So we're in a transition now where the entire global financial industry is transitioning from centralized systems and fiat currency into decentralized systems and blockchain rails, right? So as that migration takes place, the network effect is going to take over. And blockchains like Ethereum, BlackRock has already started building on Ethereum. They're deploying trillions of dollars of real world assets on chain. So that migration is taking place, and I want to be a part of that. That's why I want to buy Ethereum. I want to buy HBAR. I want to buy SWI, Solana, and I want to hold on to these coins for the long haul, 3 years, 5 years, 10 years. But I'm a human. I need income. I need cash flow. So that's the great thing about our borrow low, earn high strategy. the DeFi carry trade, we're enabling ourselves to hang on to these assets. We don't have to sell them. We can wait as long as it takes for that narrative to play out. And in the meantime, we can earn really nice yields on the borrowed capital.
Well, let me ask one larger question just about decentralized finance and what Brandon was just describing. It's interesting when you talk about central banks, you talk about their decision-making process and the existing system that we have, breaking away from it so there's no sovereign involved. And yet the industry has been lobbying very hard for a regulatory regime that is, for all intents and purposes, centralized around places like BlackRock and other large-scale financial institutions. Is there any cognitive dissonance there between pure DeFi and then being plugged into the existing financial system?
Well, I'm a strong believer in the great tokenization. I believe in a future where all assets will be tokenized on chain. New assets will be minted into existence on the blockchain, because that makes sense. Public price discovery, global price discovery will happen on a decentralized, global blockchain where everybody can access it. There's full transparency. That's the way global price discovery will happen. And by the way, the biggest industry on earth is finance. It's bigger than energy. It's bigger than anything else. Yep. So that migration I'm talking about, where we're moving away from centralized systems into decentralized systems and blockchain rails, it's the biggest, most biggest wealth opportunity and transfer of wealth that any of us have ever seen in our lifetimes.
And just to add to that, like the exciting piece, like what does it mean to the average everyday person? Well, it means that if I buy some Tesla shares, right? Well, they're tokenized. I can lend them, let's say. I don't know how we'll lend them. Maybe it's on Aave, maybe it's on other protocols, but I can lend those shares. I can borrow against them. I can grab that capital. I can deploy it into a liquidity pool. Or I can grab my tokenized real estate asset that I own, or maybe a fraction of it, and I can borrow against that. And all of a sudden, I'm moving capital from illiquid sectors into other parts of the economy where I am getting a better gain. And I'm doing this in a permissionless way where I'm constructing my portfolio holistically against everything that I'm managing. And I think that's very powerful because you're eliminating the amount of intermediaries that are involved. The cost is going to go down, the speed, the efficiency, all that stuff. Now, what are the implications as far as the valuation of these assets when people can get in, can get out, can move them here, can move them there? You know, I think that's it's something that we're trying to figure out. I think the industry is trying to figure out. There's a lot of big players talking about it because it is going to have an impact. But overall, I think that's the direction where finance is heading, and it's an exciting world. We're going through this evolution right now, and I don't hear too many people talking about it, right? I think once the Clarity Act passes, hopefully passes, this year, there's going to be a lot of headlines around what we're kind of talking about right now, and decentralized finance might be front and center. So it's an exciting time.
Don't discount the Genius Act, which has already passed, and stable coins are I think a much bigger deal than a lot of people think. Stable coins is, I was just listening to some commentary from Nick Bhatia on What Bitcoin Did podcast just recently, and he was talking about how important the U.S. Treasuries market really is, and how unfortunate it is that we have this Eurodollar system where the U.S. doesn't have any control, doesn't have any regulatory authority over dollar transactions that are happening everywhere outside of the United States. And the Stablecoin Act, the Genius Act, is really designed to start to chip away at the Eurodollar system to where now the U.S. and the government and the regulators here can have an impact, can have visibility on more transactions that are based on U.S. dollars, and making sure that that economic activity has the best interest of the United States in mind. So what I like to think about too is stablecoins are happening for sure. The U.S. dollar is going to continue to have a major role. I'm not one of these people that thinks that the dollar is going away. If anything, in recent times, the dollar is strengthening compared to all other fiat currencies. And thanks to the commentary I heard from Nick Bhatia just recently, I'm now understanding how important the treasury market is. Treasuries, that's the real world assets that's being talked about and being placed on chain. That's RWAs. That's the main use case is treasuries. So I like investing in the infrastructure behind how does all this tokenization happen on the future? That doesn't benefit the Bitcoin narrative at all. There is no such thing as tokens on the Bitcoin blockchain. There's no DeFi on the Bitcoin blockchain. Don't get me wrong. I like Bitcoin as an asset, as the hardest form of money on earth. But the real growth in the next few years has to do with real world assets being tokenized on chain. And the big winner there, a lot of blockchains are going to win, but Ethereum, the Ethereum ecosystem is really crushing it.
Why you're seeing the digital asset treasuries being built out the way they are.
Yeah.
And unlike Ron here, Brandon, I actually did buy Bitcoin by big time at $75. So yeah, Ron.
Hey man, listen, I was just raised differently. It's hard coming out of the business that I grew up in, where we were not allowed to trade at all for quite a long time, and then just you walk out and you have a degree of caution that has been baked into your personal system that is hard to shake.
Yeah,
you beat me, Stephen. My first Bitcoin was purchased in 2013 for $77. So
I got you beat 74,
Yeah,
75.
nailed
When I
it.
bought my first 100, 200 actually Bitcoin. It's interesting, and you talk about it. I feel kind of like Gandhi, right? At first they make fun of you, then they beat the hell out of you, and then they finally join you. And the New York Stock Exchange is now right on target with us, right? Saying, hey, yeah, we're going to tokenize 24/5. So they understand that, they're using Chainlink. I love that, the DeFi side. But, I thought I saw Ron and Son about to have a heart attack talking about DeFi for the last half hour. So I thought I'd step in and talk about your company, DeFi.
I didn't.
Yeah.
This was. I just wanted to learn more. That's all.
I love it. Overseas
Great
DeFi.
conversation.
And I think as part of being here, right, is the education side of this. So real quickly, I'm gonna share overseas DeFi and how to get a hold of you guys.
Sure.
There we go. There it is, overseasdefi.com. I'm gonna put the link up there for everybody to quickly click that button right now, so you can get a chance to see them. There is an ad right there on the front as well. You can chat with their investors as well. There it is, and you have very big names that have partnered with you guys so far, right? And you already know which way you're going. I love that side of it too. This is a really great website, guys. Really, really well done. I'm really impressed. And of course, Roman, there you are, and Brandon. And one of the things I talk about from this perspective, especially from the DeFi or from the crypto side, is that there are not a lot of people. They all feel like we're just young people not really doing a lot, right? But you have what I call the pedigree in the background. You actually been there, right? You actually know what to do, and and I love that side of you guys. So I'm very, very super excited. But I always have one last question for everybody. Please, would you guys come back and talk about DeFi on the show a lot more?
We'd love to. Yeah, it's,
absolutely. Yeah,
we'll certainly do that.
I will have Andrew reach out to you guys and make sure you guys are on the show. Yeah, what were you gonna say, Roman?
Yeah. No, I was just gonna say, this is such a we have, let's say, don't quote me on this exactly, but let's say we have 700 million crypto users worldwide, right? Of those 700 million crypto users, about 60 million are involved with self-custody, meaning they have their own hardware wallet or private wallet. And of those 60 million, 5 to 6 million interact with smart contracts, meaning they participate in decentralized finance. They actually know what happens when somebody swaps one asset for the other, right? So an immense amount of opportunity here, I would say. And it's the beginning of something great. So we'd for sure love to come speak to how this space is evolving and how our business is supporting other investors, because our mission is to teach the average, crypto investor how to participate, how to send, how to swap, how to bridge, how to earn income from a productive asset and increase the velocity of money. So as you learn about Brandon and I, we're just beyond passionate about this space. So we'd love to.
Did I miss my opportunity to make $1 billion, or is that gone? Or
it's still here. It's still here.
It's still there. I mean,
Yeah.
The velocity of money. I love it. I love it, guys. But one Bitcoin is still one Bitcoin, right?
That's right.
That's
Absolutely.
right. Guys, thank you so much. DeFi, Overseas DeFi. I love it. Thank you, Brandon. Thank you, Roman. And we'll see you again on Quasar Markets Live for sure.
Sounds good. Thank you.
Thank you, guys.
Take care. Bye.
See you next.
Well, Ron, what did you learn about the world of DeFi?
Yeah, I'm listen, it's I have my own view. It's and it's been wrong for I don't know now, since 2009. I still, as much as I study it, I fundamentally, there are parts of it that I don't understand. I'll be honest, in terms of what its ultimate use case is. I get blockchain. Listen, a friend of mine's got an ad syndication and distribution business that uses smart contracts, that uses blockchain for human verification to ensure that an ad is being seen by a person as opposed to being dumped into a bot farm. So I understand there are a variety of use cases. I think the stablecoin thing and the DeFi thing still elude me to a certain extent.
But if there's gold in the ground, we should be able to tokenize that, right? If you can't sell that asset, or you have a home and you can't sell it, you want to sell it faster. I mean, I just saw online that a guy didn't even use a realtor and sold his house faster than any person.
I like the realtor, dude.
I love it. I love it. Well, it is 3:30, and Ron, I'm happy to bring you guys on and let them know. But this is the best part of the show, where we get to bring back the very cool team that started CNBC. And Ron, I'm going to get out of your hair. And I'm going to bring them on.
That's good luck with that. Yeah.
I'll bring them on. There is the old group.
Yeah, they are.
Hi, guys.
Hey,
guys.
That was a great conversation, Ron. That was really an interesting conversation.
No idea what I was talking about. It was great.
When you become the billionaire, you know where I am.
Yeah, we live two towns away. I'm going to put this as bluntly as I can. Today's a bit of a shit show. You know, apparently CBS just reported that the administration is seriously contemplating moving ground troops into Iran. We got oil spiking up, rates are going up, stocks coming down, and oil approaching $100 again. Ty, what's your take?
Well, I just think there's so much uncertainty and fear. I mean, I think fear, it's not just uncertainty, which is what the market, the cliche is that it abhors uncertainty, but what it dislikes even more is fear. And there's a lot of that out there right now. We don't know what's going to happen. There's a lot of danger. People are dying. Innocent lives are being lost in countries across that region of the world. We don't know what's going to happen with oil. We don't know what the interruptions, how long they're going to last. And so what do you do when that happens? You sell stocks.
And Bob, it's interesting, as much as Tyler talks about, there being a lot of fear, the fear index, the volatility index is not necessarily right now reading that type of extreme fear. It's around 25, 26, 27. You got to get about 35 before people, start to think, hey, this selling's way, way overdone and people are too fearful. And particularly going into a weekend, people may just be getting out of the way and are worried about headlines, right? Robert?
Ron, I'm having a little trouble hearing you. Let me log right back in. I'll be right back with you. Give me
Sure,
1
I'll hear you the same question. We've been having this trouble all day, so it's not.
I think I hear about people's fears, to Ty's point. I was just in the Target in Closter, and people are talking about it. Every day people are talking about it. So I do think there's a lot of fear in the market. But what kind of has me on alert is that the everyday consumer and the everyday investor is starting to wonder whether or not they should be in the market. They don't think, from what I am hearing, that this will be a short conflict as they originally thought it might be. That's what we were told. Apparently, I mean, look, the troops that are on aircraft carriers going to the Middle East, it's going to take them at least a week to get there. So that pushes us up to the 6-week mark. And then they have to do whatever they are ordered to do. So think people are realizing this may be a longer term conflict than they originally believed. And as a result of that, they have to decide whether or not they can take the daily volatility. But also, we are going into a weekend. There's a lot of headline risk over the weekend. So I just think the everyday investor is starting to pay a lot more attention.
How many fresh troops are being sent to this part of the world? And Marine
5,000.
5,000 total, and a Marine Expeditionary Force. Those guys don't just sit on boats, folks.
No, they go on land. Yeah,
they go in. They are amphibious landing troops, and so you have to think that something is in the works here. We don't just do that for show.
Yeah, and Bob, we've moved. I mean, starting longer than 8 weeks ago, we were moving assets into the region. You know, at first everyone thought that was a negotiating ploy to bring Iran to the table and get them to capitulate on the various issues that both the United States and Israel wanted them to give up on with respect to uranium enrichment, ballistic missile production, all that kind of thing. It turned out to be the staging ground for a real conflict, and now we see more movement, as Sue was just saying, and Kharg Island seems to be the target.
Yeah, this is getting a lot more complicated than people thought, and the world is now focused on the price of oil. To me, what's interesting this week is just to watch Powell. The central banks are really in a pickle here. I mean, inflation is really still high, above their target. A job creation, I don't know, I would describe it as weak, but unemployment isn't really elevated. So what do? Economic growth and employment, it's really hard to figure out right now because what you guys are just talking about, the events are so unpredictable. So what do? If you ease, you erode your inflation credibility. If you hike, you exacerbate maybe the growth downturn. So do nothing, I think, made a lot of sense this week, even though I know the market's anticipating some kind of, Fed easing down the road.
No, Sue. In fact, today we just saw the probabilities of rate hike that by June exceed those of a rate cut.
Yeah, there you go. Okay, so things are changing very quickly. What's amazing though is look how well stocks are holding up. What we hit the high in January around 6% below the high on the S&P?
Maybe. Yeah.
No, it is. I looked just.
But again, we talked about this earlier in the day, so that that the averages are holding up relatively well. But when you look at finance stocks, when you look at software stocks, when you look at alternative asset managers, they're down 20 to 40%, depending on which group you're looking at.
What I'm worried about is an external event that is linked to the higher price of oil.
Yeah.
If you look at some of the oil importing countries, they are carrying a lot of debt. That debt is US dollar denominated. As the price of oil goes higher, they have to pay more for that oil. Their debt increases, but they're going to have to pay back a much larger amount of debt in US dollars. And, I keep thinking back to long-term capital management and the Thai baht. And I just feel like there may be an external event out there that's linked to oil. And then you have to look at the banks that are underwriting some of that debt for those oil importing countries. And I worry about an external event that might affect some of the banks that are holding that debt, like a BNP Paribas or something along those lines.
Yeah, Ty, that's interesting. I mean, the external event being, the contagion effect that comes from countries being hit harder by oil than we are. And that's Japan, that's South Korea, that's China. That's a whole host of countries that are more energy intensive and energy reliant on other sources than we are.
A lot of Europe who's we're going to see natural gas prices go up. And unfortunately, we're coming out of the prime heating season. But
the heating oil's up today.
My question for the panel is, what does oil at 100 or 120 do to global and American GDP growth? I mean, if there's no oil, you can't really have an economy. But if you have oil that costs $120 a barrel, it is very hard to have a growing economy. It's very it kneecaps growth, right?
But wait.
I ended up paying $6 a gallon for gas in the Inglewood Cliffs, right next to CNBC.
You were near my house.
Well, that guy's always expensive. He's the most expensive guy in the world.
Well, it was the only guy in the world, and I needed gas.
You go to the Valero in Tenafly.
Englewood is not the place to buy gas.
When people start having to pay
Yeah.
550, 575 for
bet your
gas.
ass.
They're going to pay less in groceries. They're going to buy less in groceries.
They're already not
and they
coming.
already are doing that,
Yeah,
you know, or they're going to the Aldis of the world, or they're going to the Costco's of the world. And, you know, I think we could look at a recession scenario based on the higher price of oil as it hits the consumer, and the consumer is not going to spend money because they need to fill their gas tank.
But this is not 50 years ago, though. I'm just trying to do a counterweight here. The world is a lot less dependent on oil than it was 50 years ago.
But Bob, before you go on with that thought,
that this is not stagflation.
Well, it's mini stagflation, but before you go on with that, the disruption in supplies, which there's 10 million barrels off market right now. You know, 10 million is getting through alternative means, or Iranian oil is still leaving, you know, because the Iranians are allowing it. But a 10 million barrel reduction in supply relative to 100 million barrels of demand a day is actually bigger than the disruption that we saw during the Arab oil embargo in terms of volumes in 1973 and 74.
But we don't have, it's not, I keep people throwing the stagflation word around. We do not have the unemployment levels that we had anywhere near in the mid 70s. We don't have anywhere near the inflation levels that we had in the 1970s. It's not, it's just, I'm not trying to downgrade what Sue was saying, because I think she's right, but we are less dependent on it, and this is not 1974.
So I've been referring to
I
it.
hope you're right. I hope you're right, Bob.
I've been referring to it as a mini stagflation, but the problem here with the unemployment rate, and this, again, very different environment, right? If you have 600,000 deportations and 1.4 million people voluntarily leave the United States, and the equilibrium unemployment rate is just going to hold steady if you don't add jobs or subtract jobs,
right,
the unemployment rate is not going to jump. The Fed chair said that himself. It's just we have a different environment where employment dynamics in this low hire, low fire free, you know, environment are very different than other periods that we've seen. You may not need a spike in unemployment to suggest the economy is weaker than we think.
Well, I think that's right. And when you see job growth as tepid as it's been over the last year, that's a symptom of something. And it could be a symptom, in part, I think it's a symptom of companies adjusting to the world of artificial intelligence, in part. But you've got very tepid job growth in this country, and you don't have population growth particularly.
That's a very good point.
Yep.
And so where does the economic growth come from? And that's why you're seeing, like today, I was just looking at the king of all stocks, NVIDIA, down more than 3%. The NASDAQ off nearly 3%, 2.5 or thereabouts. Fourth week in a row of losses for basically all the major barometers. And I think that Russell is now in correction territory. So
NASDAQ's about to hit it.
And NASDAQ about to hit it. I mean, I guess, you know, Bob, I know that you and I, and to extent Sue and Ron, we grew up listening to John Bogle, and in tough times like that, that's the voice I hear. And basically his thing is, don't just do something, sit there, you know. That's usually the best advice, and it's certainly what I'm doing right now in my portfolio.
Right. So the key question here is, going back to Jack Bogle, you maintain the risk profile that you've always had, stay the course. You don't try to time the markets. If you are uncomfortable with market cap weighted indices and the weighting of technology stocks, then you go to an equal weight index if you want. But Bogle would say, I think, what market is voting here on those numbers, and there's nothing wrong with price weighted indexes. I personally have never been that worried about the heavy weighting of technology stocks in markets right now. So the only thing we know, and that Bogle taught me, and I think influenced you guys as well, is market timing doesn't work. So the correct thing to do is, if your risk profile is changing, if you can't stand to be 70% in stocks anymore, that it's really making you nervous, then reduce your risk profile, go down to 60% or 50%. But that should be the long-term objective at that point, and not trying to go back out of the market.
So, it's funny, you guys are talking about Jack Bogle, who is the ultimate in just holding on to the market. I worked for a brief period, as you know, for Steve Cohen, who traded all day, every day, final second of the close, in order to scalp the last 20 minutes, trading individual components of the S&P against the S&P. Depends where your head is, Sue. I mean, some people do want to trade in time and take that shot, given that, the market looks vulnerable. The average correction on an annual basis is 14%. And so as far as the S&P is concerned, we're only a third of the way there.
I think it depends on where you are in your life.
Yeah.
I think if you're young, like your kids, Ron, my kids, Ty, your son, then maybe you go in and you have a long-term time horizon, you're going to ride it out or add to your portfolio. If you have a much shorter term time horizon, as many of us do, then it's a little scary.
Well,
You still got a long way to go, baby. You know what I mean?
What do you mean by a short
where
term?
you are in your investment life. So
I just watched the cut the other night of Jonathan Winters talking to Johnny Carson. He had just turned 60, and he said he was in the fourth quarter, maybe even OT. And that was like 30 or 40 years ago. And I'm like, no, we're not in OT yet.
No. We're just getting started.
No, come on. Well, I just turned 70, so I'm a little older than all you guys. But the important thing is, and I publish what I own. I'm one of the few people that published in my book what I own. I'm still 70% in stocks because I'm working on the theory I'm going to live to 90. And my actuarial friends say I'm wrong, that I should work on 95 to 100. That's true. That means I'm alive another 25 years. So I would not change my risk profile based on that. But if some people at 70 years old say, hey, 70% in stocks, no, I don't want to do that. That's way too much. Remember, Jack Bogle, when I talked to him in 2006, he was well retired. His monies were closer. The age of your age should be in bonds. Remember that?
Yeah.
That idea.
No, your age should be in stocks.
He was there, like, yeah. If you're 70 years old, then 70% stock bonds. Excuse me.
Oh yeah, right. As you got older, it flipped. Yeah.
I think the question also is what other investment you want to go into, given the volatility that we're seeing almost all the way across the board. So if you're uncomfortable in stocks, and you could have looked at precious metals, but I think, we've had such a trajectory to the upside in precious metals, that may not be an alternative. You may not, hearkening back to the conversation you just had in the previous half hour, are you comfortable in crypto? Are you is that a hedge? Is it not a hedge? I think it depends on where you are, to Bob's point, what assets you are comfortable in. And a lot of people are only comfortable in either stocks or bonds.
Right. I was listening to your discussion, Ron, with the Bitcoin people earlier, the DeFi people, which is very interesting. And I love how you went at that. But to Sue's point, isn't it amazing that Bitcoin was supposedly digital gold, and it turns out that gold is digital gold.
Right.
Well, now they disputed that.
People very interested in trading gold and silver.
And silver is
the number of people who ever traded gold and silver when we were around 20 years ago is zero. Nobody. I covered the silver ETF, and there had no volume at all. So now look what Bitcoin. I'm trying to get to your point here, Sue, about Bitcoin has competition now. Not just it's part of a big momentum play with everything. Not just gold and silver, but stable coins are a real competition. Prediction markets are a real competition for Bitcoin in general. And I think that's a problem, because if Bitcoin is just no longer is the shiny new object, what does it have to sustain the interest? It doesn't do anything. That just sits there. So I think there's a little bit of an issue here going on with Bitcoin. Ron, that the number of really true believers in Bitcoin, I mean the ideological people, the people who think it's an alternative fiat currency, is very, very small compared to the size of Bitcoin. It's dominated by a few big whales and a small number, a large number of retail people that have small pieces in it. And I don't think most of those people are as ideological as they think. I think they'll move on if there's a shiny new object.
So let's indulge ourselves in some reckless but always interesting speculation. What is it going to take to get the markets unstuck? And how does this all end? How do we think it's going to end?
Listen, I'm more bearish than most. I mean, an end to the war, an immediate end to the war, negotiated solution, reopening of the strait. That's the type of thing that, oil crashes, stocks go up, interest rates fall, the Fed goes on its merry way later in the year. Absent that resolution, I personally think we're in for a good 20-25% correction in the next 6 to 9 months. And, we've just started that process. Whether you get a, relief rally somewhere along the way is an open question. That happens all the time. But I think 2026 is a much, much harder year. And you guys know this, my speech title this year is Everything Everywhere All at Once. And that's what the market's dealing with,
I would agree with you, Ron. I don't think I'm quite as bearish, but I do think we've had a great run in this market, and every market corrects. This, unfortunately, is coming with a world event. The president just said, we're not interested in a ceasefire. That was the headline that just crossed down below. So, I think the war is going to be the big determiner of where this market goes, at least near term. And I personally think it's going to be a longer conflict than most people think. The question is, when does the fatigue set in, and when does everybody say, okay, I've had enough, and they throw in the towel and we start to see the market bottom a little bit? That's what I'm watching for.
Yeah, I don't do percentage declines, but as you guys know, we're due for a correction. In general, absolutely. It's been remarkable since 2022. We were down 18%, but the last few years have been remarkable, really well above normal growth at this point. So I agree with Sue. The longer the war goes on, the more problems we're going to have globally. But right now, the market's already reflecting some concerns. The PE level is now down to 20.6. I saw it this morning. So we were 22.5 on the estimates in January. So the market, some risk has already come out of the market. The tech stocks the numbers are incredible. They keep going up almost every week. I think they're expecting a 40% increase in tech earnings in 2026. It was like 30% a couple months ago. So there's a lot of risk here associated with growing earnings, largely from tech group. Healthcare and industrials, they're even actually down a little bit on the year. So the concentration risk in tech, I think, is very real. I think we need to find some glide path out of the war, and I don't see it happening that quickly. And I kind of agree with Sue on this, though I don't know how much it's going to decline overall.
So Ty, answer your own question.
I'm going to take a little bit of a different tack and maybe naively say that I think the conflict will resolve sooner rather than later. Resolve 100%, probably not. Remember the fighting in Gaza, though basically a ceasefire was called, didn't end. It did not end. It has not ended yet, really.
Right.
The fighting with Hezbollah has not ended. So there may be conflict that continues, but that the main issues of the war will resolve sooner rather than later. When I say that, I'm guessing within the next 4 to 6 weeks, and that will open up, investor sentiment in a way that there will be a bid in the market. Oil will come down, and it's just my guess, my instinct. That
I hope you're right.
I hope I'm right too. I'm right too.
We have a private credit event right after that starts the cycle.
Well, that is a great point, because we talked earlier about debt and so forth. When markets get in real trouble, it is almost always leverage and debt that takes them there, right? One way or another. And private credit may be the big bomb this time, or other loans that go sour, but it's almost always, and we've been through a lot of it, man, together.
We have.
Seen it a million times.
160 years of experience sitting here right now. So
I mean, remember the real estate bubble in the late 80s in Texas and all those see-through buildings and all the loan lenders went bad. I had a friend who rode that. He was a lawyer. It was the best place to be. He was a lawyer in Dallas. He did all the deals that were those with Trammell Crow and all those things, and watched them all get built and so forth. And then he made money on that. And then he made money when he was doing their workouts.
Yeah. You know, it's funny you bring up Dallas and my very first interview with Jeff Vinnick. So Peter Lynch retired. Morris Smith took over for a year, did not perform well. Vinnick was installed to take over Fidelity Magellan next. So I was interviewing Peter, Jeff, and one other gentleman who is the Mad Bomber up in Boston. His name escapes me at the moment. But Jeff was talking about one of the first big trades he ever made. He was going to Houston. It was in the midst of the oil bust in 1986 or so. And he was meeting with an oil CEO who was, as they were leaving, the only person left in the building. And he personally turned out the lights. Oh. Jeff went out and bought the stock because it couldn't get any worse than the CEO turning off the lights in his own building. So I kind of, to a certain extent, I kind of feel like we're at the flip side of that equation. I mean, people have the lights on right now, and they have a lot of people hanging around to turn them off.
So I just got back from two conferences: the Exchange ETF conference.
Oh, you're there, yes.
And the the Future one, Miami. And the two hot topics, these were all RIAs, small, medium-sized RIAs. And the two big topics were AI and the impact on the job market and their job market, particularly, like, am I still going to be around 2 years from now? And what we were just hearing from Tyler there, private equity and private credit. They seem very worried that that's the real potential blow up after the war closes. So I think, Tyler, you certainly hit what the RIAs are worried about. And they seem to be very concerned about the shadow banking system and the huge buildup in private equity and private credit. And I don't blame them. I mean, look at how they're trying to offload a lot of this stuff into the retail market now. They're trying to move into the ETF space, and they're having a hard time because they can't do it. There's too much.
They can't do it. Right.
It's a black.
The other thing too, Bob. You know this. I mean, we all know this. I mean, not only are they underperforming, which the RIAs hate because their investors are upset, but the PE funds themselves the PE firms themselves are moving their assets into so-called continuation funds. They can't realize any gains, so they're creating another fund to buy the asset from themselves to extend the life cycle of that investment, and it's not performing well. And no one likes that. And so you're seeing retail investors try to get out of some of these private credit funds or private equity funds. They're getting gated and they're upset.
Yeah, and they should be. And Tyler, you brought up the point. We've seen this history before. We have seen hedge funds. We've seen other kinds of what you call private markets or whatever you want to call it, the alt community, try to unload onto the retail market, including high-priced IPOs. Watch SpaceX this year, and watch
$1.5 billion.
Right. Watch those coming around, and you want to look where your wallet is. I always tell retail investors, when that happens, check where your wallet is. When they expose this stuff, and you're onto something, Tyler, about private equity and private credit, when they expose this stuff to the public markets, price drops dramatically, and with good reason. This stuff is a black box. We don't know what's in it. The fees are stupid. It's hard to value. The lockup is really long. There's a big spread between private and public credit. And you know what I really resent? The implication that they somehow know more than the public markets. This idea, the hedge fund guys tried to sell us this 30 years ago. We know more than you do, Bob. We have this magic secret sauce. And
we have an investment that we want to get rid of. So we'd like to give it to you.
Exactly. That's what's going
right?
on.
I mean, come on.
Ron, you know that when it comes to the stock market, almost nobody has an informational advantage. Maybe James Simons at Renaissance did because they had a very specific database that they were cleaning up. But almost nobody has any informational advantage.
Look, there were a handful of people in my career that were better than anybody else, right? Soros, Julian Robertson, Stanley Druckenmiller, Steve Cohen, Ken Griffin, Balyasny Capital. You know, there were others, obviously. But again, it's the 1% of the 1% of the 1% that can do what they did.
It's
however they did it.
Ed Simon's there from Renaissance.
Yeah, sure. Of course.
But that's the point. Jack Bogle used to say, "There's 100,000 fund advisors, Bob, and just because you found Bill Miller from Lake Basin, he used to beat me up on Bill Miller because why do you have Bill Miller on all the time, Mr. Pisani, on your TV station? I don't understand. If there's 100,000 advisors, you try to make a star out of this man, it's not going to last. You know that, Mr. Pisani. He always used to beat me up." Do you know what?
That's a great story, Bob. I never knew that.
Oh, yeah. Do you know what persistence is, Mr. Pisani? Could you define that? I said, well, it means they're not going to Well, that's right. Now, your fellow Bill Miller you keep having on for the last 5 years, you say he outperforms. Well, in the next 5 years, he's probably not. And those people who do outperform, they're not going to be the same people who outperformed in the prior 5 years.
Well, the only thing was when Bill gave back all of that performance over a period of time and then bought Bitcoin.
Well, remember, it just ended, right?
I know.
Spectacularly. Okay, so the point is that it doesn't last. That's the fundamental insight of that Bogle kept saying. There is no persistence in the outperformance. The people who outperformed in the prior 5 years are not going to be the people who outperform in the next 5 years. This implies that the outperformance is more luck than skill. That was Bogle's central point. I mean, he used to just beat the crap out of me every time and say, "Why are these people on your television station, Mr. Pisani?" So,
well, we all got those emails, Bob.
That's true. We did.
Yeah.
I think the average investor, though, doesn't necessarily want overperformance. They just want performance. They want a decent, consistent return that they can count on. And I think this time, in this period of time, that's not happening. Obviously, the markets are extremely volatile, and I worry about the average investor maybe panicking. And again, it depends on what your time horizon is and what your pain level is. But I think it's messy out there.
Let's hope not. Remember March 2009, that when we bottomed and we were down 50%, and I was covering that, and I was looking at the mutual fund flows, and you'd think at 50% down, the logical thing is to buy, not sell. And yet the selling accelerated. And that's when the behavioral economist in me just kicked in. And I hope you're wrong, Sue. I really do. Because
I do too. I hope I'm wrong.
Thing. And we didn't know the market was bottoming then. I mean, it did, but it accelerated. The selling accelerated 50% down. This shows you people don't act rationally at all. So I hope that's not going to happen.
So as we wrap up and we go around the horn here, so we're closing now. 4 weeks in a row, we're on the downside. The NASDAQ is down 10% from its most recent high. Dow's finishing off its lows down 444, but the S&P is getting beaten up pretty badly. Oil's approaching $99. 10-year note is approaching 4.4%. 30-year bond approaching 5%. No one was counting on this. We'll go around the horn, Sue. I'll start with you and make my way to Bob and then Tyler, just to some final thoughts on where we are at this point in time.
Well, interesting. I have to write a speech for a presentation next week about the state of global affairs. And I keep trying to write it, and then I have to tear it up because the state of global affairs changes every 5 minutes.
Yeah.
And that's the thing that I'm watching for. I'm looking for a little bit of maybe global stability on the geopolitical front, certainly. I'm also watching fund flows and business flows into areas like Dubai. I have friends who do business in Dubai and who do business in the United Arab Emirates in general. And they're pulling back because they think that the environment has completely changed for them business-wise, at least in the next year or so. So I'm watching geopolitical front, the Middle Eastern business front, and that's what's on my agenda. And if you guys want to help me write that speech, it's Wednesday, so we should start working on it like maybe Tuesday night.
Yeah, well, I have 2 next week, and I stopped writing them in January. Bob?
Well, look, I go back to my central point here, which is the banks are really in a pickle. The central banks are really in a pickle. And I think doing nothing was the right thing to do. I think Powell quipped that some of his colleagues wished they could skip their quarterly economic forecast. And I can understand why. That makes a lot of sense. if you're an investor, I go back to the Bogle thing. I'm sorry we beat up Jack and brought his name up, but have a plan and stay invested and stay long. If you really feel that there is something fundamentally changing about the global economy that's going to affect stock markets for years from now, I hope not. I think that is probably not the case. But if you do, then the correct thing is to reduce your risk profile. But don't do it as a trading mechanism. Do it as a long-term decision. Other than that, don't do anything stupid. Don't try to trade your way out, or don't think that you understand when to go in and when to sell. Remember, when you are an active trader, you have to be right going in and right going out, and nobody ever gets that right. That's the central insight that Bogle always used to pound away at me. You think you know when to go in, you don't. You don't think you know when to go out, you don't, and you make mistakes. So have a plan, stay long, and I think generally, I think this will eventually resolve itself. I don't know how, and what Tyler was saying earlier about 4 weeks ending the war, I hope that's right. But regime change is the problem I have. What is the victory here? How are you going to achieve? If you don't achieve regime change, do you have an angry group of people that's left over that can be a destabilizing force? That's what causes me to be a little concerned here. That goal that they have.
I would just say what he said. I mean, because I think what Bob just said is exactly how I feel. And that is,
you need to leave. Is that what you're saying?
You're not going to get out and get back in and get out and get back in repeatedly at the right times. You can't do that. So the best thing to have is a long-term strategy. If part of that is to reduce your exposure to equities and risk as part of a long-term, not a short-term trading strategy, but as part of a long-term strategy that Bob elaborated on there, I think that is the way to go.
Or maybe hedge in another market.
Pardon?
Hedge in another market.
Hedge in another market is a way you can do it if you're skilled enough to do that. I am hoping, my hope is that at some point the Iranian regime or whoever ascends in the Iranian political power structure comes forward and vows that they will never, ever develop a nuclear weapon, and that will be the linchpin, and will agree to inspections, an inspection regime that will allow, and other things that would go along with that, and that therein is the linchpin and the cornerstone to a resolution that silences the guns for the most part, and that could happen within the next 4 to 6 weeks.
Let's hope you're right, Tyler.
Let's hope you're right. And that was today's edition of Old Money, as we like to call it. Almost getting back together.
I love that name.
Yeah, look, I mean, if you add it up, it's somewhere between 160 and 170 years of experience. So
go.
Oh, Steve.
And I'm feeling every one of those 170 years. Right.
You're not kidding, man. I don't know what it is right here. This rib has been sore since 2024.
Hey, great to be with you all. Thank you for thank you for this. It's fun I look forward to it every month.
Pretty good. All right. Be well.
Love you.
Talk soon, guys.
Take care.
Bye. Good luck with the speech, Sue.
Oh, please, somebody help me.
Swing it, because it's going to be Wednesday.
Talk to you soon.
Bye-bye. Steve, I can't hear you. We're having the same problem again.
And Ron, I learned so much today from that. I mean, just like a family there. But I have to ask the question: where do you guys all see the future of financial journalism? I mean, we look at that as the, and you call it old money. I don't think of it as. I think it's institutional. I think it's a good place to start. But I see a lot of cool things happening in the future for financial journalism.
Oh yeah, no, I don't doubt that at all. And I joke about old money because it's just like I say, the combined years of experience that we have, are not that easily found, and we've been through a lot together, and separately, and so we each have our unique perspectives on what's transpired over the last 40, 45 years. No, it's certainly not dead by any stretch of the imagination. And I don't mean to imply that by with that title. In fact, it's going to change. I think that, again, going back to what we talked about first thing this morning, the alterations in technology, the ease with which you can create both a linear and a nonlinear network, the surplus talent that is now floating around in the news business as a consequence of all these restructurings that are going on, mean that you can assemble, an impressive group of individuals at a far lower cost than anyone else can, and deliver the same, high quality, if not better quality, information that's currently available in a wide variety of places. So I'm very bullish on the future. I'm even bullish on the future of news more broadly. I think enterprising individuals, if they know what they're doing and if they know how to recast this, and I don't mean social media and all the crap that's out there that is just driving people insane and providing both mis and disinformation, but I think an enterprising individual can create a network at a fraction of the cost of any other, with very, very high quality talent, both in front of and behind the camera, and provide the service that informed Americans need to make smart decisions, not just about their money, but about their political and futures as well.
Yeah, and you look at people in general. 95% of them just want to live a good life. They just want to pay for their kids and live and enjoy life and make a little bit of money and go out to dinner and live a normal life. They don't want the nonsense. It seems like the fringes have the microphones, and we're going to take that microphone from them, right, Ron?
Yeah, look, 100%. I mean, look, the fringes have owned it for a while now, and quite frankly, I'll be indelicate and indiscreet. I mean, the crazier you've been in the last 20, 25 years, the more money you've made in media, and maybe the more damage you've done as well. But it was a great way to make money. And I'll be blunt, if you lost your shit on air, it didn't matter whether it was accurate or not. If you could aggregate an audience and become a rage baiter and a rage machine, that worked really well. But I think, at least I feel that people are growing increasingly tired of that, and they want some straight dope. They don't want it to be boring, but they also want it to be accurate, and they want it to be meaningful. And I think that's the opportunity set that really is interesting to me, is that it doesn't have to be spinach. It can still be interesting, it can still be compelling, but it also needs to be accurate and timely.
Yeah, you even harken back to the time between Carl Icahn and Pershing Square's Bill Ackman on CNBC alone. That was great theater, and even I tuned into it. Right? I mean, I was excited to hear that, but I don't think people want that anymore. I think they just want what's really going on. Leave me alone and stop shoving ads down my throat that doesn't really apply to me.
Yeah, listen, I mean, let's say what the hell is going on is a legitimate question. Particularly in an environment like this one. Like if you go back to the 90s. It was a cakewalk, right? I mean, it was so easy in a certain sense. There were events that took place, but it was a pretty easy period, maybe unique to our generation, that it was easy for a lot of people to make money. It was easy to be in a job. There weren't a lot of disturbances, between 1990 and 2000. And, I think 9/11 was a pivotal point in all that. And you had 9/11, you had corporate scandals in 2002 and 2003. You had the great financial crisis. And since then, even more problems around the world. And it makes it just that much tougher for people to function. And I think younger folks are searching for answers. Older folks are searching for security. And, there's a way to get to them and do it without, having everybody tear their hair out and screaming on TV.
Yeah, I mean, for my own self, I mean, the biggest deal back then was Monica Lewinsky, right? And now that's not even a big deal anymore. So it's like
a lot of what happened in the 90s and even the 80s, Gary Hart, for instance, all that stuff is quaint by comparison. I mean, it's
Gary Hart had an affair. Oh my God, he has to.
Maybe he did. We don't even know if that was a setup picture. There's been a lot of speculation that when Donna Rice sat on his lap, there was a photographer there ready for that moment. And once he got trapped, he was done. He got knocked out of a presidential race. And granted, married guy, another woman sitting on his lap, not a good look by any stretch.
But today we have a president who's been divorced 3 times or whatever, and it's like normal to us now. I think we're desensitized to the news, and I'm looking forward to the news in the future where we get back to normal. I don't even know what normal is, but some sense of normal. Ladies and gentlemen, Ron and Sana, I'm looking forward to a prosperous life with Quasar Markets and Ron. Ron, are you ready for this ride?
I am, and I got to go do radio because markets closed near the lows of the day, and it was pretty much of a beat up day. The president just came out and said he doesn't want a ceasefire. So,
and that's the day, that world we live in. Ron, thanks so much, and we'll see you back next week, my man.
Be good.
Wow, so far a crazy day so far here on Wall Street. I'm gonna bring some people in here that just make some sense out of the craziness. Alan Ellman, how are you, Dr. Ellman?
Hello there, Steve.
I look at these markets and I just go, what do the normal people think of? I used to sit down, Alan, and I would sit down and I'd go, wow, the Dow's down 500 before the market opens. I'm freaked out. The day of the Dow being down 500, we call it a Thursday or Friday. It's not a big deal anymore, right? I get the numbers are up. I understand all of that. But if we back it up a little bit, how do we make sense of that? And I believe you have a PowerPoint for all of us today. So I'm gonna bring that in for all of us. But this is, I look at all of this and I go, wow, so much is changed in the world, and you're bringing sense to that. So I'm gonna bring up your PowerPoint, and I'm going to get out of your hair.
Okay, Steve, I'm probably going to need you to move the slides for me. But what I want to do for the Quasar audience is just to introduce the blue collar investor to the Quasar audience. I know I've been with you for 3 years now. I'm on every week. So many of your members probably already know me. But I'm here to tell you that despite what's going on in the market today, this week, for the last month, probably the worst month since probably from the last 5 years, that you could still make money in the market by taking defensive positions. And I'm going to show you 2 strategies at the end of this brief PowerPoint as to how you could do that. So first, let me introduce you to myself, for those of you who don't know me, and the Blue Collar Investor Corp. If we can move on to the next slide. You should see a picture of me. There I am. Well, over the last 19 years, I have written and published 9 books, 8 of them on stock options, and I'm on the sell side of options. So you get that immediate gratification of the first thing that happens is you take in money. We'll talk about that towards the end of this PowerPoint. Now, I've been in the market for 30 years, but writing books and lecturing on the market and options is my second career. Originally, I was a dentist, and I wrote a book on options. It went to #1 on Amazon. I started getting invited to speak all over the country, so I had to make a career decision, Steve, and I opted for finance, and no regrets at all. I love what I do. I've been featured in major financial media like Quasar. I'm pleased to be here and honored to be here. And I've developed specific strategies for the sell side of options, particularly covered call writing and cash secured puts. And I'm going to show you how those strategies work very shortly. And I've really been honored to be able to educate thousands of investors from all over the world. My webmaster tells me that we have members in 80 countries outside of the United States. And Steve, one of the most humbling experiences of my life, and I think we have a screenshot of this later on, is that somebody who attended one of my seminars in Las Vegas came up to me, put a phone in my face and said, "Hey, look at this, Alan. ChatGPT lists you as the best teacher for covered call writing." And that was quite a humbling experience. So if we can move on now to the next slide, I'm going to tell you about the strategies that we teach at the Blue Collar Investor. Now, my go-to strategy since 1995, covered call writing, selling cash secured puts. These are low risk, not no risk, low risk option selling strategies. So I'm on the sell side of options. We also have data and information and products related to credit spreads, both bull put and bear call spreads. And Barry Bergman, BCI Managing Director, is the expert in that area. And we also teach covered call writing related strategies, not traditional covered call writing, like, for example, portfolio overwriting. Now, that's a strategy that probably applies to a good percentage of your audience today, Steve, because for anybody that has a portfolio of stocks that they've owned for a long time, perhaps in non-sheltered accounts, that they own at a very low cost basis, that are generating dividends, you could use covered call writing in a very specific way to actually generate a third income stream. You have share appreciation, you have dividend income, and now you have covered call writing. So that's one related strategy. Another is the collar. And the collar is where you take your covered call, own a stock, write a covered call, and then buy a protective put. It's like an insurance policy to prevent catastrophic loss to the downside. That's something that could have been very, very helpful over the last month. And finally, the poor man's covered call, where instead of buying a stock first, you buy a long-term, deep in the money call option. You buy a Leaps call option, a long-dated call option, and you write short-dated calls off of that. It's kind of a cheaper way to get into a covered call, but let me just give you a little bit of a warning. There are a lot of moving parts to the poor man's covered call, so you have to understand and master all of those moving parts before considering implementing this strategy as a go-to strategy for you and your family. So Steve, if we can move on, I just want to show the audience some of the tools and products that we have at the Blue Collar Investor. As I mentioned, 9 books. We have a few in hardcover, all in soft cover and PDF format. I've written over 700 journal articles, most of them breaking down trades that I've taken from my own portfolios. I've also produced over 600 educational videos and developed 10 calculator spreadsheets. You're looking at one in the screenshot right now, which is my pride and joy, our trade management calculator. And if I could just briefly tell you how this spreadsheet works, because it's a one-of-a-kind spreadsheet. And the top part is for covered calls. The bottom section is cash secured puts. So in section 1, in those blue cells, you enter your trade. In section 2, you get your initial trade results per trade. And in section 3, it's a little hard to see in the green cells at the bottom under that number 3, you get your initial calculations for your entire portfolio. Now, the middle section is what separates this spreadsheet from every other spreadsheet anywhere. In section 4, both top and bottom, you have over 20 different exit strategies where you can adjust your trades. And then in section 5, you get your post-adjusted results per trade. And in section 6, under that number 6 in the green cells, post-adjusted total portfolio results. In section 7, you have a trade journal, so you can make notations regarding these trades. It's a great learning tool when you go back and analyze your trades. What could I have done better? What did I do really great that I want to keep on doing? It's a wonderful trading tool. So all of this took us a year and a half to develop. And this spreadsheet, Steve, has over 2,400 formulas inherent in the spreadsheet. Now, if I can move on to the next slide, I want to tell you a little bit about our premium membership, which includes 4 screening reports for trading options. Whether you're on the buy or sell side of options, you could use these reports. So the one on the far left is our stock report. It's a 9-page report. You're just seeing a little snippet of it here. In the middle section, we have our exchange traded fund report for elite performing ETFs, suitable for option trading. And finally, on the far right, we have our blue chip report of the best performing Dow 30 stocks. There's also a 4th report not shown here on dividend capture. Also, part of the premium membership, we have over 250 training videos, our Ask Alan series, where I break down trades taken from my portfolios, along with dozens of other downloads and resources, like our emergency management report. So that's all part of our premium membership. And if we can move on to the next slide, I just want to briefly show you what I already mentioned, ChatGPT. Naming me the #1 best teacher of covered calls. And every day I strive to keep that going so that I deserve this honor. Now, if we can move to the next slide, Steve, this is the part where I want to show you how these strategies work. So let's start with covered call writing. This is a hypothetical example. I made the numbers nice and even so it's easy for your audience to understand how this works. So covered means you own the stock first. Now, when you sell an option, you're selling for every contract you sell. In order to be covered or protected, you must first own 100 shares of that underlying security. It could be a stock, it could be an exchange traded fund. Let's keep it simple and say we're going to buy 100 shares of the blue collar investor at $48 a share. That means we're spending $4,800. Perhaps we owned it for a long time and now it's 48. Maybe we just bought it at 48. But at the time of the trade, it's 48. Now we sell the 1 month out, 30-day, $50 call. That's called out of the money, higher than current market value. Let's take an average premium of $2 per share. For every contract we sell, that's $200. 5 contracts, it would be $1,000. That's generated into our cash account instantly. That's our starting position. 2 divided by 48, it's a 4.17% initial return, 50% annualized. Now, does that sound like an unbelievable deal? It does, but wait, these are not no-risk trades. They are low-risk trades, as you'll see in a moment. Now, there are 2 possible major outcomes, assuming we don't take any exit strategy maneuvers or position management maneuvers. If the price of the stock goes higher than 50 and we don't take any action to buy back that option, what happens? The Saturday after expiration Friday, our shares are sold at 50, a contractual obligation. Well, that means we've generated another $2 a share, 48 to 50. That means our return is now $4 on a $48 investment per share, 8.33%, and that annualizes out to a humongous 100% return. Now, everybody's saying, let me in, I want to do this, but wait a minute. If the price of the stock drops below the break-even price point, 48 minus 2, $46, you can see from the second from the last bullet, that's when money can be lost. So you have to master position management before you enter the trade. What am I going to do if the price of the stock drops below my break-even price point? How am I going to react? Once you have that plan in place, once it occurs, then you know exactly what to do. You're not going to be a deer in headlights and say, hey, I better call Alan or Steve to tell me what I can do here. I never expected this to happen. So that's covered call writing. Now let's move on to the next slide, Steve, which is selling cash secured puts. Another hypothetical example, Steve, with nice even numbers, so everybody in the audience can kind of understand how this strategy works. And I'm here to tell you that given the uncertainty in the current market, and I've been concerned about it a year back, starting with tariffs. That has concerned me, not just in the last month when the war started, but in the last year when tariffs were introduced. And so I've been doing these type of trades, defensive trades, using predominantly out of the money cash secured puts before I even buy the stock. So here's how that works. Let's say the blue collar investor is trading at 75. You don't buy the stock with puts. You sell. I'm doing a 1 month here. I've been doing a lot of weeklies lately. You sell the 1 month in this hypothetical 72.50 put. That means you're contractually obligated to buy at 72, right? If the price of the stock drops from 75 to below 72 and you don't buy back the option, those shares will be put to you at 72. Now, let's say we get a premium of $2, an average typical premium, okay? That means our return is going to be $2 divided by not 72, but 70, because our broker is going to require us to put a certain amount of cash into our cash account to secure that put trade. The formula is the strike price, in this case, 72, minus the premium, 2. That means $70 per share is required to put into our cash account. So the return, $2 divided by the 70, that's how much cash we set aside, 2.86, and that will annualize out to close to 35%. That's our initial starting point. Now, if the price of the stock stays above 72, the option will expire worthless. We keep the $200 per contract. Once again, if we sold 5 contracts, we get $1,000. If it stays above 72, then the option will expire worthless and we will have realized our 2.86 return. If the price of the stock drops below 72 and we don't buy back that option, then shares will be put to us at 72, but our break-even price point is what? 72 minus 2, or $70 per share, right? And that represents a discount of 6.7% from the price of the stock, 75, when the put trade was first executed. So if it drops below that 70 break-even price point, we could start to lose money. And that's why every time I talk about these strategies, I always mention these are low risk. They are not no risk strategies. So just one final thing, Steve, before we wrap it up. In today's market environment, in this particular hypothetical where the stock was trading at 75 and I gave you a strike of 72, I would probably go to a lower strike price, generate a lower monthly return, and have more protection to the downside. So instead of selecting that 70 strike, the 72 strike rather, I might go with a 68 strike, maybe get a return of 1.5%, which annualizes out to still a robust 18%, and get additional protection to the downside, maybe 10%, as opposed to 7%. So these trades, covered calls, cash secured puts, can be crafted based on what's going on in the market today. And as I mentioned earlier, Steve, I've been doing very defensive trades in the money covered calls, deep out of the money cash secured puts. So on a day like today, in a month like we've had recently, Steve, although I may have had a losing portfolio, it was hugely mitigated by crafting my trades in this defensive manner. And so finally, we could just summarize in that last slide that conservative option selling strategies, once again, I'm on the sell side of options, you could still generate significant returns in a low risk manner. And this is particularly important in this current market environments. So know how to craft your trades, know how to manage your trades, and over the long haul, you're going to put yourself in a position to beat the market on a consistent basis and many years significantly. And BCI will give you all the education, all the stock screening, and all the tools you need to master these low risk option selling strategies.
Yeah, and I mean, I think that so often we look at the markets and we just go, "Hey, I don't know what to do here, and what do I need to do to hedge my portfolio?" And so often you hear them, "Oh, well, I guess what I'll do is I'll just I'll buy VIX calls or I'll buy VIX puts, and I'll do," and they don't really know how to hedge and actually make cash. I think that's part of the problem, right? Is cash is king, and that's what covered calls do. They produce actual cash that goes into your portfolio.
That's the starting point, Steve. You generate cash into your portfolio. But it's so important. And back in the mid 90s, when I started these strategies, this information wasn't out there. It was just buy a stock, sell a slightly out of the money covered call, and then basically pray, because there was nothing really on management of your trade, or at least very, very little. But now we know that these trades can be crafted. And I think you remember, Steve, back in the day, they used to say, covered call writing is only good in sideways markets. The market's going up or it's going down, you can't use it. Well, that's baloney. You can craft your trades to every single market environment and take advantage by crafting your trades in a certain specific way. So not only how to craft your trades, but then have a game plan. What if the market starts crash like it has been doing lately? Or what if it goes to the moon unexpectedly? Can I make more money than a max return? Well, I'm here to tell you that you absolutely can, but you have to know and understand how to manage your trades.
Yeah, and managing trades is not easy sometimes, but this makes it a lot easier if you like the company or you own the stock or you want, and that's what it means by covered calls, right? And I love it. I mean, and ChatGPT is the tells the truth, man. I mean, you are the master, Alan. There's nobody better than covered call writing, and you're it, man.
I so much appreciate our talks over the last 3 years, Steve. It's like once a week. That's what I look forward to, my talk with you.
And you know what's interesting to me, Alan, is that you've been with us the whole way through this process. And Alan, you know the new website went up yesterday, and the new platform went up, and it's super exciting, quasarmarkets.com. And for those of you who don't know, the education platform is going up. It's done. We got just in about another week or so to finish up the prettiness of it. But if you really want to catch Alan, you can either find him at the Blue Collar Investor, or you'll be able to find him here on Quasar Markets. I'm super excited about that.
So am I, Steve. Looking forward to it. Keep up the great work.
Well, thank you, sir. We did it in less than 3 years, my man. Ladies and gentlemen, Alan Ellman, the president of the Blue Collar Investor. I mean, if I could give you a big round of applause, thank you, Alan. Thank you for being part of the roller coaster that we call Quasar Markets. So I will see you here next week, my man.
Yes, sir. Have a good one.
What an amazing guy, fella. I've known him a long time now. He's been part of the education side of exactly why we built Quasar Markets. So I appreciate his friendship over the years, and I appreciate his knowledge, and I appreciate him leaving the dentistry to help you and me. I love that side of it. All right, Quasar Markets, I'm going to bring him back on here. He's the guy behind the scenes that makes things happen for us. And Andrew Johnson, Andy, as we know him as. Andy, how are you, man?
Not too bad. I got one more left, Doc, and then we should be good to go for the day. It's been a good day. We've had a lot of variety, and that was the goal, right, of having all different types, from DeFi to ROM, from the CNBC panel, you name it, we try to cover it. And that's really what we do, is we got to have every single market, every single niche, within our ecosystem of Quasar Markets. And we want to give every single type of market voice onto our platform. We want to show you guys that.
Yeah, and it's been a roller coaster, my man. And I'm gonna bring it up here once again. I mean, I hope everybody goes to the site today and get a chance to see it. It's quasarmarkets.com. There it is. There's the website, and boom, yeah. Boom. Go to the site, and I love this.
What's your favorite part about the new site, Steve?
The new part of the site is about the amazing amounts of data that's going to be put in the system, but also the new platform, and the fact that we built this website so that it all integrates. There's no need for a download anymore. There's no need for all the nonsense that we've had in the past. We're building the future. I'm not building the past, right? And that data includes sports and weather and news. And so, yeah.
What do you think the biggest, implication is? We see all the people on X and online saying that, Claude's changing everything. We can build a website. We can build our modules, X, Y, and Z. Where do you think the data from what we have really is going to change? Like, how do you think it's going to change, the future of the next 3 years?
Data is a very interesting animal because, quite frankly, data is needed in everything that we do. I've said this many times. In the past, the difference between the haves and the have-nots has always been how much money you have in the bank account. But I think going forward in the future, that it's how much data you have access to, right? If you make a better decision, you're going to make more money because you are going to have more money because you don't waste your money on frivolous things, and you're going to make a better decision and then have more money for frivolous things. So to me, that makes me very happy in building Quasar Markets. That was one of the things that I said I've always wanted to do. Looking at I think one of the things also was the team itself, right? We have a very quality team, very long standing. I think there's over 1,000 years of knowledge on our team, probably more than that, right? As our team grows out. But, people like Ron Insana and Dr. Ellman and Scott Bowers and Tyler Woods. And it's an amazing part of this that I think we've really pushed the envelope, Andrew.
Yeah, for sure. And especially with our educators who are coming on, our goal is to have all data. But again, if you don't know how to interpret the data or use the data, that's a problem, right? If we have all the data on shipping lanes or the Strait of Hormuz right now, all that data, that's great. You might have super niche data that nobody knows and nobody has, but if you don't know how to interpret it and actually trade oil or trade any other, asset correctly, it doesn't matter. Our goal is to bring people on who know how to interpret the data, know the data, been in that field for 30 years, and they can teach you how to do it. And on our education platform, we're going to have people educating you on the most niche things, right?
Yeah, and you look at it from that perspective. There's so many people just teaching one thing, right? Okay, well, it's all about news. If you got to have the news before anybody else, well, we got that. All right, well, you got to have great charting. Well, we got that. Yep. Oh, you've got to have a great yeah, I got that. Oh, well, we need to educate it. Got that. Well, I want to know about what's going on in different languages. Got that. Yep. You need this data. Got that. What about agriculture data? Got that. Oh, I need weather data patterns. Why do I need weather patterns? Because it affects the agriculture. Oh, got that. Oh, but I want to watch my baseball team. Got that. Oh, but I want to watch all these news channels. Got that. That's what I want to keep saying is I got that, right? You don't need to go anywhere else. It's all implemented in the same system. And that's, it's so funny. I've been told so many times over the years, Andrew, that, oh, well, nobody wants a platform with everything in it. Nobody wants that. Yes, they do. And we proved that already, right? And that's exactly why we have the people that we have on the show, right? And I get that there are just people that just do teaches charting. Well, I love charting too. I've been charting longer than most of them have, right? I'd say 99% of people chart today were in diapers when I was teaching charting, right?
I wasn't even alive.
Born, right? So, I like that, but you need everything, right? The ecosystem is only built on everything, and I think that's what I've always wanted to build, including having our own brokerage, including having other brokerages in the system. And I don't care where they trade. That's great. I appreciate that, and I love the partnerships that we have. I've had TradeStation on here earlier, a partnership, right? Google's a partner. LinkedIn's a partner. It's just amazing. NASDAQ told me, we don't want to be your vendor. We want to be your partner. We want to put you on the billboard in Times Square. They did that, right? Those are the kind of cool things that we have right here in Quasar Markets. And the future is very bright. We love what we're doing. And this is exciting stuff.
For sure. And especially with all our partners that we have, and the more we're going to have is, like I said, the more partners we're going to get is going to be more data. The more data we get, we got to be able to utilize. And a lot of people, they build these platforms, they buy the data, they have different AIs, these are Perplexities or the whatever. But again, if they cannot get the correct data, that's the first step. If the data they get has to be real.
This isn't Wikipedia, right? Exactly.
Right. It has to, the data has to be correct. So that's the first step. But then the second step is, okay, you might have the correct data. Can you use it? I was thinking about this earlier. It's like with Claude and all these AIs, it's like, hey, you can build the front end, the look of it. It's like you can build a Ferrari, but if you don't fuel the Ferrari with the correct gas, what are you going to do with the car? The car's not going to move. You're going to fill it with water. It's not going to work, right? So you got to build the systems correctly with the correct data that actually works, and your system has to be able to withstand the data that you give it. And that's
what's interesting is you're the guy that brought a lot of the data to us, right?
I did.
54,000 data points, folks. Now, I hear all the time, oh, well, we got 100 data points. We got 1,000. I'm like, I could lose that many and still have more data points. And direct connections to these data points too. This is a whole different game plan here. Yeah,
for sure. But yeah, I mean, a lot of them too. Like, there's so much data online of just open sourced, and it's like those are free data points people can use. And now we're going to start getting into like the private of like, hey, we want to work with you guys. We want to build modules on our site for what you do, and we want to provide your data to our traders. And the more data we can get, the more communities that we can reach out to, the bigger that we can get, and the stronger, more fundamental data that people can trade on using our platform. If you want to trade sports data, trade it. Oil, trade it. Commodities, trade it. Anything you want. Metal, silver. What you see is hot right now. You'll be able to see it on our site. All of our news, all of our brokerages, you name it, you can have it. I'm sure you can show the widgets again if you want, but that's going to be the plan of, okay, I'm going to be watching the Minnesota Vikings lose again with Kyler Murray. Okay, great. But I'm also going to be able to trade, gold and watch the news headlines with it on the same platform instead of having 15 different subscriptions, 15 different websites, 15 different tabs, X, Y, and Z. It's going to be one spot, one place, one ecosystem to learn, watch, trade, and kind of do anything on it. And that's kind of ultimately the goal.
Yeah. And one of the things that I've said that I've always wanted to have is not only the data, but not only in every language and all things we have, but bringing the right people on to explain how the data works. You can learn from the machine. You can learn from educators. You can learn from very smart people. You can learn from the news. You can learn from Twitter, even, believe it or not. You can learn from all these things, but it needs to be personalized, right? And one of the things that we did, we personalized the machine, the colors, the data, however you want to see the world is how you can actually make that in the system. You can put colors into the system. You can change your own, make the portfolio, the platform, the way that you like to see things. I mean, I'm surrounded by screens here, Andrew, but some people don't like that. They wanted to see it in their phone. Great, we did it that way too. You want to see it in your new Oculus, or you don't want to use Mark Zuckerberg's metaverse. Great, guess what? You could do that with our machine, right?
Right.
So that's kind of the key here in the thought process here behind all of this is having the right people also working here and creating and building and riding the roller coaster, as we call it here, because it is a roller coaster. It has been a lot of fun. I think we built this platform faster than any other platform built in history. Because this is not like a let's stick this in some kind of AI and hope the machine comes out the way we want it to. We built the back end. And if you have a module you're building, great, put it in here. We're gonna take that AI prompt that you have and make it even better because we have the actual data. Take the prompt, copy it, paste it, put it in our system. We'll make it better. Right? We already have that. But and I love it when I see the Twitter. You replace your Goldman Sachs. Okay, no, you can't
train like a Goldman Sachs analyst for $100 a month. And it's like, all right, like cool, man.
Ain't gonna happen, right? But we have that here, right? We actually copy that prompt that they put out there, put it in our system, and guess what? You already got it.
Right.
We're gonna take that from it. We're gonna be able to build a machine that it has an ecosystem that they cannot create, and we did that in Web3, and of course, the next version of GUI 3. I love all this side of it. New platform. Look, and we are a company that believes in the ecosystem. So,
and it also, like, if anyone has ideas, like, I had this idea of like building this module or this idea, reach out and we want to put your ideas onto our platform. I think 20 years ago, if you were an idealist type of person where all you had was ideas, you couldn't really, the barrier to entry was so hard. But now you got an idea for something, plug it into an AI website or one of these learning models, your idea can come to life. Even 3 years ago, that wasn't possible. But now, I really like water bottle.
And remember when people said it can't be done?
Exactly.
And we did it. I think that's the cool part is that we actually did what we said we were going to do. And when I talk about other companies out there and AI or whatever company is out there, some companies still aren't profitable. Most companies that that started out even 6 years ago just aren't profitable.
Right.
And we're looking forward to that. We have, dude, what kind of shirt do you want? I think that's key. We're gonna have merchandise here. I love that side of us. I want a shirt. I'm gonna get a shirt. I think. So it's also the different viewpoints too. I don't want one viewpoint telling me everything. I want to have the ability so that I can understand it from everybody's viewpoint, right? And
it's actually right. Like we have all the news, we have all the data, we have Twitter, we have Instagram, we have all these different analytics. Okay, this person says this on this website. The majority of the trend is on this website. Okay, we're gonna combine them all and see what the actual combined, average of what everyone's saying to get the correct answer instead of just listening to, I only watch this TV station or follow this guy on X. Okay, that guy probably is biased. Everyone is biased in a certain way. But if you have 100 different people on the same take, well, you're probably going to get the main idea of every single conversation, idea, current event. And that's the goal, right? The more, of a sample you have of a thing, a tweet, a news article, people talking about it, the higher chance you're going to have of like the correct answer, the main idea, right? A lot of people, they watch the news. They said this, so this is true. Or someone says this is true. Well, yes and no. A lot of times they spin it for their own gain, for their own political gain, for their own financial gain, whatever. We're here to get rid of that. We want to give you just the exact facts. We're not here to make you the best picture or generate the best video. Like, we want to give you facts and only data. Data, and it's correct, and it's present and accurate.
Yeah, and let me ask this, Andrew. When you look at the forward-looking ideas of fintech and what these companies are trying to do, and they just can't get it done, what is it that people in your age group really want to see?
I think a lot of kids my age just want to have things just given to them. They just want to say, what's the best stock out there? Okay, ChatGPT then would just give them the answer, or Claude was giving the answer. Right. But a lot of times, the things that people are building, like college startups that I've seen, especially at school, it's like, we built our fintech group or fintech, what are those called? Like class, school, campuses with
projects.
The club, the fintech club. It's like, the fintech club built a new module. Great, man. That's really cool. Like I love you have ideas, but if you can't actually use it and it's not practical with the right data, you're just doing what everyone else is doing on X, and you're no different than anyone else. And if you don't separate yourself of new ideas, new websites, new fundamentals, you're not going to do anything else.
And what's interesting is, once we see it, copy paste, boom, it's done, right? I mean,
exactly right.
I want to see an ecosystem. I want to see the media side of this. I want to see the platform. I want to see the education. I want to see the international side of it.
Right.
All of the things that we're building, we did, right? And I had that chat with NASDAQ yesterday about it. They're like, wow, you really did do all sides of this. So yeah.
Well, that's our goal, is like we want people to have the right data, right? Vertical one, have to learn it, right? And then obviously we have merchandise, but we wanted to have a whole, like you said, ecosystem of, okay, they can do everything. They can learn, they can trade, everything on the site, because then it's a more seamless look. It's easier for people to learn how to trade. If you really want to learn how to trade Forex, okay, let's go to the Forex education. Let's watch the Forex channel and we'll trade Forex. Our news will be Forex, our widgets will be Forex, and then we're done. We don't need to buy that terminal and then this education course and then this on 4 different sites. Like, that's just too much work. And people, and the average person doesn't want to spend that much time with 14 different subscriptions, 14 different people. They want to listen to just one person. Okay, they'll tell me what to do. Okay, I'll listen to him.
Right.
So that's ultimately
how do we get them to think in a more positive aspect? It seems like they're just betting on basketball, and they're betting on,
betting on basketball is fun. It is fun. I won't lie. It is very fun. But a lot of people aren't really positively mindseted. I mean, a lot of people, they're just going to give it to them. They'll give me the answer. If not, well, then they don't really care. But we're in such a situation where, okay, this is our platform. This is what we can do for you. These are the people you can watch, listen to, learn. Here's how you can trade on our platform. Everything is laid out for people, right? Because it's in one-stop shop. And ultimately, majority of the people just need stuff laid out for them to do it right. Is it easier for people? People usually won't go the extra 3 steps to do certain things. So that's just ultimately the nature of people and the way that the world is. So
yeah, and I not too long ago, I guess about a year ago, I was trading cocoa, and I was using the machine, and I knew that there was a problem in cocoa. Right? I knew that weather patterns were coming across, and I knew that there was geopolitical issues and all the things that it didn't understand. The machine understood it, right? And I knew it, but it taught me into the way that I need to understand it. And the price of cocoa quadrupled, right?
Exactly right.
And I knew when to get out way before it happened, because I knew. Now I know that oil is going to drop. I know it is. I mean, I knew when silver was going to drop. Yeah. Right. So I bet on that. And then, I made the investments, and I shorted silver, and of course, silver crashed. I knew it long before it happened, right? Because I wanted to make sure that I understood the situation of that. And one of the things that we do here at Quasar Markets, so that we understand the whole world, is we have very intelligent people on the system. Mm-hmm. And so we want to also not just bring weather people on here, or not just sports people on here, but we also want to have doctors, and we have lawyers and politicians and lions, tigers, and bears. Oh my. And we've got that, right? We've got those specific people. And Andrew, I'm going to throw you to the wolves, because I'm going to bring on my friend, Dr. John Morrison here. Dr. Morrison, how are you, my man?
Hey guys, I'm doing great. Good to see you. Good to see you. How are you?
I'm good, John. I'm good. One of the things that we talk about is having data and understanding the world around us, and AI and more data and all the things we've been talking about. But it's not practicality, right? We need to actually put that into practical statements and understand it and actually use it. And that's why I'm bringing you on. You're going to be our new biotech guy, right?
Excited to be here, bud. Excited to do it.
I look forward to this time. And for those of you who don't know, Dr. Morrison is my doctor. So, I mean, I have a personal intricacies of this, so that we understand it from a doctor's perspective. So often we see the stock market, so often we see biotech stocks, so often we see things, and we don't really understand that, or what's really coming down the pipe. One of those things for me was GLPs and weight loss. But I'm looking forward to today, and I'm gonna let you do your thing, because you want to talk about peptides. Is that right?
That, and one of the things I wanted to start off is just sort of the foundation is a doctor-patient relationship. So daily, even today, as I'm seeing patients, it's so important to find a doctor that you're close with, that you trust, and that knows that has your best interest at heart. You know, the statistics show, I can quote so many studies where there's a, you know, for non-adherence, for folks that just don't sort of click with their doctors, when you do, and you do adhere and you follow your doctor regularly, there's a 19% lower, it lowers your all-cause mortality by 19%. That's huge. Just by finding a doctor that you can trust and you do well with. You know, especially with the trust factor. You know, you gotta, you know, and if you go to a physician and you just don't feel it, you know, pick another one, because it's very important, especially with my patients. You know, I've seen so many success rates, just like you, Steve. You know, Steve came to me. We did some basic labs, and also extensive lab work. We started him on a program, and look at him; he's doing wonderfully. And that's kind of what prompted us to start this, especially me partnering with him starting today. I'm very excited to do this, but there's so many things to talk about. As a matter of fact, 3 times today, Steve, 3 times I was asked about peptides. You know, that's the latest and greatest. You know, it's a new and emerging field that's very exciting. As a matter of fact, tirzepatide, you know, semaglutide, those are peptides as well, and we know how well those work. I can give you 10, 20, 30, 40, 50 stories of success with these things. They're now peptides for cartilage growth, for just overall wellness. And, you know, the one thing that I think is important, not just to go to your physician for him to kind of put Band-Aids on you, is to also, there's preventative medicine, there's longevity medicine, and that's a very exciting field. But again, it just goes back to that relationship. You know, you got to be comfortable talking to your physician. You got to have a plan of attack in terms of, well, doc, I just don't want to live longer, but I want to live healthier. And there's many things, that there's supplements that we know that work now, that, you know, that there's better studies, better quality studies that are coming out, especially with the peptide forefront. I mean, this
And
thing's
explain
going
to
to be
those
big.
people, doctors out there, that don't really understand what a peptide is. So
And, you know, especially with your physician, you need to schedule regular visits, especially checkups and physicals. So important. You know, as a matter of fact, people are worrying, well, what about the cost of healthcare? Well, if you study big studies, large meta-analysis, big studies are showing that there's a 30% lower all cost to you as a patient if you follow with your doctor regularly. And then, you know, there's another big push out there for vaccines, and I'm getting asked all the time about vaccines. As a matter of fact, I practice here in Florida, in Tampa, Florida, and you know, measles. You know, we're starting to see a few cases of that. So, you know, make sure you talk to your physician about vaccinations. Very important. And then, you know, you should be able to trust your physician, that he guides you in the correct manner to which ones are good for you and what are the side effects. So, you know, there's just a lot out there, Steve, and you know, and again, it comes down to that basic foundation of your, you know, you got to trust him, right? You need to talk with him, and I even tell my patients, hey, look, if you are not comfortable with something, please ask me. You must ask me for clarification, and you know, if you come in with some new information, let's talk about it. You know, just because I put a white coat on doesn't mean I know everything, but I'm going to go look for you. I'm going to, you know, do the best thing I can for you in terms, especially medically, and I want you to live longer but healthier.
And you know, doc, for those of you they don't know, explain what a peptide is.
Steve, can't hear you. Let's see.
Can you hear me? Can you hear me?
Yeah, nothing on that either. Let's see. Yeah, so you know, if you guys
and doc, for those of you who cannot understand, can you explain what a peptide is? Andrew, I think that they are having a little trouble there on the back end there, but yeah, I mean,
well, I was gonna say about peptides, like that's the biggest thing going on with my generation is everyone's doing the peptides, and they're like, "Hey, man, take these peptides." I'm like, "That's great right now. It's a new thing right now, but in 30 years, what is that going to look like on my body? Like, yeah, I'll get super jacked and super shredded, but what's going to happen when I'm 40? Like, I don't know. Right. So that's the ultimately thing. And I'll just stick with my current life at the moment.
You know, I'm going to remove him and see, doctor, if you'll come right back, if you can hear me, just come back, go out and come back in. Yeah, but I mean, like peptides seem to be the rage right now, and you know, and having someone like Dr. John Morrison is important as we start to, you know, understand the world around us from a biotech perspective, right? It's a tough area, and you know, no Chat GPT is going to help me in that situation.
No. And also, exactly, definitely won't. Yeah, I mean, I would definitely not go to ChatGPT for medical advice. I'll tell you that much right now. But the whole biotech and the whole, you know, healthcare system is just another aspect of where everything is going, right? It's just another piece of the puzzle of the global system, right? It's everything we do, right? Oh, peptides are up. Okay, does this affect another thing in the market? Wow. Like, I mean, just yesterday, I took a video of a kid. He was shopping for peptides on some super sketchy site. I'm just like, oh my God, like what is happening? Like everyone is doing it. And it's like, it's a new trend, right?
And talk to me about how do they ingest that peptide?
It's with a needle. It's with a needle in their stomach. And I'm just like, look, you guys can do that. That is all you guys. Like
and Dr. Morrison, Andy's talking about it from the kids' perspective that they love peptides.
Oh, you know, it's funny. I had a 24-year-old that came in today, and a 32-year-old, and a 23-year-old, and it's so funny. I'm looking at them. Okay, hey, anything else you need from me? Hey, doc, what do you think about peptides? Hey, doc, what do you think about peptides?
All right. So, doc, what does a guy like me need on peptides? What do I need, man?
Well, you know, first of all, what we do is just in general, right? So we get some blood work. We make sure that your electrolytes are okay. We make sure, you know, we maybe check a testosterone. Make sure that's okay. And what I basically told each of the folks today, I said, listen, you know, that there's the pillars of health, right? If you want to live longer, you want to live healthier. First of all, you need to prioritize sleep. Okay, got to prioritize sleep.
Good luck with that. With me, I haven't slept in 52 years, my man.
Right, exactly. So, and you know, if you're having trouble doing that, there's various ways, various things that we can do naturally to help you with that. One of the folks. Well, secondly, health, right? So you want to make sure that you're eating the right things, the vegetables, the lean meat, and also hydration. I can't tell you how many times that I talk to folks, and believe it or not, even starting at 40 years old, their kidney function will drop just because they're not drinking enough water. You got to hydrate. And then there comes exercise. You got to exercise regularly. I'm not talking about hitting the gym for 2 hours. I mean, walking daily, doing something. So, you know, all the folks, the 60-year-olds, 70-year-olds, 80-year-olds, 90-year-olds, they all look the same that are doing well. They're all thin. They exercise regularly. They hydrate and sleep well. Now, when it comes to supplements, so, you know, again, peptides are exciting. One of the young men had just had knee surgery. He's an athlete. And he's like, Doc, what do you think about certain ones for cartilage growth? Well, they're starting to see good information and good feedback about that. Then there's peptides for rehydration. So, you know, I've been doing a lot of reading, a lot of research. You know, when you wake up in the morning, you want to make sure you hydrate with water. Then there's hydrating peptides. And I think that's a good idea. As a matter of fact, I started doing that, and I can feel the difference. I feel much more hydrated when I'm doing that. Then what's very interesting is there are peptides for energy. So I've actually, you know, listen, I love coffee like the next guy, but I'm on a certain amount of peptides that I actually have decreased my coffee, increased my energy level, and it feels much more natural. There's peptides for just a wakefulness. There's peptides for concentration. There's peptides for muscle growth. So, you know, in the next few weeks, I'm going to put together some presentation on peptides because it is very exciting.
Yeah.
And I want to do an organized, you know, presentation on the various peptides and what they're used for. You know, some of these things aren't FDA approved yet, but I think they will be. I think the FDA is going to look at that because, you know, just with tirzepatide, look at the success and the weight loss on semaglutide. It's just amazing.
I love it. I love it. And we're looking forward to that on a weekly
Oh, yeah.
basis with you and talking about things. And one of the cool things I've said, Doc, is that, yes, I know you, but I want to bring you to other people, right? And having that giving them the ability to talk to you as well, right? And
Yes.
asking questions online. I love that. So I'm looking forward to that too. And
I got a question for you, because I
Yes,
know a lot
sir.
of people are talking about this online. Is obviously diet's very important for a lot of people. What do you think about the people who do the raw eggs? They drink raw eggs like Rocky.
Okay, so as far as raw eggs, eggs in general, right? So eggs got a bad rap for a while because of the yolks and the high cholesterol. Now we're starting to see we're starting to come full circle. Okay, so now we're thinking, hey, eggs in moderation are very good for you, which they do. The yolk has a lot of vitamins, B vitamins, things like that. So I encourage that. The only issue I have with raw eggs is a salmonella, right? So you just got to be careful. Is it worth it? Probably not. Just hard boil an egg. It's a perfect protein. And then now the next part would be have your cholesterol checked with your physician, right? Not just your regular cholesterol, but there's a breakdown. And if you're doing that, which I do, I encourage folks to eat eggs. I think in moderation, it's a very good source of protein and vitamins.
Is there a difference between like bad high cholesterol and good high cholesterol? Because a lot of people say, oh, you need high cholesterol for testosterone or building muscle. Like, is there a difference, or is any high cholesterol bad?
Sure. No, you're looking at an HDL and LDL, and then a breakdown of LDL. You want your HDL, your good cholesterol, to be higher, to be within normal or elevated, right? Even above normal. And one way to do that is to exercise regularly. I have patients that come in time and time again that their HDL is a little bit low. I tell them, look, this is an encouraging sign. I want you to exercise regularly. When they do it in moderate intensity, it increases every time. So, and that's encouraging. So that's protective. Now, the folks with LDL, there's many factors that go into an LDL. There's genetics, there's diet, environmental factors, and that's where you just talk about with your physician. But most people can lower it naturally just by increasing fiber, going on a low cholesterol diet, exercise, weight loss.
Yeah. Okay, then I guess the last question I would have, and a lot of people would want to know, would be like, what's the best supplement someone could take? Like overall, like the number one thing that had the lowest hanging fruit for people's lives. Is it like creatine? Is it like an omega-3 pill? Like what supplement you think would change people's lives over the course of like a week? Number one.
Sure. 100%. Well, it just depends, right? So, like we said, one of the pillars of health would be appropriate sleeping 6 to 8 hours. I have found that magnesium glycinate given to my patients as a supplement really helps with that. Okay, so that would be a supplement if you're having trouble sleeping. For more energy, sometimes what I'll do is give folks B12, either injection or oral. And then, but the nice thing is I can measure the B12 level as I see it increase. And I ask them. So again, with the doctor-patient relationship, hey doc, thanks for the B12. My level's up there, but I'm not feeling any different. So what I would do then is checking, hey, are you anemic? So then if you are anemic and don't feel well, iron supplements would be a great idea. So, as far as supplementation, what I do is I don't think there's a cookie cutter way, and that's a great question though. But what I do is I try to focus, and I try to focus in on how are you feeling? What's the actual problem? And then let's try to do something naturally to fix it. But it's a great question.
Right. And then what do you think like the best lifestyle thing someone could do? Like walking, getting more sun? Because I know like it's sunny now in Salt Lake, it's 82. When it's warm, when I'm outside, I honestly sleep better. I feel better. I have more energy when the sun's up. But when it's cloudy and it's snowing and I'm skiing, I'm just tired all the time.
Sure. So, again, a morning routine, the morning sets the day, right? The morning 100% sets your day. So if you can get sunlight into your eyes as soon as you can after awakening, it resets the circadian rhythm, right? It helps you sleep better. But 100%, a little bit of sunlight's very good. Again, I'm also do dermatology in my practice. So I'm always saying, hey, not too much, but a little is very good. But yeah, I mean, exercise depends, right? So older folks, Again, it's not cookie cutter. So if you have if you have arthritis and things, maybe all you can do is walk. But what I tell them is it's better to do something than to sit in front of the TV doing nothing, because you tend to overeat and gain weight. So walking is good, 30 minutes a day, 30 minutes to an hour. If you can cycle, either a recumbent bike, stationary bike, or just cycle outside, it's a great idea. But also too, stretching. What I find in my patients as they age, and so when I get a guy like you, Andrew, in here, I'll talk to them. Look, every day I have glimpses of our future. And what I want you to do, again, 4 pillars of health, like we talked about, what I want you to do is develop a program now that's going to help you later, right? So I work on that with the patients. And then for you, I would say a combination of cardiovascular exercise, walking, jogging, biking, Stairmaster, with some resistance training, right? And stretching. So I think those are the key factors.
Cool.
And I'm gonna bring up for those of you who don't know why it is that I'm bringing up Dr. Morrison here, and I'll tell you, I only believe in bringing the best, right? That's kind of my thesis here at Quasar Markets. Look at the ratings he has. Here's the Advent Health page for Dr. Morrison here too, and all the things that he does, and we're super excited about having him for the future. Look at all the number of people. Look at the number of people showing up, John, to see you talk, man. It's good. I love it.
I love it, man. It's it was a calling for me to be a physician, and I think, Steve, I think life is not a chance. I think you and I meeting and you having such success was 100% meant to be. I think a lot of you as a person consider you a friend, and I'm just happy to take care of you 100%, brother, 100%. And and I'm excited to do this. I think it's a calling. I want to get the information out. I want to get accurate information out. I want information that people can use. So by all means, as this thing develops, which I know it will, I welcome questions. I welcome, this is wonderful. This is great.
Oh, I appreciate that. Yeah, it's when we started the process, Doc, it wasn't just about having the ability to have that data, but to have someone actually telling us and explaining what the data means. And not just a machine, but actually having educators like yourself being able to explain that to people too as well.
Yeah. Sorry, I can't hear you, bud. Something the sound went out. Let me.
Can you hear me now? All right, ladies and gentlemen, Dr. Morrison is having technical difficulties here, but that's okay. We'll get you right back here next week from you guys. But from all of us here at Quasar Markets, thank you. We thank you so much. Thank you for the big hearts to everybody on the number of people showing up to and supporting us over the last 3 years, and all the things that we're doing here. I am super excited. It's an awesome opportunity here for Quasar Markets. Awesome opportunity for people like Dr. Morrison, platform. All we've seen, Steve Flanagan, this is the old CNBC team, everything else from all of us here at Quasar Markets. Big thank you for all of you out there. Thank you. Give us a like, subscribe, all the things you do, repost. Give us that love back that we can try to give out to you guys. But we will see you right back here at next media day. And for those of you who know, every morning, Quasar Markets Live, and of course throughout the day. From all of us here at Quasar Markets Live, thank you ever